I think we are live. Yes, sir. So, sir, shall we begin?
Yes.
Good morning, all of you. Happy morning, friends, on both our channels, Tharun sir's channel and my channel. Very, very good morning. Hi, Ram. Good morning, and I'm sure even Tharun sir will have a lot of people messaging there. So, welcome to the IBS live marathon session. So, I would heartily welcome Tharun sir and Chinmaya sir, both my very, very good friends. And we are coming to you. This hats off to Tharun sir for this very good idea. He said, let's do a marathon session of all the MTPs. So without wasting time, my dear friends, I know time is precious. So let's get on with it. Quickly before that, Chinmay sir, what is the modus operandi, so to speak? How are we going to do this today? We have 10 case studies. I mean, I am sitting in a bit, with two rank holders here. One is CMA rank holder, All India rank 1, that is Tharun sir. He doesn't tell that, I only have to tell. And we have a multiple ranker, CA Chinmaya sir, at all three levels. So we should understand from the rank holders' point of view how to do this one day before the exam. 1 minute on that, and then we start. Chinmay sir, over to you.
Sure. Yeah. Hello, my dear future chartered accountants. So the modus operandi, as I might say, I can use the terms from the law. The process what we are going to follow will be, we will not be reading the entire case study from beginning to end. That is a time consumption process. I will try to follow one technique where I will tell you how to read the question vertically, not horizontally. That's a slightly different method which some people are doing research and trying to come. I'll try to share that with you. So in 1 or 2 minutes, we will read the entire case study, words and not sentences. And we are in the era of artificial intelligence, so somewhere we are stepping into the shoes there. And the second step, we have shared a PDF with you where we have given for every case law respective subject and also the answer hints, and also at the beginning we have given the summary. So one of us, we will take you through the discussion on the summary aspect of what is asked in this case study. So first point, the gist of it. Second point, expansion of it. And then third, we will take one question by one question that will be taken by respective faculties here. Like RIT will be taken by Tharun sir, and the law will be taken by Punarvas sir, and I'll be taking the FR and AFM related aspects. So that's how the plan is going to be. We have scheduled about maximum 30 minutes per case studies. So that's our plan. It might take more or less, that we have to see as we go further, but that is the overall plan. Yeah, we can go further on this.
Yes, Chinmay sir, over to you on case study 1. Tarun sir, any opening comments? 30 seconds.
No, sir. Let it start. In the middle, we can throw some light.
Throw some light. Okay, Chinmay sir, over to you. First case study 1. Are you ready, guys?
Sure.
All of you. I hope all of you are ready. Over to you, Chinmay sir.
Yeah, sure. So what the process we are going to follow is this. Don't read the cases from left to right. Read horizontally. I mean, don't read vertically from top to bottom. Now I'm going to do this. Try to learn from it. Diwali festival. I'll just try to, okay. Yeah. So he's a chartered accountant, resident of Pune, relative in friends is there, daughter is there, Goel Sweets. Then, sir, you can keep scrolling down, maybe
Yes,
the
yes,
PDF.
yes.
Yeah. Then the GST in Maharashtra, some taxable is there. Then provides management consultancy, guidance on some topics, 1 hour a day, aspirant specific permission. Hope you're understanding. I'm not reading a sentence. I'm reading from vertical, the middle 50%. He's the internal auditor of Kebab, appointed internal auditor. So statutory auditor is to prove direct assistance regarding our significant account permits. He sought direct assistance, and then expected NPV is there, standard deviation is there, so I can connect it as AFM. Then 200 employees are there, leave for basis, then sick leave, about post-employment medical plan, then 20 year or more year of service. Then you have 8 p.m. some in company kept open for business every day, income tax issued, Commissioner 133A, Pune factory. Then you have agreement to sell consignment, the December. Okay. So see, I just read certain words here. I have not read anything of the sentences, but what I can recollect, things such as there has been some GST aspects that I think then at certain times a business was kept open. There might be some inspection, and there are some NPV values given. So certain words are in your mind now. You have just glanced through this. I'll take one extra minute, this being the first question. how did the learning happen? I'm sorry, I'm slightly deviating from the topic, but it is very essential how you tackle questions in examination. If you understand the process of learning, we always learn something what we know already, right? We always try to connect like a chain and we learn. But how did a child learn anything? When a child was born, it does not know anything. The only way in which the child started learning is started hearing words without any meaning. Words were kept on heard by the child, and then you try to connect and make a sense. And when the repetition happened, you try to make sense out of it and make interpretation out of it and meaning out of it. So the first step in learning is hearing words. So that's what we have done now. Just glance through the question paper, the case study facts, reading certain words randomly without any particular meaning. And then if you read the question paper again, then you'll be able to understand the aspects better, which you can do in exam. As of now, we'll go with our next step on taking the summary part of it.
I'll take the summary, Chinmaya sir, but before that, a quick question to both of you, which is very relevant. So tomorrow when they're writing the exam, should they read the questions first and then the case study, or the other way around? Both of you can take
I will
10
answer
seconds.
this, sir.
Yes, sir.
I will answer this.
Yes, sir.
So, like what Chinmay sir said, you can just glance through the question even in exam also. This case study, you can glance through this way once. So not with the objective of understanding what is there, but just to know what are all the words that you can see, highlighted words that you can see, because the power of brain is such that automatically the words, will flash in our mind.
Right.
So because when we see the question paper, so those words which we wanted, it will automatically get registered.
Correct.
So those terminologies which we have already seen repeatedly. And after that, the next thing is that you need to go to the MCQs. So in the MCQs, you read the questions. You read these questions properly in the MCQs just to know as to what type of questions are being tested. For example, in this first question, so calculate the amount payable in respect of supply of gift pack. And then, so there is something related to GST payable. So then with respect to information, whether Mr. Harish, professional misconduct, there is a question on professional misconduct related to private tutorship. And the advantage here is that they gave para 2, para 3 like that. So
Right.
now we know which para we need to read in detail.
Right.
So therefore, in the beginning itself, if you read the entire para, like entire question, you will be wasting a lot of time, because remember, there is only like 4 hours you have and 4 case studies you need to answer out of 5. So means literally you have 1 hour for each case study. If you spend half an hour itself in identifying, like reading the question itself, then in the half an hour you need to search for the information and you need to write. So that's the reason why don't spend too much time on reading the question fully. So but question, I mean this paragraphs. But go to the multiple choice questions and you read these questions, not the options, just the questions, and even the descriptive questions, just the questions. So you will know what are all the areas which have been connected. So based on that, then you can start, understanding this, whatever, the process. So I think if you do this, you will be saving time, because hardly it will take 5 minutes to 10 minutes maximum. So then the remaining time, 40 minutes, you can spend on searching for the answer and writing the answer.
Yeah, sure. I would like to add one point here. Because you have a choice, it's important how to make that choice.
Yes.
I always say in class, many people don't know what they don't know. In the sense, how do you know what question to choose and what not to choose?
Right.
That is where your initial 15 minutes should be going towards. So what you should do is, in first 15 minutes, don't read the facts of the case. Just look at the questions briefly, so that you understand which area they are asking from, maybe from GST or from law or from FR and so on. So for every question, 5 questions you will have, let's say about 5 minutes per each question. So it will take 20 minutes. Each question, or 20, 25 minutes, 20 minutes I could say. For each question, look at the requirement. For among the 5, you know which is your best 4. And you should start from your best to the next best and to the next best and so on. So first 15 minutes, you should do 2 things. Filter which question you do, and second, which question you do first. because priority is what your time management is all about. Because at the end of the day, many people do always complain that you are not having enough time. Nobody is having enough time in the world. Time is always finite. So the
No,
answer to the
this
question
is
is,
something which repeatedly I heard for every exam. So yesterday IDT exam happened and many students said the paper is lengthy. And the DT exam also they said the same. FR exam also they said the same.
Right.
so it
So
is like this, sir. When
yeah,
you die, if you ask any person, he say, I wanted to live for some more time.
correct.
So the time is always finite. The one thing we should do is prioritization. So in life or in examination time, among the limited time you have, what you want to do first, so that you will not have regrets later. Because many people will say, if I know that 5 minutes more, I knew this question better. I spent unnecessary time on other things. The reason is you have not foreseen yourself and you are not prioritized. So in 15 minutes, you should focus only on prioritizing your order and don't try to think about the answers and solutions, how to write. That should be
Right.
the point at the beginning stage.
Perfect. So some of you are asking where this PDF and all is there. Guys, we have already shared it on our respective Telegram channels. Kindly
Telegram
go to
channels, please.
our Telegram channels. Tharun's Brainary channel is there, and my Telegram channel is there. Chinmaya's channel is there. Everywhere we have shared this PDF of the question paper 1, question paper 2, and also the Excel sheet, which is the PDF of the Excel sheet which we have made of the summary of all these things. Sir, if you could please open that, sir. We will just start off with the summary
Yes,
number
sir.
1. So guys, we have shared all these things. Kindly go to our respective whichever Telegram channel you go, it will be there. Okay, please go. That you are asking all that. That's why I'm telling. So guys, this is the summary, sir. If you could please zoom in on the first one, analysis of the first one, sir. So dear friends, if you see, we have done the MTP case study. We have done, and question numbers are there and subjects are there. So this is the handiwork of Chinmaya, sir. Is brilliant with automation. So he has done this for us. Thank you so much, sir. So coming to the summary discussion. Summary we all chipped in to understand. So guys, very simple, very quick. So Chinmaya sir read through the entire question quickly. So I'm going to tell you what all was there. In the first paragraph, I mean basically first paragraph was on time pass paragraph, and then later they spoke about is there any GST on sweets, namkeen, etc. because marriage was happening, and also the marriage invitation cards, because that CA's daughter was marrying a NRI son-in-law. Whenever NRI comes in, you need to understand that some questions on FEMA, etc. will be there. So then second one also, that CA is teaching, private tutorship is doing, every week is teaching. So first of all, is there any professional misconduct? So there is a question on auditing as well. Third one, there was paragraph, is the paragraph on using the work of internal auditor. SA 610, using the work of internal auditor in verifying the auditing estimates and external confirmations. So that we have basically a question is also there on SA 505. So what we have done is summarize the entire paragraph, entire question into main pointers. Then using the help of a valuer, one question about valuer also has come for providing project appraisal, etc. Then one on Ind AS, it is employee leave compensation is there. And then in one of the other paragraphs, suddenly one income tax survey comes under 133A. When the income tax survey comes, then the commissioner change the, order and all those things. And then lastly, there is one paragraph on IGST, that is determination of place of supply and transfer of credit from IGST to CGST and SGST is what it is. So these are all the points which are there. And if you see the questions, sir, if you just check that.
Yes, and guys, this is actually MTP. What we are discussing now is MTP, ICAI MTP, Series 1 and Series 2. So they have given around 10 case studies. So the 10 case studies, so quickly we are going to revise it. So up to afternoon, so that you will know as to how to approach these case studies, because the question paper is going to be like this only. So there is no point in sitting and reading the theory. So it's not at all required now. So now you need to know question and how to arrive at the answer, which concepts are being tested. So that aspect, if you know, that will be, sufficient. So I will start with the first question.
One side from my side also. This PDF, what we shared, the summary of this one, it is purely on MTP of these 10 case studies. So this can be used by people who have taken our classes or people who have not taken our classes. So anybody can make use of this. So I recommend take this PDF printout and take it to examination hall along with other materials, because these 10 case studies are summarized in a crisp 3-4 pages for you. And in the PDF, if you can just quickly go to that PDF, initially what paragraph of the question is there, that also I've given. So you can usually identify if the same question comes as it is, like Harsh Chowda, practice chart accountant. So by reading the 1 or 2 lines, if the same question is repeated, you know that this is the case study, like a VLOOKUP we do in Excel sheet. So that is also there. So make use of it. It is for the students who have taken our classes and also have not taken. So it is applicable in general. If these case studies 1 or 2 comes also, I think that can be a game changer for you at overall basis.
So there is a chance of asking these case studies. I'll tell you why. Because latest RTP, May 24 RTP in IDT exam, 2 questions they have asked for 10 marks. So like that's what even I heard with some other subjects as well. So a lot of ICAI resources only they will be taking and asking. So even not like exactly verbatim, not necessary, but the concept is the same. So due to that reason, and right now we are discussing case study number 1. In that case study number 1, question number 1, this is MTP series 1. So with respect to information given in para 2, calculate the amount of GST payable in respect of supply of a gift pack in the form of a single basket by Goel Sweets. So now we need to refer to para 2. And suppose if they have not given para 2 also, then what we need to do, there is something related to the term, Goel Sweets or some other person. So you just refer to the para where we have Goel Sweets. So related to that para we need to read, because not necessary that in exam, they need to give reference to that paragraph in the MCQ. So then how to identify is what I said. So here there is something related to Goel Sweets. So Goel Sweets, a store located and registered under GST in Maharashtra, has come out with big discount offer at the time of Diwali on various gift items. In order to attract more customers, what they have done, they decided to supply a gift pack containing 5 packets of Namkeen 200 grams, taxable at 12%. So this is like package containing different products at different rates of GST. So 1 packet of roasted almonds at 18% rate, and 1 packet of chocolate at 28%, and 1 bottle of teal fresh juice at 18% in a single basket for a single price. So actually this concept is related to section 8, composite supply and mixed supply. So in this section 8, so first we need to check, is it naturally bundled or not naturally bundled? So all are taxable, but it is not naturally bundled because not necessary that when you buy almonds, they need to give the chocolate free. Therefore, it is not coming under naturally bundled. It is not naturally bundled. So, and there is a single price. So therefore, we need to take the highest rate in the given supplies. So what is the highest rate in the given supplies? 28% is the highest rate. So we need to take 28% and apply it on 600 rupees. But 600 is inclusive of GST. So 600 into 28 divided by 128, because clearly it is given as inclusive. What if this inclusive is not given? We would have taken on exclusive. So 600 into 28 by 128, the answer will come to 131 point something. So option D is the correct answer. So you can see here, so they have given option D as the correct answer, and this is the explanation for that. Now, so how the question paper is going to be like this, and answers, should we write the detailed answers or not? So Punarvas sir, you can throw some light. Should we write the detailed answers for the MCQs, or just the option is sufficient?
Sir, as per the instructions, they have told that it is going to be OMR sheet, because generally same thing happened in paper 6D also. Initially there was no OMR sheet and we had to write the explanation also. But now, I mean, as per the instructions, they have clearly given that OMR sheet will be given. So when OMR sheet is there, explanation need not be written as such for the MCQs. But for the descriptive thing, it has to be written, unless in the question they have mentioned with reasons, explain with reasons. That time, what we have to do is we have to circle the answer in the OMR sheet and then write 2 to 3 lines explanation in the main answer booklet. Since it's the first time, and as you know, institute, that motto of institute is expect the unexpected. Let's be prepared for everything. As per the instructions, it is OMR sheet only, so no need to write any explanation as such. But unless the question clearly mentions explain with reasons, which was what was there in paper 60 when I was handling the elective paper in the old syllabus. where students had to write the explanation also. That's why 2 marks was given, not just the answer, but also the logic. So kindly see the question, what they're asking, and then answer is what I can say, sir.
Yes. And I feel like we are not required to write the explanation.
Correct.
Because there is no point in asking, then they're calling it as MCQ, etc.
Right.
So one student has commented rightly, correct. But then why it is called as MCQ, they can make it descriptive. So I think OMR sheet only MCQ
OMR should be
options we
good
need
enough,
to
sir.
shade.
Yeah.
Yeah. Yes, sir. So
sir.
the second question.
Yeah, second question is based on auditing. If you see the summary sheet, we have mapped that also, which subject it is and all. So if you see the
I think
summary
this-
sheet, it is
The second question is more relevant to what we do, teaching, and
Correct.
we are not in COP, but in what those who teach and those who practice.
correct. So if at all we have COP, how many hours we should teach and all those things. But thankfully none of us have. So anyway,
But the
point number 2.
And the thank God they could not told opposite. Like if you do teaching, you can do 20 hours of practice like that. They have not told.
Thankfully.
They only restriction on teaching.
And obviously the logic is if you are into practice, you have to dedicate full time there. So the teaching part should be very, very less. So let's read the question. Question number 2. With respect to information given in para number 3, we'll go to that 1 second. Whether Mr. Harsh is guilty of professional misconduct in providing private tutorship to Mr. Jaman, along with some other aspirants as described in the case study. So if we could go to para number 3.
Yeah, I think that's the process we can suggest.
Yeah.
When you read the question, before the options, go back and read the relevant facts of the question.
Unless
then
they
you
have
come to the
not given,
options.
Chinmaya sir, because sometimes they'll not give. If you see, we recorded the other case studies, they had not mentioned anything like that. It's the
No,
first time.
not like that, not like that. When you read the question,
No, even otherwise,
you know
even
which
if they are
area of
not
the
giving.
question is relevant
Right.
for this. Yeah.
Right.
Then
Because, sir,
what I'm
what
sorry,
I feel,
just
that's what
complete.
I said in the last question also. Here, Harsh, Jaman, like that is there. So this Harsh and Jaman is in which paragraph, like that you can search.
My point was, don't spend time on reading the options. That is not going to
Yes.
add value. You read the paragraph. That's what I meant.
Yes.
Yeah.
True. Okay, so moving on, para number 3, let's read. Mr. Harsh Chawda also provides management consultancy and internal audit services to his clients. Looking at the expertise in financial management, Mr. Jaman, a student of CA course, is very much impressed with his knowledge. He approached Mr. Harsh to take guidance on some topics of financial management subject related to his course. Mr. Harsh, on request, decided to spare some time and started providing classes to Mr. Jaman along with some other aspirants 3 days in a week for 1 hour a day. However, he had not taken any specific permission for such private tutorship from the council. So the question here is, can you do or can you not do? So if you see the, just generally go to the options. It was either how much you can do, is there any professional misconduct point or not. So this predominantly will come under regulation 190 capital A of our CA regulations. There are 2 types. One is the general permission, that is for private tutorship, part-time tutorship, etc. And then is, if at all you are teaching in some institution, some private coaching institution, then you have to take specific permission. But either way, whether it's general or specific, you cannot exceed 25 hours a week. That is the maximum cap, because the logic is you are obviously working full time in practice. You cannot dedicate time for teaching. So maximum is 25 hours a week. Sometimes we finish that in 3 or 4 days, yes or no, sir? So that we cannot obviously enter into this domain. Anyway, so basically here it's just 3 hours a week is doing, guys. 3 days into 1 hour each. So that's absolutely fine, because 25 hours a week is the question. So option here, let's see. First one, Mr. Harsh is not guilty of profession as there are no restrictions. No, definitely there are restrictions. You cannot say there are no restrictions as such. Then second one is what we have. Mr. Harsh is guilty of professional misconduct as private tutorship cannot be provided by practicing chartered accountants. No. Mr. Harsh is guilty of professional misconduct as he has not obtained specific permission. And lastly, is not guilty as he is teaching within the prescribed hours permitted by the council generally. Yes. So it is option number D, because 10 hours a week anyway you can. He's just doing 25 hours, less than 25 hours a week. It's just 3 hours a week. And it's private tutorship, so general permission, no need
Sir,
of any
is this less than or equals to 25 hours or less than 25 hours?
Sir, it is,
not more than
exceed, sir. So less than equal to 25 hours is good enough.
Okay.
Yeah.
Okay. Then
So that is the question.
And just for adding, so if you
Yes.
want more than 25 hours, then you need to take a institute permission. Is that how it goes?
Which one?
If you want to do more than 25 hours by any chance,
No.
then
Both put together should not
okay.
exceed 25 hours a week. Whether it's general or specific permission, either
Okay,
way.
does not matter.
Specific
Okay.
permission is for private coaching institutions.
Okay.
Whereas general permission is for, what do you say, the
Institutions,
private
okay, okay.
tutorship. If you're doing
Okay.
privately on your own in your house, then it is
Okay,
general
okay.
permission. No need to take any permission. And of course, no need to take permission if you're teaching at ICAI itself, obviously.
Yeah. Okay.
And if it's for part time, etc., if you're doing, I mean, generally no need private tutorship.
Okay,
But if you're doing full time teaching or part time teaching, where under any educational institution, then that's what it is. But ultimately, it
got it.
should not exceed 25 hours because then practice will get affected.
Yeah, absolutely. Yes.
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 then as third question, we are moving on to
Question number 3.
Yeah. Yeah. This is relating to audit, internal audit.
Yeah, so let me just read that.
Yeah.
Let me read the question. With respect to information given in para number 4, engagement partner sought direct assistance from Mr. Harsh, internal auditor. Advice as to whether he is permitted to do so in according with the relevant standards on auditing. So let us go through para number 4 to understand what it is and then come back to the question. Para number 4.
yes.
Yes,
So
sir.
can I read, sir?
Yes, sir.
Mr. Harsh was appointed as internal auditor of Quap Pharma Limited, a company engaged in manufacturing of medicines based at Pune, Maharashtra, as the company was required to appoint internal auditor in accordance with statutory provisions given in the Companies Act 2013. The company is registered under GST in the state of Maharashtra. So now BMK and company was appointed to conduct statutory audit of Quap Pharma Limited. The engagement partner of the firm, Mr. Rajan, asked Mr. Harsh to provide direct assistance to him. So Harsh is an internal auditor.
Yes.
So now a statutory auditor is asking internal auditor to provide direct assistance to him regarding evaluating significant accounting estimates by the management and assessing the risk of material misstatements. He also sought his direct assistance in assembling the information necessary to resolve exceptions in confirmation responses with respect to external confirmation requests. So in
Yes, sir.
this, the question here is, with respect to information given in para, engagement partner should direct assistance from Harsh, internal auditor.
Yeah.
Advise as to whether he is permitted to do so.
Yes, sir.
So, yes.
Sir. So, sir, this is basically, there are two standards here. One is SA 610 and one more is SA 505. SA 610 is using the work of internal auditor. So, if you come back to SA 200, the main objectives of the audit, there we have very clearly mentioned that ultimately the main responsibility rests on the chartered accountant, that is the statutory auditor. So, as per SA 200, it says you may use the work of internal auditor, you may use the work of another auditor, that is your branch auditor, etc. But ultimately, the final decision is yours and you have to do the work. So here, can you take direct assistance or can you just take, some help in gathering information, etc. is what the question is. So as per SA 610, which is very, very clear, that external auditor shall not use internal auditor to provide any direct assistance to perform any procedures. That will include significant judgments or performing, any functions with the risk assessment procedures or evaluation of significant accounting policies. All these things have to be done by main auditor itself. Definitely he can take some help from him, but not direct assistance. Definitely he can look at the internal audit report and assess whether the internal auditor's report can be relied upon, but he cannot actually take direct assistance from him. Again, you cannot even demand the working papers, etc., because working papers is the sole property of each of the auditors. Further, in SA 505, external confirmation. So, like for example, if I have a FD in a bank, so I should take an external confirmation from the bank saying that, yeah, this is exactly what it is. In fact, this was one of the points in the Satyam case where they did not take only. Auditors took photocopy of the forged fixed deposit receipt, not the original. So external confirmation also is very, very important for them to take. So of course, the auditor has to contact the company and ask them to take the external confirmation with the signature, etc. So here, ultimately, the external auditor is required to maintain control over the external confirmation requests, obviously, and he can never ask the internal auditor to do all these things. However, in getting the information and also resolving exceptions, etc., you can just take assistance, not direct assistance, but some assistance you can coordinate with the internal auditor, that's all. So direct assistance is ruled out. So coming to the option, this is the concept actually. Coming to the options, let's see. Let's read the first option. The engagement partner cannot ask Mr. Harsh for direct assistance regarding evaluating significant accounting estimates and assessing the risk of material misstatements. However, Mr. Harsh may assist engagement partner in assembling the information necessary to resolve exceptions in confirmation of responses. So this is the correct answer, because if you see the next one, Mr. Harsh cannot assist engagement partner in assembling information. No, he can definitely assemble information. Then point number C, cannot ask for direct assistance and also in assembling information, it says, so that is also wrong. And D says can ask for direct assistance. No. So definitely you cannot ask for direct assistance, but you may assist in assembling the information. So point number A, that is option number A, would be the correct answer. So SA 610 and SA 505. So if OMR option is given, which generally will be the case, so the 2 marks is for you to analyze this entire thing, that is SA 610, SA 505 in your mind, and then choosing the correct answer. That's why they are giving you 2 marks. Yes.
Yes. And question number 4. And before that, sir, one more thing. Students are asking us to increase the speed.
Okay,
Yeah,
no problem,
sure.
sir.
We will
We'll
do it. Yeah, definitely. We'll do it. Yeah. Good session, we'll do it. Yes.
Yes.
Thank
And
you.
question
Thank you.
number
Thank
4.
you for that feedback. Let's do it fast. Yes.
Yes. Question number 4.
Yes, sir.
Chinmay, sir.
Yes. With respect to information given in para 7, which of the following statements is correct in respect of survey conducted at business place of Co-op Pharma Limited?
Oh, this is
So there is a
this is,
survey.
Yeah.
direct,
This is
direct
income
tax
tax.
question.
Yes.
The income. No problem. No, yeah, I think
Yes.
survey
So
at least.
para
Yeah.
7, I will read para 7. The assessing officer having proper jurisdiction surveyed the principal place of business of Co-op Pharma Limited at 8 p.m. in night for the purpose of collecting the information which may be useful for the purpose of Income Tax Act. So the question is, I think 8 p.m. can be done or not. And the place of business of the company is kept open for every business day between 10 a.m. and 9 p.m. So this is the timings of the business. He impounded and retained in his custody books of accounts and other documents inspected by him after recording his reasons for doing so for 12 days. So he retained for 12 days. Further, he made an inventory of valuable articles in the form of gold biscuits found at such place, weighing 3 kgs each. So he maintained that he made an inventory. The Commission of Income Tax has issued notice to revise the order passed by assessing officer under 143 in case of Co-op Pharma Limited during the pendency of proceedings before Commissioner on the basis of material gathered during the aforesaid survey under 133A. After issue of the first notice, the Commission of Income Tax issued a second notice. So already one notice is given, other notice, the contents of which were different from the contents of first notice. So this is the para. And yes, sir, over to Punarvas, sir.
This is
You need to
actually
answer.
both question number 4 and 5 relates to this only. So let
Yes.
me take up question number 4 and let's quickly read question number 5 also, so that both can be answered together. You see,
Sure.
question number 5, sir, with respect to the information given in para number 7, which of the following statements is correct as to making presumptions in relating to the survey conducted? So in survey there are certain presumptions. So basically, friends, 4 and 5 will do it together. We'll do it little fast. So this is predominantly section 133 capital A of the Income Tax Act. So when can you enter the place? If it's a place of business, then it should be done during the business hours. That is whenever the business is open. In this case, it is from 10 to 9 or something. So you can enter any time between 10 a.m. to 9. It's not 9 a.m. to 6 p.m. anything like that. It is the business hours of that particular company. But if I'm doing, any other place of business, then I can enter only after sunrise or before sunset, which means if I'm going to the director's house, then I should only enter after sunrise or before sunset. Mind you, you should enter after sunrise, before sunset. So at 5:45 p.m. I can go. I can come back the next day, no problem. Only entering is the criteria. So keep that in mind. Even in GST, similar provisions are there. We'll not confuse you with all that now. That is there in our case studies anyway. Leave it. And moving on, 133A3 also of the Income Tax Act clearly says that can you sort of seize everything? Yes, that's called impounding. Yes, you can impound or retain in your custody books of accounts, other documents, etc. You can keep that with you, no problem. However, you can retain it only for 15 days. If you want to do for more than 15 days, that is excluding all the holidays, you have to take the approval of the principal commissioner. That is what the law says, or the chief commissioner or principal director, etc. So in this question, they are asking you, if you go to the question option, how can you, when can you enter is the question. So if you see, since it is the place of business, my dear friends, that is open from 10 a.m. to 9 p.m. He is entered at 8 p.m. Is it correct? Yes. So
Yes.
option A is the answer. The assessing officer action in entering the business at 8 p.m. and impounding books is in order as per 133 A2 and A3. Moving to question number 5. I hope the speed is fine now. Please comment. So with respect to the information given in para number 7, which we have already read both question related to the para, which of the following statements is correct? Which of the following statements is correct? The books of accounts, other documents. Okay. So basically, this again comes to section 292C, that whenever you are finding in possession all these items, there are basic presumptions. So when I enter a place and I find some books of accounts, let's say Chinmaya sir's house is raided, just example, a survey. So when I enter that house, I find some books. Books can belong to me also, books can belong to Tharun sir also, but what is the presumption? Presumption is those books of accounts belong to Chinmaya sir. The bullion or jewelry that I get belong to Chinmaya. That's a presumption. You have to prove it otherwise. He can say, no, it doesn't belong to me, it belongs to my neighbor, whatever he can say, but ultimately presumptions. That is first. Second, the contents of the books, etc., are also true. So he has written paid to PJ 1 lakh. It is true. He is not simply writing it. Then he'll tell, no, I just gave it to, just was writing some journal entry. No, it is presumed to be true. He has actually given me 1 lakh. Then signature, whatever signature he has made is presumed to be his signature only. And basically, if there's any document that they find, any stamp paper, anything that is fine, it is found that is actually executed as it is. That is what the presumptions are under 292C, read with 132. So in this question, they are asking which of the following is correct. Which of the statements
So
is
I think,
correct?
as you said, 1, 3, and 4 are correct, sir. Because second one, they are telling the contents of the books of accounts and other documents are not true. So that is wrong.
Not true.
Yeah.
Yeah.
So option A is the correct answer.
Sir, no, because fourth one says it was not duly stamped. So
Oh,
if you see
okay.
fourth one, for document stamped, executed, etc., it was not duly stamped. No, because if it is stamped, it is assumed it is stamped already.
Okay.
So option
Okay.
C, sir. Option C.
1 and 3 then. 1 and
Option
1
one
and
and
3 is options.
Yeah,
Okay.
because
Okay.
1 and 3 would be the answer. Yes.
Yes. And then question number 6,
Yeah.
and students are telling this speed is perfect.
Perfect. Super,
Sure.
super, super. Okay.
Yeah.
Moving on.
Question number
Chinmaya
6
sir,
is
question number 6.
mine.
Come on.
Yeah, I'll do it. With respect to information paragraph, which project would have recommended by Mr. Harsh? Explain his opinion will change if coefficient of variation is used as measure of risk. The risk in general, we will use based on standard deviation. So basically, wherever standard deviation is less, that project would be selected. So if you look at the questions back, the facts of the question again. Yeah, so standard deviation of Darude plant is 1.8 crores, whereas Borchardt is 2.4 crores. So lesser standard deviation is first one, 1.8. Lesser standard deviation is lesser risk. So I will go with Darude plant. Then they asked, what if you use coefficient of variation? Coefficient of variation is standard deviation divided by mean. They have given one column expected NPV, which is mean, and they have given standard deviation. So standard deviation divided by mean. So if you calculate, you can also look at the solution so that maybe we can show the calculation there. Yeah, so you can see that CV of the Darude plant, you get 0.738. And CV of the Borchardt plant, you get 0.533. So whichever is less, again, you will go with the Borchardt plant. So that is the explanation, you would go for it. Where you go for risk purely, we go with less standard deviation. If I use coefficient of variation, it is less coefficient of variation. The formula is the standard deviation, mean divided by standard deviation into 100. So that would be with respect to para 5 and question number 6, I think.
And there is another part also, sir.
Yeah.
Suppose if Mr. Harsh has been asked to suggest approaches that may be useful appraising the project under inflationary conditions.
So inflationary conditions, in this question, they have not given any numerical. It's purely theoretical answer.
Theoretical.
Inflationary condition means, you know the meaning of inflation, it is increase in prices. So when I say increase in price, our sales will increase, our cost also will increase. So when NPV is calculated, based on the futuristic aspects, based on projections, you have to include the inflation as part of the estimated sales, estimated cost, and thereby estimated NPV. That is one method. The other method is you use the estimation without inflation, and you use the discounting rate adjusted for inflation. They've given one numerical example that if possible, you can give an exam, you need not give. That is an assumption. Those numbers were not part of the facts of the case. So basically, you have to give under two situations. You give the cash flows including inflation, and therefore discounting rate also including inflation. That is one choice. Second choice, cash flows without inflation is called as real cash flows, and discounting rate also should be real cash flows without having any inflation aspect. That would be the summary part you can present.
Yes.
Great.
Now,
Next
question number 7.
Yeah, question number 7 is with respect to this FR again. With respect to information imperative, comment whether entity would require to recognize liability in respect of lease. So as per Ind AS 19, employee benefits, when somebody takes leave, you always will be given certain number of days given which you can take it as leave. And if you don't take it this year, you can carry forward to next year. So this year, if you have not taken leave, which means employee has worked extra, and when the employee worked extra, the employer should recognize the extra liability. And therefore, whenever there is a leave carry forward, there is a need for a recognition of extra liability. But only point of contention here is, once it is carry forward, will it be utilized? Because only if it is utilized, meaning he will take less leave in the next year, but employer will still be paying it. So as per Ind AS 19, if the leaves are carry forward, which are expected to be utilized, only for that, you should recognize the liability in the current year. So if you go back to the para 6 in the question, I'll not read in detail, just give you an approximate idea. So 200 employees are there, unused sick leave carry forward for 1 calendar year. Sick leave is taken first out of current year leave and then out of balance forward leave for basis. The average unused entitlement is 2 days per leave. Unused entitlement, meaning you can carry forward for 2 days. But if you don't have any other information, then we say 2 days leave, you can recognize liability. But read further, 184 employees will not take more than 5 days of paid sick leave. So these 184 employees will not utilize the carry forward leave. If somebody don't utilize, no need to recognize liability. The balance, the remaining 16 employees, 16, very carefully they give SIXTEN, whereas for 184 they give 184. So whenever they give the data of number in words, you write it and keep it ready. That will be relevant for you. 16 employees will take on an average of 6.5 days each. So 6.5 days is what they have leave utilization, out of which 5 days will come from that year leave itself, because 5 days is allowed. So the extra which is carry forward utilized is 1.5 days of leave. So 16 employees multiplied by 1.5, which is 24, also given in the question. You need not calculate. So question also have mentioned 24 days of leave is what you should recognize as a liability. That is the answer for first part of the question. Second part of the question basically talks about the how many, state how the benefit will be attributed to employees for service for last 20 years, 10 years and 20 years, with 10 years may be measured. So basically here in the again para 6 they have given, if I can go back to the para 6, they said that if you work for certain number of years, you get certain benefits of percentage. So as the company post-employment medical plan, which will reimburse 15% of employee benefits if the employee leaves after not less than 20 years of service. Okay, the sentence is continuous. And 40% of those costs if employee leaves after 20 years or more service of service. So basically, if you have worked for less than 20 years of service, you will be reimbursement of 10%. And if it is more than 20 years of service, you will be having 40% of reimbursement. So basically, those number of years should be allocated. So if you can just come down, anything else is there on the question? Just give 1 minute. Yeah, 40%. Okay, that's all part of the question there. Yes.
Then question number 8.
So basically, I'll just conclude that part. So basically, 40% is allowed for 20 years of service. So when I do 40% divided by 20, I get 2%. And for 15 years, you get 1.15%. Sorry, 10 years, you get 15%. 10 years, 15%. 15% divided by 10, you get 1.5. And if you work for less than 10 years, then you don't get anything. So that is the percentage of reimbursement divided by number of employees. So that is what with respect to the second part of the question number 7.
Super.
Question number 8, I think it's a commissioner.
I'll just take question number 8 quickly. With respect to information given in para number 7, which you have already read, examine whether the action of the commissioner in case of co-op pharma is justified as well as second notice. So the gist of the story is, commissioner initially had issued a notice under section 263 after the examination of the record available before him, and then again after this survey happened, after this 133A happened, based on the material collected, he issued one more notice. Now the thing is, some new information came to light during that survey, right? So can he issue a notice under 263 again is the question. So generally, basically commissioner can issue notice based on information available on record. That's a dialogue, a record. The record means what? Basically, so those things which were not in existence also at the time of assessment and when it was made initially, but came into existence later, that also can be taken into consideration by the commissioner generally for invoking the provisions of 263. That is the meaning of record generally. However, at the same time, there is one express provision, explanation 1, section 263, which says that you can only rely on those things if the same forms part of the record, which means when you actually were issuing the notice initially, at that time, whatever facts were there, same facts you should consider. You cannot bring new facts into the picture. In this thing, initially he had given a notice under 263, but later when he got some new information under 133 capital A, those information was totally unrelated and irrelevant to the issues under 263. So basically, can you do that is the question. Does it mean that it is on record or not on record? So because of an express provision in explanation 1, which came because of case law to nullify that judgment, this came. Anyway, so ultimately, is it on record or not? No. So gist of the story is, any new information that you get, which is unrelated to the old information based on which section 263 notice was issued, because of the survey, any new information that you have received, you cannot go back under 263 and issue a notice again. That's the gist of the story with respect to question number 8. That's it. Next, question number 9, sir will take it up.
Yes, question number 9 with respect to information given in para 8. Determine the place of supply. So one question related to bill to ship to transaction is there. Mr. Arvind asked the accountant to use form GST PMT9 for making a transfer from IGST head to respective CGST SGST head. There are two parts in this question. So let's see that paragraph 1. So what has happened here is that para 8, during the month of November, the company entered into agreement to sell a consignment of some medicines to Raj Ratna Medicines of Rampur, Uttar Pradesh. While the goods were being packed in Pune factory of the company, Raj Ratna got an order from Saras Med Private Limited of Udupi, Karnataka for the said goods. Raj Ratna Medicines agreed to supply the said goods to Saras Medicine Private Limited and asked the company to deliver the goods to Saras Med Private Limited at Udupi. So basically, in case of bill to ship to transactions, there are two supplies. So what is bill to ship to transaction here? The first is between this Kawab Pharma Limited and Raj Ratna Medicines. So Kawab Pharma Limited is the supplier and Raj Ratna Medicines is the recipient, and Raj Ratna Medicines is asking the goods to be delivered to Saras Med Private Limited. So which means for Kawab Pharma, Raj Ratna Medicines is the billing address, Saras Med is the shipping address. So usually as per section 10(1)(b) of IGST Act, the place of supply should be taken as the billing address. So in case of Kawab Pharma and Raj Ratna Medicines, billing address is Raj Ratna Medicines. So where is that Raj Ratna Medicines located? So Raj Ratna Medicines is located in Uttar Pradesh. So in the first case, the place of supply will be Uttar Pradesh. Then second case, the second supply is between Raj Ratna Medicines and Saras Medicines. So in that case, the place of supply is determined under section 10(1)(a) of IGST Act, which says the ending point should be taken as a place of supply. So where is Saras, where the goods are delivered? So the goods are delivered at Udupi, Karnataka. So Udupi, Karnataka will be taken as the place of supply for the second case. So in bill to ship to transaction, there will be two supplies, one between the billing at the original supplier and the billing address, another between the billing address and the shipping address. So that is the first part. Second part of the question is that further during the December month, the company had availed ITC of 84,500 for one of the invoices during December month under IGST head, instead of availing 42,250 under CGST head, SGST head. So instead of taking credit under CGST, SGST, they took the IGST credit. So now Arvind has asked the accountant to use PMT9 for making transfer from IGST head to respective CGST, SGST heads. No, it is not possible, because PMT9 is used only for transfer of balances in the electronic cash ledger, but not balance in the electronic credit ledger. So here it is about credit ledger, so it cannot be transferred like that. So that is what the answer we need to write, because the question is that Mr. Aravind asked the accountant to use PMT9 for making a transfer. Transfer cannot be made because PMT9 can be used only for transfer of balances between the heads in the cash ledger, but credit ledger, that cannot be done. So this is the aspects that we need to write. And now some students have asked me, like, should we write the answer, so descriptive answer which is given as per the suggested? So because if you see in the suggested, so for last question, question number 9, it runs into 2 pages. And if you start copy pasting this, you will not get 1 mark also. So this question answers is just for reference purpose only, but you need to write it, the core points, whatever is there, because it is for 4 marks. 4 marks means hardly some 6 points like that. If you write, that will be sufficient. So therefore the core points you write, you don't please copy paste. If you copy paste, there are many instances that marks were not given to the students because they were literally copy pasting. So please mind this, and the core points you need to write. So that will be sufficient for this. So that is about case study number 1.
Super.
And
Yes. Case study 2 we can.
case study 2. So case study 2.
Yeah.
I
Guys,
think
all
we
of
can
you put
see-
thumbs up. Is it okay? The speed at both the channels, thumbs up, thumbs up. Come on, all of you. You please participate with us. Yes, case study 2. Come on, sir. Chinmaya, sir, over
I'll
to
just
you quickly, 1 minute.
I'll just quickly go through it. So
Yes, sir.
YK
So this is
Associates.
perfect speed. Please continue with this pace.
Okay.
And the volume alone, they are asking us to increase.
Volume.
Volume, if possible, if we can increase.
No, we can only speak at a higher volume.
Hello.
That's the
Yeah,
only thing.
we can have to, shout. I
Yeah,
guess.
sure.
At home, we
so,
are accustomed to getting shouted. Now we need to shout anyway. Cool. Chinmaya, sir, over
Yeah,
to you. 1
sure.
minute, quick.
Yeah, so case study 2, para 1, YK Associates is there. Yeah. Then vision of partner, again, YK Associates for auditing, taxation, hospitality, retail. Then framework for providing professional endeavor, engaging initiative. Okay. Website developed is there. I think regarding something website, an exchange of consideration for developing website, Adarsh Tech Limited. Then duly filled income tax returns, income tax department process the returns. Okay. Then has invited online bids for investigation, predefined periods from computer hardware, 25%. Investment advisory services, explain the benefits, some mutual fund they are mentioning, number of shares, market price, one table is there, accrued expenses, then RFI and bank who wanted the audit or blockchain, something is there, comprehensive range of accounts, gift city, something they're mentioning, banking network. Yes. Then para 8, then again GM purchase raw materials, some external designer, then production team. Then they've given various costs, maybe costing or inventory. One of them will various types of costs they have given. Yeah. So then
So, sir,
they
can you
will the
open the
following
summary
costs. I think.
page,
Yeah,
sir?
I think that's all the table. I think the cost
Yes.
only they
Sir,
filled up with one page.
So don't underline, sir, because that when we
Yeah.
scroll now, that is
Oh,
over
it
No,
is
there.
coming
no,
there.
I understand the reason why I do, because otherwise student will not know which word I'm reading, because I'm not reading the sentences, no.
Yeah,
So I just want to tell the which word I'm reading so that
Yeah.
only for them to
Okay.
follow it. Yeah.
Yes, sir.
Cool.
Yes.
So, sir, please open the summary, sir, if you don't mind. Question number 2 summary. Annotation should be stopped, I guess.
1 second, sir.
Yeah. Thank you, sir. So, guys, in this
Case study.
first
Yeah.
summarized version, can a practicing CA firm's website be colorful and use push technology? Basically, should it just have the information, or push technology means they are only asking you to click here, go there, basically marketing, is it allowed or not? Second one, CA firm accepted the tax audit of the website designing company in lieu of paying consideration. So basically it was like more of a barter system that you give me the audit and you design my website. It's like that. Communication to previous auditor was done after the appointment, not before appointment, and before the tax audit report. This is the appointment of tax auditor. Then after an intimation is given under 143, can a regular assessment be picked up? When intimation says everything is okay, can still a regular assessment be picked up is the question. Third one. Fourth one, there's a question on composite supply of development of an online cloud system. And then one question, one paragraph on investment advice, whether should I invest in mutual funds, etc. And then one interesting thing called blockchain audit, right? And also, lastly, there is a costing question, cost of inventory of customized corporate gifts. So then corporate gifts have been given customized, so that is what it is. So quickly, if you see question number 1, 2, 3, 4 are mine, so I will take it. Question number 1 is on auditing, 2 is on auditing, 3 and 4 is on DT, and then IDT, AFM, etc. will come. So predominantly, if you see, my dear friends, 60 to 70% will be in auditing, DT, and law, to be honest with you. Definitely 20%, 20-25% is on IDT, and around 10 to 15% is FR, AFM, is what we have seen all this time. It's not like a standard thing. They can change it also. But this is how generally they are asking. So 50 to 60% for sure I can say in all these three subjects will come. Law also will come. Do not ignore. So moving on to the questions. Sir, can we see the questions, please? Thank you, sir. With reference to the information given in para number 2, whether website design for YK Associates is in compliance with the guidelines issued by the council. So let's go to para number 2 to understand what they are done. So para 2. Okay.
YK and Associates get their website developed as www.ykassociates.com from Adarsh Tech Limited. The color of their website was very bright and attractive to run on a push technology. Names of the partners of the firm and major clients were also displayed on the website without any disclosure obligation from any regulator. So
yes,
for this, what is the answer, sir?
Yes, sir. So basically the council will keep on meeting, ICAI council. So in one of the meetings they decided, and it was actually a guideline now. So whenever you are disclosing the names of the clients, etc., all those things, it is permissible. You cannot do it just like that. It is permissible only and only if it is required by a regulator. So any regulator like, SEBI, etc., if they tell, please tell me all the clients of the listed companies that you have done, only then you can do. Otherwise, no. So whether or not constituted by a statute or not doesn't matter if it is required by a regulator. For example, if it's a RERA audit, if the RERA, Real Estate Regulation Authority says, please tell me what all builders you have audited, then only you should mention. Blindly like that you cannot mention is what the guidelines say. So in the option, sir, if you see, they have
website can have names of partners and major clients along with its fees.
Yes, sir. That is not the answer. Website can be designed on push technology. Yeah. Then no, as there is no restriction on colors using website. Yes, the colors cannot be bright, etc. But ultimately, they are asking it's whether whatever they did, that is, they without the regulators' approval, they have just blindly put all the clients that they have audited. Is it correct or not? Actually, the answer is no, as the names of the major clients were displayed without any disclosure obligation from a regulator. So if the regulator asks you to mention only, you should mention. These guys have gone ahead and mentioned without any regulator's approval. Hence, D would be the correct, most better answer here of the lot. So option D would be the answer.
Okay, sir.
So yes.
Then second.
Yeah, with reference to para number 3. Before signing the tax audit report, CA Yashdeep sent a registered post letter to the previous auditor and obtained the postal acknowledgement. Will CA Yashdeep be held guilty of professional misconduct? So predominantly same thing is given in the para, so no need to read the para. The good thing what I have seen in this MTP is they have copy pasted the paragraph only here again. The gist of the paragraph they have done. So this will come under part 1 of the first schedule, clause number 8, where a chartered accountant in practice cannot accept any position as an auditor previously held by another chartered accountant without first communicating to him in writing. So you have to obtain a NOC. Without obtaining NOC, you cannot accept the assignment. So in this case, he has already accepted, and before the tax audit, thing he has given. So that is not possible. Any PA in practice has to give the letter. So otherwise, you will be guilty of clause number 8, part 1. Similarly, if your new auditor is appointed, old auditor has been removed, whatever the case may be, old auditor has resigned, you have to take the NOC. You have to send them a letter, take the approval, and only then move ahead. So here, option number A, sir, is not guilty. That is wrong. Not option number B is wrong. Option number C is also wrong, because in all the three cases it's not guilty. He is definitely guilty. So Yashdeep will be guilty of professional misconduct since he has accepted the tax audit without first communicating with the previous auditor. So option number C
Option
would be
C
the
is
answer.
the correct
Yes,
answer.
sir. So
Yes.
next, moving on, sir. With reference to the information given in para number 4, the limit of service of regular assessment under income tax law. Basically,
I think we
here,
can read para 4.
yeah,
Adarsh Tech Limited duly filed its income tax return for assessment year 2024-25
yeah,
duly on September 30, 2024.
yes, sir.
Income tax department processed the return and sent an intimation indicating that no immediate issues were found. Despite the intimation, the return was selected for regular assessment.
Yes, sir. So basically, once intimation is given, that's fine. Regular assessment timeline, it cannot be served after the expiry of 3 months from the end of the financial year, in which the return
Okay.
of income is furnished. So basically, if
Okay.
return of income is furnished on 30th September 24, so the financial year ends on 31st March 25. So within 3 months, that is 30th June 2025. Before 30th June 2025, you can definitely send any regular assessment notice. Beyond that, it is not possible. So if you go to the question, very simple. Time limit for service of notice for regular assessment and income tax law is 30th June 2025. So if you can see, the questions are easy. If you know the concept, quickly you can finish it off. It's not that it is any very difficult or all that. Generally, the case study looks very difficult, but the questions will be easy, guys. So please do not worry, is what I want to tell you. Yes. Question number 4, with reference to the information given in para number 4, which sir has already read, which of the following cannot be adjusted in the computation while processing the return? So again, basically 143(1)(a), the intimation, it says if there's any arithmetical error, you can check that. Any incorrect claim if you have made, you can do. Any disallowance of loss which you have claimed, that also you can do. And any 10AA disallowances if you have taken, all that you can do. But here they are asking in this question, which of the following cannot be adjusted? Which of the following cannot be adjusted? So in this, option number A, B, C can definitely be done. D is something which cannot be done as 143(1) intimation adjustment cannot be done. For that, there is a separate procedure. So here, option number D would be the answer. Addition of income appearing in 26 AS has not been included in computing the total income in the return. That cannot be done as part of 143. That can go through the regular assessment procedure. That is what it is. Then, sir, I think fifth one would
Fifth
be...
one is mine, sir. Yes,
sir,
I'll
sir.
read, sir.
Yes, yes.
With reference to information given in para 5, Adarsh Tech Limited approaches you to ascertain the taxability of supply of services of development of online cloud system to JMC under GST law in the given case for quoting the best price. You are required to determine the taxability of the given supply. So let's see that paragraph.
Yeah.
Jaipur Municipal Corporation. So when we say Jaipur Municipal Corporation, this will be coming under government. So because the meaning of government is central government department, state government department, local authority. So Jaipur Municipal Corporation is local authority, it's a government, has invited online bids for development of online cloud system for maintaining some vital statistics, including registration of births and deaths. So this registration of births and deaths is a constitutional activity as per Constitution. Article 243G or 243W of the Constitution. So every government is required to maintain the records of births and deaths. So for that purpose, they needed some software, online cloud system within the predefined period as per the contract. The works involved composite supply of goods and services, wherein the supply of services was the principal supply, the value of goods. So they were supplying some hardware, constituted 25% of the total value. So there is one exemption. Section 11, read with notification number 12 of 2000, notification number 12 of 2017, which says that if pure services are provided to government in relation to function entrusted to them under the Constitution, suppose if I am providing services to government, that is exempted if it is a pure service. What if it is a composite supply of goods and services? The value of goods should not be more than 25% of the total. So means the value of goods So the value of goods in a composite supply should be less than or equals to 25% of total. In this case, it is less than exactly 25% of the total. So therefore, the said activity is exempted. So now, when they are preparing the bid, they are not required to charge any GST. So option A, GST is exempt on the said supply since the value of supply of goods constitutes not more than 25%. So option A is the answer. Option B is wrong because less than 25% is wrong and more than 25% is also wrong and not a supply is also wrong. Actually, it is an exempted supply. So that's the answer. 5A is the answer. Now we move on to question number 6.
Yes, question number 6 is mine side. With reference to information given para 6, calculate NAV and explain 3 advantages as well as drawbacks of mutual funds. So NAV in a mutual fund is assets minus liabilities divided by number of units will give you the NAV. So in this problem, we have number of shares and we have market price. So number of shares into market price, then you get the market value of securities held. If you have any cash balance, you add, I think there is no cash balance. Then you subtract liabilities. They have accrued expenses of 1,50,000, other liabilities of 3 lakh. So you have a number of shares into market price, market value of securities, minus accrued expenses, minus liability, you get the net assets and divided by number of units you have is 12 lakhs. So if you can divide by number of units, you'll be able to get the answer of NAV per unit. That's what they have done. They multiplied the number of shares into value per share. You got that last column, amount column. Then you subtracted the accrued expenses and subtract the other liabilities. You get the net assets divided by number of units. You got NAV. Advantage of mutual funds. Again, theory concepts quickly, if I can tell you a few of them. It is done by a fund manager. So it is professionally managed. It is investing in many securities. So diversification. It is managed by a certain group of people. So convenient administration. Higher returns, I will not say. Lower cost, definitely I would say, because the cost is shared among many people, because if you have to appoint your own fund manager or set of people, that will be costlier. And the cost is shared by a group of people. Therefore, the cost per unit per person will be less. And transparency will be there because it is as per SEBI guidelines they have to follow, and periodical disclosure should be made, monthly disclosure, daily NAV calculations. And liquidity will be there because anytime you want, you'll be able to sell or buy at your convenience. So these are the benefits. Disadvantages, mutual funds are again subject to market risk. You would have heard of that statement.
Please read the offer document carefully.
Yeah, mutual fund does not mean that it's going to give you any different returns, because mutual fund also ultimately invest in the same stock market. So they still carry risk. Only thing, it is professionally managed. So it is better managed, but does not guarantee returns. And the problem also, choice is there because too many mutual funds are there. And because wherever money follows, the fraud also follows. So if the fund manager is not good, if the fund house is not good, there is always a risk of losing the money over there. And again, the problem of choice and the problem of confusion, and sometimes the cost factor also is not in your hands, because the mutual funds can charge whether you make profit or not. They will always incur their expenses. So these are the advantages and disadvantages that you can summarize. When you write in the exam, you will be able to come up with your own points as well. I think that's a brief of question number 6.
And sir, should we write this much in answer? Because
no, one sentence. The question is very specific. 3 drawbacks, 3 advantages. So 3 sentences on advantages, 3 sentences on drawbacks. 6 sentences is done. That's sufficient. The question is very specific here.
Yes.
Okay.
Yes. So because one student has asked me, should we write all these things? So not necessary here, just the 3 headings, and you can simplify that and you can write. So not necessarily you need to write this much. If you write this much, the 4 hours will be over for this itself.
Sir.
No, 4 hours is not sufficient.
Not sufficient.
It takes so much time.
Yes. Next one.
Yes, sir.
With reference to information given in para 7, provide some illustrative steps for performing audit of a blockchain based system.
So this is auditing, sir. So
purely auditing question.
Purely auditing question. So basically, I mean, you can see the answer also.
Yes.
Yeah. So before that, somebody is asking that what is the format of the case study? My dear friend, there is nothing called format actually. As you only told me, in 18 case studies in ICAI, there was a different format, but now they are given para-wise. And in many of the questions, law was more. In this, some questions only in one of the questions are only FCRA they have given. So you can never say what is the format. Anything they can ask you. Of course, they
No,
have given.
I'll answer slightly differently there. Don't go with the format expectation. Your focus is if this case study comes, how to answer.
Right.
Just go with only that simplest approach. Don't
Exactly.
try to extrapolate telling what if that happens. Don't play like RCB plays. Don't have too many permutation combinations at all.
Right.
You have to solve this case study and what should you do for that. So stay focused, stay simple. Don't complicate.
And one more student was asking, can I take mobile and all? Bro, please don't take mobile to the exam. Open book exam is not open mobile exam, open book only. So you cannot carry mobile to the examination hall and check all the answers on Google. Not allowed. Okay. Yes. So question number 7. So basically blockchain system is what? So blockchain uses something called cryptography. For example, if you are ordering on Swiggy or Zomato, how will they know that you have ordered? And when you place the order, they'll tell that, you know, this person has picked up the order, it's coming, and you'll be tracking, right? Everything is based on blockchain system. It's a cryptographic mechanism. So those of you are writing next time in November 24 on my channel, I've released a quick video for 40 minutes as to what is blockchain. You can go there, no problem. But here, like for example, if I am auditing Swiggy, etc., what all I should check? What is the cryptographic mechanism that they are there? So first is obviously I have to obtain a complete understanding of the blockchain system. On what program are they doing?
Yeah,
How is it designed?
just one second. I'll
Yes.
just intervene here.
Yes.
So as a student, if you're writing this solution in exam, let's say you don't know about the blockchain technology.
Yes.
So I will give you one simple hack, one simple solution. So what you do, you know about some technology. For example, you know about tally, how it works. So keep the tally in mind, write the answer. Wherever the word tally comes, you replace with its blockchain. For example, ensure tally has password system. Ensure tally does not have a delete option. Check whether it is properly licensed. Check whether there are partnership enough agreements are there. Do you have license? So you have certain points which you can write for certain technology. Write the same points, replace with blockchain. So don't worry too much that if you don't know blockchain, you can't answer. And that's what people also can do in real life audit also. Yes, sir.
Correct.
Sir, you can.
Perfect.
Correct.
Perfect. So I mean, even
So
if, when we have our
you know one answer, the same thing you need to write for other
yes,
questions
sir,
also.
active voice, passive voice,
Yeah.
some other voice.
Yes,
sir.
yes, yes.
And that's what their solution also looks like. I don't see
Yeah,
any
yeah.
of them talking about blockchain in their
Yes.
answers.
Correct. Correct.
Yes.
So first, obtain a comprehensive understanding.
Of blockchain. Yeah, you copy
Yeah.
paste. I mean, not the same thing, but the main
Yes,
key
yes.
points. And in
Yes.
this, there are two banks, Indian Bank and the Boyang Bank. And obviously, guys, that is a normal thing. Whenever you go, there has to be some legal agreement, contract, partnership that anyway you have to verify to understand what are the responsibilities, terms and conditions, etc. And there are various types of blockchain technologies. Predominantly, everything used, I mean, technically, it's something called as SHA-256. That is what they use to create this blockchain technology. So understand what platform they're using, functionalities, that also obviously you need to see. And ultimately, whether it's working properly or not. So you need to assess the internal controls with respect to all the accounts there, processes, etc. Quickly, we'll go through that. And all the security measures. Can somebody hack into it? How it uses generally 256-bit encryption. Is the encryption really strong enough? Is it not? Can anybody hack into it? All those things you need to check. That is basically called as cryptographic key. So some of these technical words you use, guys. Cryptographic key management. That is an important word. Sir, if you could underline that. I don't want to do it and muddle
Underline,
everything up.
underline,
Thank you, sir.
underline,
Thank you, sir.
underline.
Yes. And yeah, and from one, what do you say? Basically, they use API key to go and check everywhere else. Because, if, for example, if you have used DigiLocker, you will go to Aadhaar and it will automatically link your Aadhaar. Then it will automatically go to your CoWIN and link your, your certificate. All those things is they use these API keys, and this one blockchain interacts with the other blockchain. That is called transmission protocol, technically speaking. That is also there in point number E, last point. Transmission protocol. Yes, sir, last one. The transmission protocol is that how I interact with the other software. That also I need to see. And unauthorized access, cyber threats, obviously you need to see how good all those things are. Then of course I need to do a test transaction. Everywhere we do sampling, so here also I do a test transaction to see whether it adheres to all the regulations and all the reconciliation, how it's happening, etc. And of course ultimately the compliance requirements. There will be initial pilot program, a beta version, and how it has been updated, upgraded along the way, and how robust it is also needs to be checked. And ultimately, always we should have a disaster recovery mechanism. What if something goes wrong? What is my plan B? What is the business continuity plan? Which in fact Nokia did not have at all. They did not have a business continuity plan, or a risk management council met after once in some 6 years or something. Same happened with infrastructure leasing financial services, ILFS. So these some of the things, whatever you have read, you can just remember and write in the examination to test the effectiveness of all these plans, etc. And finally, all the reports, findings, recommendations, all that you need to give. So I understand whether this blockchain is really strong or it is still in the pilot stage and it requires a lot of development. Predominantly, some technical words you throw in, you can see this answer, and some technical words you throw in and write your own stuff. Two lines is good enough, guys. I think the question is for 4 marks, sir. 3 marks or 4 marks, I guess.
So this question is for, I think, 4 marks.
4 marks. So this much, whatever points we told, with two line explanation, more than enough.
But that's also my observation. They will never ask 5 marks or a 10 marks question here, because if they ask, they cannot ask more questions.
Correct.
So you need not worry about, especially I'll tell for my subject, FR and AFM, full-fledged question like prepare consult balance sheet. The top to bottom answer will not be asked. It will be like a specific issue based. Like they were.
And my advice to all the students, carry only the revision book. That is sufficient. Any summary book for all subjects, because if you have too many books, the table will not be sufficient to keep all those books.
Sir, it will be like one buffet meal, sir, South Indian meal, all items.
So what I observed from all these questions is that they are not going deep, but they are going like on a horizontal manner. They are not going deep in a vertical manner. So only the theory, like summary part, if you know, from that you will be able to write. That will be sufficient. So just do that, because time is also precious. Because see, practical questions you know how to answer, but theoretical questions like this, you have to refer and write. When you are referring and writing, so the key points alone you make out, so that will be sufficient. So any revision book you can take and go, but don't forget to carry law as well as SCMPE, some summary book. Okay.
And those of you who have bought our lectures, anyway, we have given our summary book, guys. Please carry that, more than sufficient. And along with some SCMP revision stuff, if you can pick it up, that's good enough. Yes. Last question, sir. I think it is.
It is mine. It is on cost of inventory. So I'll just read the question number 8. With reference to para 8, compute the cost of inventory, substantiate answer with appropriate reason. So this you can see wherever the reasons are required, they're also mentioning it. So you can focus on the questions, you'll get an appropriate hint. So if you can go to that paragraph. So what is the cost of inventory? Broadly, the cost of purchase, recoverable duties and taxes, and normal cost. Abnormal cost, admin selling overheads, interest cost is not part of the cost. Any expenses incurred attributable exclusively for making a product, they are part of the cost. So if I can read the sentence, as well as while reading the sentences, I will also tell you whether it is part of the cost of the inventory or not. So as when you read the question, you'll be able to do. That's what we keep telling. When you read the requirement, then you read the facts, you know where your focus should be. So Ravi, manager of RFN Bank, gave an order on 1st of Jan for 1,000 custom-made corporate gifts to be provided for the prestigious corporate clients along with information. That is about the blockchain. On 3rd of January, he purchased raw material to be consumed in the production process for 6,50,000, including 50,000 refundable purchase and taxes. Refundable duties and taxes, where input credit available essentially, are not part of cost of the inventory. So 50,000 we will exclude. Purchase price was funded by raise of loan of 6,55,000, including 5,000 loan processing fees. Now, loan processing fees, interest cost are called as finance cost, and finance costs are not part of cost of inventory. This point also you can ignore. During Jan 24, designed corporate gifts for cost included cost of external designer labor. These are exclusive cost, attributable cost are part of it. During Feb, production team developed manufacturing technique, made further modification. The following costs were incurred in testing phase. Materials net of 3,000 record from sale of scrap output 21,000. We need net. Net means we will do some testing, produce some output. So cost is some money, and we sell the units and we receive some money. So the money we spent, money we received, it should be on net basis. Net only they have given. What we want, they have given that. So 3,000, don't worry, net 21,000, labor 11,000, depreciation on machinery 5,000. They are part of cost of the asset. During Feb 24, they incurred the following additional cost for the customized corporate gift, consumable stores, labor, everything is part of cost of the cost. They were ready for supply on 1st of March. Okay, they are not relevant. So what is not part of the cost in this problem? Don't worry about the loan processing fees, interest part, loan part, and this 3,000 recovered that is not received. Apart from that, everything else is part of the cost of the inventory. And from 6,50,000, 50,000 we have to subtract as the recoverable duties and taxes, which are not part of cost of the asset. So except the loan raising fee and borrowing cost, everything else is part of the cost. And that is what is cost of inventory. Only one small caution from my side. In this kind of problem, institute plays with your feeling on units. They mention something in million, something in crores. So please be careful only in that sense. In this problem, it does not have, but just be aware of that rupees in thousands and rupees in lakhs. There's a possibility of doing a mistake over there.
Yes.
Yeah, I think
so we completed case study 2 and we are moving on to case study 3.
Before that, online people, thumbs up please. Are you alive or we are only speaking here? All of you on both the channels, come on, thumbs up, thumbs up, thumbs up. Yes. Just to prove that we are coming live only, it's not some recorded stuff.
Correct.
Yes, sir. Moving on, sir.
Yes. So guys, we are also sitting along with you.
Yes.
And we are also studying actually. So
it's a good subject, sir. We really enjoyed doing this. Excellent subject.
Yes,
we got to learn from each other so many things.
Correct.
Yeah.
So yes, sir.
I'll
Chinmaya,
just read the question.
Quick 1 minute.
Yeah, just one request. Can you make this one page, slightly reduce the zoom or something? So what we do, I'll read one page and then you can scroll out to next page. So it will be smooth in transition, right? Okay. I'll just read this first full paragraph, then we'll go further. Yeah, I'll just read this part. And I can underline and I can delete also later if whichever not required. Yeah. Just 1 second. Okay. Just give me 1 minute. Yeah. Okay. The room occupancy, international tourist, sale of work for the purpose of profitable businesses, bankruptcy, business for increased market share, dominance over market. Okay, they have 3 options. Yes, sir. Now we can go to the next slide, the next page. Yes. Option. Okay, I'll read option 1, then we can go like that for the next one. Yeah. Interest in acquiring resort property, the villas combinations that required 50 shareholders, exchange of shares, company shareholders, date of agreement, date of obtaining control. Okay, there's a transfer of shares. Yes. Next option 2. Company Kavya Hotels, resort property, performance during the year 23-24, management as follows, statement of profit and loss, profit of 150 lakhs, payment of 0.35, employee pension scheme, transportation of various vehicles, loss on sale of plant. Yes. Then entire shares which are held by SSC company, expense on foreign travel, independent directors, exchange for cash, legal compulsion, management separately recognized, measured 600 lakhs, 20 non-controlling interest, acquired this and accept their offer. Okay. Option 3. Management incompetency, risk-based audit, RBA again, financial audit, financial statement of identified risk. Yes, next. This is a lengthy one. No problem. 5 statements have impact, auditing entities, risk-based audit, assessing risk, 3 articles, another 2 articles. Orders were validated, procedure to achieve objectives, each coupon is sold, they have subcontracted. Then, yeah. The Wandrasans, GST utilization, performing risk assessment, inherent misstatement, Nupama hotels, then again resorts, go for improvements. Yeah, I think considering about decision working out. Okay, so by reading this, you understood this is a very detailed one. So like this, when you read, you know, while solving in the question in exam, how much time you have to give for each case study reading itself. Yeah, I think now we can go for a summary
Thank
part.
you, Chinmaya sir. So basically, guys, it is nothing, but it's like vacation property is there. It was doing superbly before COVID. After COVID, gone. So basically, there are restructuring strategies. So one is your corporate debt restructuring. One is your debt restructuring, and another one is financial restructuring, where somebody will pump in money or somebody will come and take over. Basically, there is either a joint venture, whether you go for a merger, whether you go for a takeover, all those things are the three options given. Within the conversation style, they have given, that's it. So three options are given. One is business combination, that is option number one. Some, two company coming and taking over, basically merging. Takeover is the option number two, where some other company completely absorbs this company fully. And third is what they want to do is they want to do a special audit done or a risk-based audit done to understand where their lacuna is there within their own company, and then go for a corporate debt restructure. They don't want to sell out, but they want to make some internal reconstruction. That is the third option. So which option is better, best, etc. is the entire order of the day. So we have various questions on auditing, IDT, FR, and DT also. Everything they have covered here. Law doesn't come, though law is the main part here with respect to which section comes. So the 230, 232, 233 merger, will that come, or internal reconstruction question will come? That is, the law is the foundation, but they have asked questions on other areas. That is the gist of the story. So moving on to the question number 1, which is our auditing related stuff. Let us see the question. Yes, sir.
Yes, which of the following is not an indicator of possible potential misstatement with respect to existence assertion, which could be identified while performing audit of Anupama Hotels Limited? I
Yeah.
think this is no way connected to any paragraph. This is a general question.
Sir. So basically, I mean, here if you see, with respect to existence assertion, so what is not an indicator of possible potential misstatement. So they have given in one of the paragraphs that in some cases the documents have been overstated. Some fictitious transactions are also given. It's there in all the paras. If you write quickly, then you will see that some of the cases the transactions have been duplicated, especially the third option. In the third option, you will get all these data points. So ultimately, if you see whether what is the existence of the assets, that assertion, if I have to do, in some of the cases, transactions are not identified, those documents are not prepared. So basically, unfortunately, when they sort of checked their own accounts, they came to know that some of the accounting entries were not complete. And as far as existence of the assets are concerned, of course, some of the fictitious entries are also there. Basically, the entries were just on paper. They had done some window dressing, but the corresponding asset only was not there. And as far as cutoff procedures also, that transactions occur in one period should be recorded in that same period, but in this case, it was recorded in another period. So it was more of a generic question, but taken from all the paras put together. So everything else is okay, only the option 3 seems to be off here. So what is not an indicator of potential misstatement? That is processing of transactions. Here processing is done properly only, but the way it has been entered into the accounting domain, that only is wrong here in the entire larger scheme of things if you analyze. So option C would be a better answer compared to all. It's more of a generic question, and as sir mentioned, we can't go to one para and say, oh, in this para only we can see. You should read the entire case study to get a sense of the question.
Yes.
Yeah.
And second question is related to GST. The head accountant's view with respect to utilization of ITC on the contract outsourced to Vanraj and Sons. Actually, no, they have not given the reference to any paragraph here. So we need to search for Vanraj and Sons. So somewhere here we can identify this. Vanraj and Sons, there is some part related to this. So have a look into this this portion. So what has happened is that during the current year, they have been awarded a contract for catering in a marriage to be held at Dehradun. They have further subcontracted it for supply of snacks to be served in the marriage to Vanraj and Sons. Basically, these people are into the business of catering only, because now here if you see in the first paragraph, so they were into some business related to the villas, Anupama Hotels Limited. So as it is a hotel which is providing food, when they outsource it to some other contractor, outdoor contractor for supply of food, the question is, can they take ITC? The head accountant is of the view that they cannot avail ITC on the subcontract. So here we need to refer to section 17 subsection 5 blocked credits, which says that food and beverages and outdoor catering is blocked credit. However, we have an exception. If the inward supply and outward supply in the same category, means I am into the business of supply of food, and if I receive supply of food, I can take ITC. So basically, Anupama Hotels is in the supply of food, and they receive outdoor catering from Vanraj and Sons, so they can take ITC. The head accountant view is not correct. So that is the answer. The head accountant's view on the contract outsourced to Vanraj Sons is incorrect. So as ITC is available for utilization, option B. Even if you don't know anything also, you can select the correct answer, because in 3 places it is correct. Here only it is incorrect. So option B is the correct answer. So sometimes, when you're dumb also, you will be able to select the correct answers. Okay. This is one such question.
Yeah, this is odd man out.
And there's no
Odd man
negative
out.
marking, right, sir?
Yeah, there is no negative marking as of now. So, but even positive marking is required for us right now.
Yes, sir.
So
if you don't know the
forget
answer,
about
yeah,
negative
correct.
marking. Yes.
Correct.
And third question.
Which 2 account balances are most likely to be affected by wrongdoing found by Komal? I think again on auditing part only, but
Yeah,
anyway,
yeah.
it's okay. We can
So here,
read that
in
paragraph, I think.
Komal, in
Yes.
that paragraph, they have mentioned that,
Yeah,
you know,
one Komal paragraph is there.
Yes, sir.
This one.
you see there, if it is see that, basically, yeah.
Yeah,
Terms-
I'll read it, sir.
Yes,
I'll
sir.
read it for you. During the process of extracting the exception reports in the restaurant, she observes numerous purchase entries without valid purchase orders. So purchase entries are made without purchase orders. In terms of percentage, about 30% of the purchases were made without valid purchase orders, and also few purchase orders were validated after the actual purchase. Also, there was no reconciliation between the goods received and the goods ordered. She proceeds ahead to check the validity of purchases at account balance level and follow some specific audit procedures to achieve her
So
objective.
that's enough, sir. If you see question 3 for this, basically
Yes.
the issue is with the purchases only, and of
Yes.
course the related to that is account payable. So option D would be the answer, because it's definitely
Yes.
not on sales invoice.
Correct.
It's not on
Which are
inventory.
most likely to be affected by the wrongdoings?
Yeah,
purchase and
only.
accounts
Easy.
payable.
But once
Okay.
you see
Correct.
that, you'll see, you figure out it's purchase, directly come. Don't waste more time, guys. Just go, don't read the entire thing. See, okay, it's related to purchase, come and tick the answer. You're not
Correct.
expected to do thesis on this. You just need to write the correct answer. That's enough.
Sure.
Yes.
Yes, sir.
Then what is the value of supply of luxury food coupons as sold by hard coupons under GST law? So there is one paragraph related to coupons. So you can see here, actually all these questions are with respect to Komal. Maybe the person who is drafting this case study
Komal
likes
only.
Komal.
Girlfriend's
So-
name is Komal, sir. That's right.
Who knows? And so here what has happened is that she is told that resort has tie-up with Hard Coupons Limited, which sells coupons to general public that are redeemable against specified luxury food products or selected properties, and the villas being one of them. Each coupon is sold for a value of 900, but is redeemable for supplies worth 1,000. So we have one rule 32 sub rule 6.
Sir,
What
all
does
this
this
we
rule
should write, sir.
32?
Rule number and all should be right, sir.
No. I'm just telling because students knows that.
Okay.
The student could recollect that. That's why I'm writing it.
Okay.
So rule 32 sub rule 6, if you don't know anything, better. Maybe because you have not performed IDT exam itself, then you will not know this, at least know what is the provision. So don't bother about the rule here. So rule 32 sub rule 6 says that, so in case of coupons, vouchers, what should be taken as a value? It's not the price at which the voucher is sold, but it should be taken as the redeemable value of the voucher. So for example, here, the voucher is sold for 900 rupees, but it is redeemable for supplies worth 1,000. So the redeemable value of the voucher should be taken. So accordingly here is 900 or 1,000, which is the correct answer. 1,000 is the answer. The redeemable value should be taken. Easily, logically, you can remember. GST, need more revenue. Definitely, they will not collect GST on 900. They want more money. So that's why higher price. So 1,000 rupees only will be taken. 100 will not be correct answer. Either ARB is also not the correct answer.
Okay.
Then,
Yeah. Question number 5. This is related to FR. I'll read. Suppose the Anupama Limited strike a deal with Naman Limited as per the plan of business combination put forward by the latter. Statement 1, acquirer will be Anupama and not Naman. Statement 2, 1st July will be considered as the acquisition date. So the problem is regarding Ind AS 103 business combination. The person who is the controller is important to say. Accounting acquirer will be different or may be different from legal acquirer. Like in an amalgamation problem, we have seen A Limited, B Limited come together form AB Limited. AB Limited becomes the acquirer. But in Ind AS, that is not the case. So when A, B coming together form AB, whether A Limited has more share or B Limited has more share, who obtains the control, that company becomes the acquirer for accounting purposes. And the second point, when is the date of acquisition? Same thing, whenever the control is transferred, that date becomes the date of acquisition. So if we can go back to that initial days, I think initial second paragraph maybe.
Yes, this thing I think so.
No, before that, these numbers are given. Even before that, option one, yeah,
Yeah,
option
exactly,
one.
option one.
Yeah, option one. So here you can see the business combination will be carried out by Anupama Limited will issue 50 shares to Anupama Limited, the shareholders, and the 100 shares of Naman Limited to the shareholders in exchange of those entities. So who has more shares? So in this case, Anupama will have 50 shares and Naman Limited will have 100 shares. So Naman Limited shareholder has more share. So therefore, they will have the control. So the statement is Naman Limited is the acquirer. Second point, then when is the control obtains? Date of shareholder agreement. The moment agreement is entered, transaction will not happen. Appointed date as per shareholder agreement. Again, appointment is a legal formality. And question now specifically saying date of obtaining control. That is the requirement of Ind AS 103. So 1st of July is the date on which the business combination takes place.
Okay.
Yes, so if we look at the statement wise,
so acquirer will be
Anupama Limited and not Naman is incorrect because
incorrect.
The Naman Limited is the one who is having more shares. So statement one is incorrect. Statement 2, 1st of July, date of obtaining control, the answer is correct. That is acquisition date. So statement 1 is incorrect. Statement 2 is correct. That is option C would be the answer for this question.
Yes.
2C.
Then 6th one.
Yeah, this is 5C, right? Yeah, 5C, correct, 5C.
5C.
Then question number 6, that is also a continuation of this. That is actually option 2. Calculate the gain or loss that only be on the acquisition of Anupama Limited and show the journal entries including the acquisition. Also calculate the value of non-controlling interest on the basis of proportionate interest method. So purely on Ind AS 103, this is also in connection with consolidation, but consolidation don't follow my format for solving a question like this. Use my format only for full-fledged problem where you have pre-acquisition, post-acquisition, lot of adjustments. So this question number 6, I will go directly to the answer because anyway, you can read the paragraph and get the details. The format is simple and straightforward. Goodwill, or they call gain on bargain purchase, means we used to call as capital reserve earlier, is difference between the amount paid, purchase consideration, minus the net assets of subsidiary. Net assets means assets minus liability. Purchase consideration, they have given how much amount is paid. And we also have to take the non-controlling interest into consideration because purchase consideration represents holding company share, non-controlling represents outsider shares. So thereby you get the 100% minus net assets. And the non-controlling interest can be either by way of fair value method or by way of proportionate method. Fair value should be given in the problem and proportionate method, whatever net assets and whatever is the holding company share, you subtract it, remaining becomes the non-controlling interest. So if we can just quickly go back to that question, the option 2, I think. Yeah, so the bottom come down. Yes, this is the paragraph. So the identifiable assets are measured at 600 lakhs, liabilities at 200 lakhs. So net assets becomes 600 minus 200. That is your net assets. And as far as the calculation of goodwill is concerned, it is amount paid. And how much amount paid? It will acquire 80% of equity interest. So non-controlling is 20%. In exchange for cash of 300 lakhs. So the purchase consideration is 300 lakhs. And the assets and liabilities and independent consultant, fair value of 20% is 84 lakh. So the calculation of goodwill goes like this. Amount paid 300. Fair value of non-controlling interest 84, 300 plus 84, that is the one part. Second part, net assets. Net assets is asset 600 minus 200, 400. So 384 minus 400. So you get minus 16. Minus 16 means you can't call it as goodwill. That is called as capital reserve, we used to call. And here it is called as gain on bargain purchase. That is what the calculation will go for. So net assets, asset minus liability, then fair value of net assets plus the fair value of non-controlling interest. That is 300 representing 80% and 84 representing 20%. And journal entry will be on the date of acquisition for asset acquired, asset account, any amount paid to cash, and non-controlling interest to non-controlling interest, and balancing figure may be goodwill or capital reserve. In this case, we call it as gain on bargain purchase. So you have the journal entries, assets account debit is there, to liabilities, to cash, to gain on bargain purchase, which is called as capital reserve, or to non-controlling interest. And they also asked one more question: if you were to calculate non-controlling interest on proportionate basis, then it will be net assets multiplied by the share of non-controlling interest. So asset is 600, liability is 200, net assets 400, of 400, 20% is NCI share, 400 into 20%, you can see the calculation, and that is 80 lakhs. So this is about the calculation of goodwill or gain on bargain purchase, journal entries, as well as proportionate method of NCI calculation. Yeah,
Thank
that's
God we
what they
finished
asked.
clearing, sir.
That question.
Yeah.
Yes, sir.
Yeah, done.
Yes.
Okay.
Yeah, I think that is with respect to that question number
But
6.
predominantly, if you see, questions are easy only. Just that case study looks very scary, but it will be easy questions, guys. So that's what I want to tell you. Do not worry about it. And it's the first exam also. It will be easy only. Don't worry. Yes.
Yeah, so question number 7, auditors required.
Question number
Seven.
7 is about
Yes, sir.
audit. It's very basically they're asking about what type of how will you assess the risk of material misstatement. We've been studying from Inter also.
No, they're mentioning something about 2 levels. So should we talk about that?
Right. There are 2 levels of basically you have to do 2 levels. So what are the 2 levels? One is at the overall financial statement level. So whether there is a risk of material misstatement in such a way that you end up giving a good opinion or unqualified opinion, when in fact you have to give a qualified opinion. Second is with respect to specific assertions. Assertions basically with the existence of fixed asset, is it correct? Is it the valuation? Is it done properly? All those things. At the basic, each and every class of transaction level is called the assertions. So that also you need to see at the balance level, as in if the debtors balance is so and so, at that balance level also I have to first see whether it is there's any risk. So what they're trying to tell is, one is the each item wise you have to assess the risk, and then you have to see the overall level. For that you have SA 300, 315, 330, all those things you have, which anyway your auditing teacher would have done it. So that you need to keep in mind overall. So here they're asking about the audit procedures with respect to what you should do. If you come there, sir, that is of course you should. This is all generic question. Easily you can answer this. Make a selection of the purchases, review correspondence with vendors, etc. Basically, you should do a reconciliation and also take a external confirmation from them with respect to the balances, and check the basically vendor reconciliation, which we used to do during audit. Same thing. If you have done the audits properly, you can easily write these things on your own. And you would have done something called as debtor aging analysis, creditor aging analysis. That aging analysis you have to do. That is point number 2, vendor listing along with the aging analysis. And of course, you need to meet the officer and speak to them as to what would be the process. Initially, you have to make enquiry, but before enquiry, you should understand the process. So ultimately, when you were doing audit also, there's something called interim audit. Just before the main audit goes, you just go there and understand all the internal control procedures and basically the overall procedures of the company that you need to do. And of course, you make a summary and discuss. It's a very, very generic, easy question. You can write it easily, no problem.
Okay.
Yes.
The question
Then the
number
next
8.
question is related to income tax. I'll
Yeah.
read the question, sir. You explain.
Yes, sir. Yes, sir.
With the help of data provided by the head accountant of Kavya Hotels Limited and the following additional information, compute profits and gains of business or profession of Kavya Hotels Limited for the assessment year 24-25, indicating the reason for treatment of each item, assuming that the company is not eligible for reduction under 35 AD. Ignore the provisions relating to minimum alternate tax and the provisions of section 115 BAA.
Yes.
As a corporate debt restructuring arrangement, their bank has converted unpaid interest of 10 lakhs up to 31st March into a new loan account repayable in 5 equal installments The first installment of 2 lakhs was paid in March 2024. Then depreciation as per Income Tax Act is 15 lakhs. And the company received a bill for 3 lakhs on 31st March from a supplier of vegetables for supply made in March 2024. The bill was omitted to be recorded in the books in March 2024. The bill was paid in April and a necessary entry was made in the books then.
Yes, sir.
So it's like a big question.
Yeah, pure computation, sir. Before that, we'll go to option number 1, sir, in the question itself, because one by
I
one.
think
there only
option 1 or option 2, sir?
Option 1, sir. In option 1, they have given full.
No, option 2, sir.
Oh, sorry, option 2.
Yeah, sir.
Yeah, sorry, sir. Option 2, they have given that full detail. One by one, here only we'll discuss, friends. So let's see. Basically, the profit they have given, if you see 150 lakhs, sir. Can you please underline that, sir?
Yes, sir. Yes, sir.
150 lakhs. 150 lakhs is the profit, that is 1.5 crores, guys. So that is a net profit. So now you have to make the additions and subtractions as per. One by one we'll go. First one, payment of 0.35 lakhs in cash on 20th December to a local farmer for purchase of vegetables. So basically, guys, you know, under 40A3, only 10,000 per day is allowed. Anything more than 10,000 is disallowed, that you know. But under Rule 6DD, there is an exception, if you know. For farmers, etc., you can pay. Farmers will include fisheries also. So any to dairy farming, fish farming, anything, you can definitely, that would not be a problem. So this 35,000 that you have paid is not disallowed. It is allowed.
Not disallowed. It is allowed.
On the other hand, in the same question, if you see 30 lakhs paid to a confectionery wholesaler on 26 December, there is no such exemption for a confectionery wholesaler and all. So that's why that 30,000 should be added back. Sir, can you please put a plus mark, sir, on that?
Yes, sir. Yes, sir. I am doing.
Thank you, sir. Thank you, sir. Okay. 35 lakh, you, no problem, guys. 30,000 you have to add back. Next, this thing we will see. Contribution towards employees pension scheme notified by the central government under 80 CCD 3 lakhs, which is computed at 12% is what they say. So basically here under 40A, there is 40 capital A clause 9, they have told that anything in excess of 10% will be disallowed. Anything in excess of 10% will be disallowed. So basically, if you see that extra 2% will be disallowed. So if you do 3 lakh into 2 by 12, 50,000 will come. So that 50,000 will be, should be added back. So that is not allowed as per 40A9. Next, third point we will see. Payment of 5.5 lakhs towards transportation of various materials procured by the resort to Messrs PQR Transport, a partnership firm, without deduction of tax at source. The firm declares profit under presumptive taxation and furnished a declaration, and it has furnished its PAN and all those things. So basically, generally, you have not deducted tax, but basically that person, the other contractor, he declares under presumptive taxation, saying that I am not eligible to pay, I am not liable to pay any tax, and has given a certificate also. So once you have given a certificate like that, there is of course no need to deduct because you have obtained a certificate. So 194C will not come in this regard. So there is no adjustment needed for this particular question because he has already produced a certificate saying that I am going on a presumptive taxation route and I am not liable to pay any tax. So you can ignore that particular thing, nothing as such. Next one, profit of 12 lakhs on sale of plot to Divya Limited, domestic company. Entire shares were held by the SSC company. Basically, they have sold the land to the subsidiary company. Generally, so to speak, generally, if you think about it, profit on sale of plot to land to 100% subsidiary, generally any profit will lead to short-term capital gain because the sale of plot of land in this question was held for less than 24 months. But however, if you are transferring anything to 100% subsidiary company, it is not a transfer itself and it will not be liable to capital gain tax. However, since it's credited to the P&L account, it has to be subtracted. So this 12 lakhs have to be subtracted. This 12 lakhs has to be subtracted from the entire thing. Next, contribution of 50,000 to Indian Institute of Technology with a specific direction for using it in a scientific research program. So this is clearly a 100% deduction available under 35(2)AA. So if you contribute to anything and it was used for that particular purpose, there is no disallowance as such. So since it's already been computed with all these adjustments, there is no adjustment with respect to this particular point. Nothing to worry because it's already covered. Next, expense of 5 lakh on foreign travel of 2 directors for a collaboration agreement with a foreign company for a brewery project to be set up. The negotiation did not succeed and the project was abandoned. So basically, there was, one idea with PVR Cinemas, Priya Village Roadshow PVR. They wanted to have this director's cut, luxury-based cinema across all the places in India. And when they went and did the feasibility study, they spent a lot of money and then they abandoned it. Only in Bangalore it's there. I don't know, maybe Bangalore and Mumbai, but Bangalore for sure it's there. But they did it in Chennai and other places. They said it's not feasible. Now, that money, will it be allowed or not? That money will be allowed because it's the same business. PVR is into movies, director's cut is also movies. But here in this particular case, this business is running hotels. Brewery is a totally different ballgame altogether. Brewery has got nothing to do with hotels. So when expenditure is incurred for a project and it is not in the existing business, but it is related to some unrelated new business that I am starting, all the expenses, etc., if the project is abandoned, will be disallowed. So this was a Gujarat High Court decision in 1994. I think it's Ravindra Laboratories, if I'm not wrong. So this entire 5 lakh rupees has to be disallowed and hence it should be added back. So 5 lakh will be added back to the entire thing because it's not related to the existing business. If it were related to the existing business, then it is allowed, like PVR that I told you. So please keep in mind what business they are doing. Here it is brewery business. Their business is hotel. So that is done. Fees of 1 lakh paid to independent director for attending board meeting without deduction of tax. So here independent director is an Indian. So obviously under 194J you need to pay, and if you do not pay, then you 30% will be disallowed. So you have not deducted the TDS, so 30% will be disallowed. So 30% of 1 lakh is 30,000. So 30,000 has to be added back. 30,000 has to be added back. And you already subtracted this, 12 lakhs. It's fine. Next. Depreciation charge is 10 lakhs. Sir, can you come to the question now, please, sir?
But as per Income Tax Act, it is
yes, sir. It is, I think, 5
15 lakhs.
15 lakhs. So 15 lakhs and this thing.
So
10
extra
lakhs.
5 lakhs we need to deduct.
Yes, sir.
Subtract,
So 10
correct.
lakh add, 15 lakh subtract. Overall, you can subtract 5 lakh and close it. And in the adjustment, they have also given that, they have converted the unpaid interest into loan. So if I convert the unpaid interest into loan, basically interest on loan will be allowed as a reduction only if it is paid before the due date as per section 43 capital B, as you know. But if I convert interest into loan, would that be deemed to be payment? So many case laws, etc. happened. Then they finally made it into the provision also that just because you convert that into loan, that will not be deemed to be payment. It will actually be allowed the day you pay the loan, where it is converted to a loan. No, that portion when you pay back, only then it will be allowed as a deduction. So this 2 lakh rupees has been paid in the year 23-24 as they have mentioned in this particular question. It is paid. So it was paid and necessary entries, etc. This was paid in March 24. Obtained in the Luno. So they have already paid it. So since they have paid it in March, that is 23-24, that will be allowed as a deduction, and hence you have to subtract that 2 lakh. That 2 lakh has to be subtracted from the entire thing. And yes, sir, 2 lakh minus 2 lakhs. And lastly, the purchases were omitted. So purchases were made in March 2024 with respect to a bill which was received on 31st March 2024. It has been omitted to be recorded. Hence, it has to be deducted to, arrive at the correct business income. This is also a very famous Supreme Court judgment, Kedarnath Jute Manufacturing Company, which we had discussed in class. So yes, it's pertaining to whichever year, but now you have to subtract it from this year, and assuming that you have followed mercantile system, you have to subtract. So that finally that also has to be subtracted 3 lakh. So final your PGBP income under that PGBP will come to 1 crore 34 lakh 10,000, sir. 1 crore 34 lakh 10,000.
Yes.
Yes, is also in case study 23, as you said. They have copy pasted this case study 23, which is actually taken from one of the previous year's question papers they have taken. That is from paper 6. This also multidisciplinary case study also was there that time, 6F. From there they have taken, sir. So that question they have given here, sir, actually. The old one,
Okay.
paper 6F.
Fine. So this is actually then that old syllabus.
Old syllabus,
Paper
yes.
6.
Yes,
Yeah.
yes, yes, yes.
Yes. And we can
yeah.
move on to case study 4.
4. Yes.
So
So
I
3
will
we have
read
finished,
case.
sir, already. Super.
Yeah.
Yes,
3
sir,
we
3 we
finished.
finished. 4 and 5 is left in this series 1. So case study 4 I will read, and
Sir, 4 you guys can go chill and come. Everything is my only in case study 4.
yes.
Yeah.
So 4 case
Yeah.
study, what I did, I just made it summary properly.
No, 5
So
is
you
mine,
can
sorry.
see this. So this is the summary of that case study 4.
Okay, okay.
Simraj is a venture of Raj and Simran, husband and wife, based at Germany. So they were in Germany and they created this venture Simraj. Raj has set up his venture Raj Pharma AG in Germany, and Simraj Private Limited, Indian company, holds 63% of such company. And so that is this Raj Pharma AG and Simraj Private Limited are like related companies. Simran is running her construction business in Germany. So basically, she is also from Germany. The functional currency is euros. Its Indian entity is Simco, where 78% of the finances are raised by Germany entity in US dollars. So she has a Germany entity now. From the Germany entity, 78% of the finances were raised in dollars, and its bank account are maintained in dollars as well as in rupees. It incurs 80% of the cost in Indian rupees and 20% in US dollars. And import of machinery, they are making like one person is importing machinery, Mr. Juneja, to supply to the Simco. This person is importing the machinery and transferred foreign currency towards transponders charges and call bank services. And next point is that 8 board meetings of Raj Pharma AG, 3 in India and 5 in Germany. And compliance with respect to various transactions in India and Germany, they have given a big list of transactions. There are some compliance issues. Then recording import of machinery as foreign currency asset as non-monetary item. So what is the treatment of that? Then taxation of income of Raj and Simran as per income tax when there is no DTAA. So when there is no DTAA with Germany, so what is the treatment? And then there is a concept of perpetual debt in euros and appointing one chartered accountant as CFO in Germany. What are the implications? So this is the overview of this particular case study. I read it and I simplified it. So to a greater extent, I
Super,
spent
sir.
time on this.
Good, sir. Actually, very nice. Very good summary.
Yes. So let's read the first question. So as this question don't have anything related to indirect tax, so I will take the opportunity in reading the question.
Yes, sir.
So referring to the provisions of FEMA, state the kind of approval required for the transactions to be carried out by Amit Juneja for payment to Ross and Chandler respectively. So actually this Juneja is importing one machinery. In this paragraph it is there. They have imported one machinery. Yes.
Transponder.
While carrying out the construction projects.
Transponder,
Yes,
sir. Transponder. Yes.
Yeah, transponder. So, sir, transponder charges $15,000.
Yes, and that callback services they are asking.
Callback services $20,000.
First of all, the paper setter is a fan of Friends, I guess, because Ross and Chandler are the characters of that iconic series Friends. So I'm sure he's a fan. Whoever has set the paper.
So, what is this transponder charges, sir?
Sir, basically, when they hire the satellite, generally, when machinery and etc., satellite is also used. So that satellite, if I hire a foreign satellite, etc., that is, and even heavy duty machinery, etc. So that one component is called as a transponder. So especially when this, especially in satellites, or basically Indian satellites are also there, but in case I need to hire a foreign satellite, and its component is also there in machinery for tracking purposes, that is called a transponder. So that foreign, if I am hiring, that I need to take the permission of the central government, generally hiring of transponders, because when my thing is only there, my Indian satellites and Indian machinery, Indian tracking devices are there, why should I go to some other country and do it? So unnecessarily foreign exchange is being spent. So that's why I need to take the approval of the central government. And callback services is a specifically prohibited transaction under FEMA. So you cannot go for any callback service. It's an unnecessary waste, whereby generally when we go abroad, when the Indian companies like Airtel, Jio will have a tie-up with some foreign network. So that is okay. But the thing is, some unnecessarily paying foreign exchange from the country outside is prohibited fully, unless permission is taken separately for other things. So here it is a current account transactions are the first one, higher charges of transponders. So that Ross needs to take the central government approval. Whereas Chandler, that is withdrawal of foreign exchange unnecessarily for callback services, where basically he will call back for anybody who has called abroad and unnecessarily you have to pay the foreign service provider. That is prohibited totally under the FEMA regulation. So you
So
cannot.
option D is the answer.
Option D, sir. Yes, sir. Option D would be the answer for that, sir.
Okay.
Yeah.
Yes.
Second
And sir, for FEMA, is there any quick revision video of yours?
Yes,
Because
sir.
some
It
students
is
are
there
asking.
recently only for Inter. I have released 2 to 3 hours of a quick revision that
Yes.
has all these things covered. Actually, you can just go through
Yes.
that. It will be easier.
Guys, if you, because there are like questions on DT, IDT, IF, like Ind AS and FM, you will be able to manage because you have learned. So this FEMA related questions, sometimes it may come. So I request you to please go to Punarvas sir's YouTube channel, and he has recorded and uploaded FEMA some revision video. Please go through that just to know what is a current account transaction,
Yeah.
and when we need to take central government approval and what are prohibited transactions, etc. You will get more clarity over there. Yes, sir.
Yes, sir.
So second question,
Yes, sir.
what would be the residential status under the FEMA, a pharma unit of Medico Incorporation in New Delhi and that of Dubai branch? So they're asking about residential status of the pharma unit.
Yes, sir. So if you go to this previous page, sir, just below that, just below that, sir. Just below that.
Yes.
There only. No, below the table. Raj Pharma EG Indian. It has the fourth line, you see. It has a unit for manufacturing machineries.
Pharma
Can you underline that?
machineries
Yes, sir.
with its
headquarters in New Delhi. Branch
Ah.
in Dubai, which is controlled by the headquarters in New Delhi. So basically, as per FEMA regulations, again, section, if you check that, what is the, residential status as such. So whether you are a branch outside India doesn't matter, but if you are controlled by headquarters in India, you may have been, incorporated somewhere else, but ultimate control, where is it coming from? If it's coming from headquarters in, that is New Delhi, you are a resident. Similarly, a branch or agency in India, but it is controlled by a person resident outside India. In that also, Dubai branch is not, in this question, not owned, though it is not owned, but it is controlled by the headquarters in New Delhi. Hence, it is a resident. Dubai is also a resident, and the first one anyway, headquarters is in New Delhi. So both will be residents. Medico company is a UK-based company, but the headquarters is in New Delhi. Hence, it is resident. Dubai branch, though it is not owned in India, but it is controlled from India. That is also resident. So both the persons are residents, sir, as per FEMA.
Okay, both the persons are residents
in India.
In India.
Yes,
okay.
sir. So option number C, sir.
Yes.
So the keywords are the two things that we saw.
Yes. And this question is related to Chinmay, sir.
Yes, I'll read the question. Determine the value of impairment loss in foreign currency in respect to Medifix and whether it should be recognized in the books of Simraj Private Limited. So if you can go back to the same paragraph, which we're just doing on the resident part, so that only has it. So if you look at the euro, it is 1 lakh euro and value of that asset has become 90,000. So it appears that value of the asset has come down. But ultimately, we should look at the functional currency, which is reporting currency, rupees. So if you do 1 lakh into 52, you get 52 lakhs. 1 lakh euro into 52, rupees 52 lakhs. And similarly, 90,000 into 60, we get 54 lakhs. So in rupee terms, it is 52 lakhs on the date of purchase, 54 lakhs on the reporting date. So the value has not come down. So no impairment loss is recognized. So I think that would come as option D, I think. So no impairment loss is recognized. That would be the answer there.
Yes.
Euro of 10,000 should not be recognized impairment loss because ultimately we are recognizing.
So it is because of the foreign exchange fluctuation only.
Yeah, foreign fluctuations, but the reporting wise, the value of the asset should be looked at in rupee terms. In rupee terms, if the asset has gone down, then there is impairment loss. Otherwise, no impairment.
So fourth one.
Fourth one also is a similar one.
Yeah.
So in entities P's consolidated financial statements, can perpetual debt be considered? So if I had to quickly give you meaning of perpetual debt, it's a loan given and other person point of view loan obtained. Perpetual means the repayment date is not given. Don't think that perpetual debt means no repayment. Repayment could be there, but the date of repayment is not known. Unlike a bank loan repayable in 5 years, debenture redeemable after 10 years, the term is not given, that becomes a perpetual debt. So in those cases, they're asking, they're telling that the settlement is neither planned nor likely to occur in the foreseeable future. So therefore, how it should be treated. So primarily, if you observe, consolidation means mixing holding and subsidiary. From the holding company point of view, it is a loan given. From subsidiary company point of view, it is loan taken. So when I consolidate both will be set off each other, and that will not be consolidation. But when it is with respect to perpetual debt, we don't report it as loan given. We will treat it as if it is like a investment by holding company in subsidiary. When we say investment by holding in subsidiary, we use the term equity. So as per Ind AS 21, in line with Ind AS 110, during consolidation, perpetual debt is also part of the net investment in operation. Monetary item means convertible into a fixed amount. And because of the exchange gain, why the exchange gain or loss can happen? Because from holding company point of view, that will be in one currency. From subsidiary company point of view, that will be in another currency. So the difference will be not taken to P&L account. Normally, exchange difference is taken to P&L. The reason being perpetual debt in substance is in the nature of investment in equity. Therefore, the difference with respect to foreign exchange currency also should not be taken in the P&L. It should be recognized in equity. So the answer to this question, perpetual debt is part of consolidation, and the difference should be recognized in equity during consolidation. So answer would be option 4C. Perpetual debt is monetary item, and it is exchange difference also to be considered during consolidation. In equity means during the process of the reserves and surplus equity, and not as part of P&L account. Just a point, word of caution. This is only perpetual debt, meaning loan is considered. A trade receivables, trade payable is not part of the consolidation process here. That is not part of investment in net investment operations. That is not in the nature of equity. So perpetual debt is also to be part of consolidation. Exchange difference is considered. So answer is D, but do not include trade receivables. If they ask in any other question, mind this point. Yes.
Should we write the Ind AS numbers and all that, because SA numbers have to be written?
Yeah, Ind AS number will definitely to be written, because and it is not a difficult thing for students, because you only have few limited ones. I think you should write Ind AS number should be written whenever you are referencing.
Because like rule number, section number and all, it's okay, but at least the Ind AS and SA numbers, I think we should write.
Correct. Ind AS number, this is like accounting standard number, and hardly 30-35 are there. So it is definitely required to be
quoted. So students, please keep that in mind. Kindly write the Ind AS numbers, correct Ind AS numbers. Wrong and all, don't write. It definitely will lose marks. Yes. So the fifth question, sir.
Fifth question, by what date maximum should CA Parminder leave India, and how should she receive her salary to minimize her tax liabilities in India if her total income during previous year 23-24 was 14 lakhs.
Okay.
So here this is related to one paragraph here.
Sir, last paragraph.
So last paragraph, being highly impressed with Parminder's work and quality of her performance, they both decided to offer a role as CFO in the German company and wanted her to get migrated to Germany, to which Parminder agreed. And as per the offer letter, Parminder should join the company at any time between 1st September to 31st October.
Correct. So basically, sir, if you are a resident, thing is the global income will be taxable. So if whatever salary she is getting in Germany also will be taxable. So to avoid that, she basically should not be a resident.
So which means 182 days 180, less.
Correct, sir. Perfect. So in that 23-24, if you are going outside India, you will be treated as a resident only, but provided if the period of stay is 182 days or more. So in order to ensure that it is less than 182 days, sometime in September if you leave, then you will be called as a non-resident. Specifically to mention 28th September if you leave, it will be less than 182 days. So definitely
option A.
Yes, sir. You will definitely be non-resident.
But in option D also there is 28th September, sir.
So 28th September 23. Okay. They have given twice. Huh?
And there is one more thing, sir. Salary where to be credited. Actually, that point is also there.
Yeah.
She has maintained a joint account with her father in UCO Bank, Jalandhar in India. And there are 2 points. In first option, and get her salary credited to the bank account in Germany only, to be remitted later on her joint account in India, or directly the salary should be credited to her joint account in India.
Yes, sir. So because the thing is, once it comes to the joint account in India, then again it will be, then again it may happen where it is deemed to occur or arise in India. So better she should receive everything in Germany. Later, using the FCRA provision, she can remit to a relative, which is her father. That is a
So
better
option A then is the correct answer.
So there are, because 28th September is there in both, so it is better if she, what do you say, takes the credit, gets the amount credited into her German account only and then remitted. So basically 28th September. So 1 and 4 are correct, but in that, which one is better? Joint account is not good tax planning. Option A is the better answer. So option A would be the answer, sir.
And so Chinmay sir, student is asking, like for the previous question, they have given option C as the answer, but we said option D as the correct answer.
No, yes, it is yes. Sorry, I think I did not identify your answer correctly. The answer is yes only. It is
Option
used
is
for consolidation. And,
yes,
and
they have to
perpetual
give
debt
the
can be
perpetual
considered,
debt as monetary item, and
And
related
exchange
exchange
loss
gain should be
in the
recorded in equity at the consolidated level.
Correct.
Okay.
So it is part of consolidation. The trade receivable is not part of consolidation.
Okay,
This
okay,
loan
okay.
is part of consolidation. Yes, it is.
Yes. And then question number 6. Mr. Amit Juneja wants to know from CA Parminder the various modes of payment he can use to make payment to Malta Missionaries for importing that mission. Also, he requests her to guide on the time limit for making settlement of such payment as laid under the domestic law. Sir, where to refer this? FEMA?
Sir, this is FEMA, sir. Master direction they have given. If you check the answer, I'll just make them underline the important things. Some full story,
Yes,
entire direction only they have copy pasted, not needed. So first is the mode of payment, guys. Whenever you're importing certain things, so basically you can use an international card. So sir, you can please underline international card, sir. International card. That's about it. And of course, you can charge the other your servicing bank, etc. That will happen. You can pay through this mechanism is what they're trying to tell. And if you go down to the next one, any person resident in India may also make payment as under. First is for the boarding lodging services. To meet the boarding lodging services, whoever is on a visit to India, for him on his behalf, you can pay that, or you can pay via a cross check or draft for as consideration for purchase of gold and silver. So if you are purchasing gold and silver, you're importing it, then you can pay by a cross check also. Third important thing is anybody, a director who is resident outside India but who has come to India for work. That is for payment of sitting fee and for remuneration, etc. Again, you can make the payment, but everything should be part of the company's MOA and AOA. That is the gist of the story, third point. So basically, every remuneration, whatever you give to the director, should be authorized by the MOA, AOA, and of course by resolutions. For that, you need to see 197 if he is in the managing director category. Either way, this is because now you are importing services. As per RBI, you are importing services, right? That's why when you are paying that, you can make the payment. But here the interesting part is the time limits for settlement. It is for normal imports and all those things. So ideally, just the gist of the story, normal imports, you have to make it within 6 months from the date of shipment. So the next page, first line you can underline, sir, please. 6 months from the date of shipment. Very simple. 6 months from the date of shipment. On the other hand, the authorized dealer can go beyond 6 months. Up to 3 years, he can give an extension. Up to 3 years, he can say if there's any valid reason. So very simple. Normal rule 6 months. You can go beyond 6 months if the authorized dealer, AD is authorized dealer, he can give you the permission. It can go up to 3 years. This is for the normal imports. On the other hand, if there is a credit system, that is the time deferred payment, if the credit system, you can make 2 things. One is capital goods, one more is non-capital goods. So for capital goods, it is up to 3 years. And for non-capital goods, that payment has to be made up to 1 year. So for capital goods on a credit system, up to 3 years, you can make the payment. For non-capital goods, it's up to 1 year. Very, very simple. Just the gist of the story. Then can I grant extension of time? Yes, of course, we have already seen. 6 months can go up to 3 years with the permission. Same thing they have repeated with the AD category 1 banks can do it. That's about it, sir. Then moving to the next page. This is with respect to if there is any investigation by the enforcement directorate, etc., then of course you will not get any extension, obviously. Only when it is everything is set, you can do so. On the other hand, if the extension, if I have to grant it beyond 1 year, I told you beyond 6 months up to 3 years you can go. But if I want to grant you extension beyond 1 year, I need to see the amount that is your import amount outstanding should be actually less than how much? 1 million US dollars. Should be less than 1 million US dollars, or should be less than 10% of the 2 years average import. I repeat, extension you can go beyond 6 months up to 3 years. But if you want to give an extension of beyond 1 year, your import value must be less than 1 million US dollars, or it must be less than 10% of the average 2 years import of that particular company, whichever is less. The lesser of the two. It should be either less than 1 million US dollars or less than 10% of average 2 years import. Whichever is less, you need to take into consideration. This much if you write, it is enough, sir. Other things, all stories they have given, this much is more than sufficient.
Yes.
Yeah.
And seventh question, can
Yeah, it
INR
is.
be presumed as the functional currency for SIMCO?
Yeah, this is as per Ind AS 21,
Yes, sir.
foreign exchange transactions reporting basically. So earlier as per AS 11, we have only two currencies. One is reporting currency, foreign currency. But as per Ind AS 21, we also have one term called as functional currency. Basically, we follow the principle of substance over form. A company may be reporting in the balance sheet in rupee terms because the company is in India, but you have to look at what is the primary economic environment in which the company operates. That's what the question also said. I mean, the data available here are the primary indicators and secondary indicators. You can go through it. I'll give you the gist of it. The primary economic environment means where the sales of a company will be included, where their purchases and costs are included, where their investment comes from, where their loan is included. You can, and their cash flows are part of it. You can remember like P&L balance sheet. P&L will have income and expenses, balance sheet assets and liabilities, and cash flows. So where these transactions are part of, that currency becomes functional currency. So if you go back to that paragraph in the question, it is yeah, you just little above.
Yes, sir.
Okay, no, just little before that. I mean, above, scroll above, the previous paragraph, scroll above. No, yeah, okay. Yeah, you can, yeah, this is the one. So you can see here like 80% of the cost INR, 20% in USD. You can scroll above there a little bit further. Yeah, you can see the functional currency of Simran Construction, Euro is 28, 78% finance have been raised in USD, and 63% is held by Simran Private Limited. So the majority of the transaction impact wise, the indicator, sales, purchases, borrowings, investments, the controller is from the foreign place. So when you consider all these points put together, it can be judgment. Again, it's not a rule. We only have to come up with our own judgment. It can be inferred that the primary economic environment of transaction in USD terms and not in rupee terms. So answer to that question, the functional currency is not INR, and you can say that the functional currency is USD, considering the majority of the transaction is influenced by the USD transactions.
Yes.
And they have given more details in the answer. You can substantiate that.
Yes. And sir, 1 second, sir. Guys, those who are watching in live, so please don't ask us to speak, like go fast, go fast, go fast. We are also human beings here. We are not robots. So there is a processing time that it will take. We need to see things and we need to tell. We have not by-hearted all these things to speak, in a flow. Please try to understand. If you do not want to watch this live, you just take a break and thereafter you watch in the recorded with some 1.5 speed or 2 speed, or even 5 speed also. If you are able to watch, please watch. But please try to understand our concern also. So
we should speak like this. Mutual fund investments are subject to market risk. Please see the offer document carefully.
please, yeah, have some no heart for us. No, have some witness in heart for us, because we are also have throat issues, all those things.
No, it is not only that, Tharun. So it's also the larger things. Like certain people
Yeah.
want a certain speed, and some people want a different speed. We
Correct.
can only represent an average.
Yeah.
We can't be in a maximum and minimum. I'm sure some people would say, go slow also. Some people will have those thoughts as well. We have to take care of the larger piece, and we are trying to make
Because
sure that
I can see one student repeatedly telling, go fast, go fast, go fast. It is like someone sitting on the backside of my bike and poking me like, go fast, go fast, go fast. That's how I feel like. How much fast I need to speak, or we need to speak. So please try to understand our situation also.
Sir,
so
we
are
should
doing
congratulate ourselves. One more thing, some people are abusing and all on the group, saying that who are you people? You are simply sitting and talking, which means you are doing good work. So awesome, sir. Congratulations to all the three of us. Some fellow in Hindi and all is writing. I want to reply in Hindi, but don't want. I'll hide these two comments. No problem. Just saying. Good.
Yeah.
It means that other people are, obviously jealousy will come. Anyway, yes, thank you so much. People are understanding also, sir. They are telling that we are maintaining, please maintain the level of speed. We are understanding. I think we are going fast enough. Beyond this, we also can't process, sir. Our internal RAM will not work. Anyway, moving on.
Then 8th question, determine the residential status of Raj Pharma AG for assessment year 24-25 as per the income tax law.
Yes,
so, yes, sir. Punarvas, sir,
you can come to the answer. That basically, this is about the POEM rules, that is place of effective management rules. So in that, there is something called ABOI, we say, that is called active business outside India. There are 3 conditions that we need to understand for active business outside India. If that is the condition, then you will be a non-resident. If it is active business in India, then you will be a resident. The first condition is that will be your passive income should be less than or equal to it's not more than 50% of total income. So your passive income must be less than or equal to 50% of total income. That is condition number 1. Second condition is what? Indian assets. The Indian assets must be less than 50% of total assets. Mind you, in the first condition is what? Not more than, which means passive income must be less than or equal to 50% of total income. Second one is what? Indian assets will be less than 50% of total assets. Third one is what? Employees in India must be less than 50% of total employees. The employees in India must be less than 50% of total employees, and obviously a corollary to that is the payroll expenditure, whatever we are paying, that must be less than 50% of total payroll expenditure across. So if these 4 conditions are satisfied, which means then this is an active business outside India. So these 4 parameters, you have to test it with this particular Raj Pharma. So condition number 1 is what? Passive income of Raj Pharma should not be more than 50% of its total income. So of course, if you see the question, they have given that only. So in this case, the overall thing they have given in 4 different tranches, 50 crore, 75, 30 and 20 in the question they have given. So if you add everything, it is 175 crore. So that is your total income. But what is passive income? That is, if you have done purchases and sales with the associated enterprises, that is passive income. Apart from that, income from your royalty, dividend, capital gain, interest, other income, other sources, the capital gains, etc., that will be your other passive income. So here they have given in the question itself, they have given, there will be 15 crores, that is 5 crores in India, 10 crores in Germany is one part they have given in the paragraph. Again, if we go to the paragraph and underline, it will take time. That's why I'm doing it here to be, slightly faster. Then of course, interest and dividend income they have given in the question, 30 crores in India and 20 crores in Germany. So if you add all these things, my passive income is coming up to 65 crore. So if I do 65 crore divided by 175, it is coming up to 37.14%, very much within 50%. So if the first condition is satisfied, that your passive income is less than or equal to 50% of total income. Coming to second condition, Raj Pharma AG should have less than that. Basically, your assets must be less than the 50% of the total assets. So of course, they have given the total assets, 190 crore is in India, 280 crore is in Germany. So if you add, it is 470 crore. Apart from that, the total assets of yeah, Raj Pharma in India itself is 190 crore, which they have given as well in the entire paragraph. So 190 divided by 470 is 40.43. Again, second condition also satisfied. Third one, total number of employees should be 50 in India, should be less than or 50% of the overall. So here they have given the overall employees as 150, but in India it is 60. Outside it is 90. So 60 by 150 is 40%. There also they have satisfied. And finally, the payroll expenditure also they have given in India it is 10 crore. Overall it is 25 crore. So 10 by 25 is again 40%. So you have satisfied all the conditions. Hence, they are deemed to have what? Active business outside India. So the poem of a company engaged shall be presumed to be outside India. The place of effective management is deemed to be outside India because they follow all the four conditions of above. Hence, a majority of the board of meetings, if they are held outside India also, then the poem is effectively outside India. In this question also, they have given very clearly that 5 out of 8 meetings were held outside India. Hence, all considering the above provisions and the fact that where board meetings are held outside India, Raj Pharma would be considered as a non-resident for the previous year 23-24. Next year, if the things changes, then again every year we need to do this test, not only 1 year, every year. So this is a good question actually. So definitely they are non-residents. So that's about it. That is the end of the question.
Yes, sir. So let's move on to case study 5. So this is the last
After
case
this,
study.
probably we can take a break, I guess. After case
Yes,
study
after
5.
this case study, we'll take a break.
Guys, after
So
case study 5 break, kindly bear with us for 15-20 minutes more. We'll finish it off, then we'll take a break. All
Break,
of you
yeah.
with us, thumbs up, all of you guys. In both the channels, come on, thumbs up. We need to know that you're alive and not just opened and sitting and chilling there. We are also
Yes.
working with you. We are there with you, all of us. Yes, sir.
Yes. So case study 5, Avian Airlines Incorporation. They are having a place of effective management outside India. Is operating in Mumbai, providing various services. In order to meet the growing demand, what they did, they entered into joint venture with Power Group Limited, and they formed a Thunderbolt Airline Private Limited. So from now on, we call them as TAPL with 40% and 60% stake. So 40% is this Avian Airlines and 60% is this Power Group Limited. TAPL positions as full service airline in domestic aviation and offers premium economy apart from the regular economy. So premium economy they will be offering, which is midway between premium and economy, like business class and the economy class, to passengers where rates are higher than the economy class. And AI, this Avian Airlines Incorporation, provides technical and managerial support. And this PGL, Power Group Limited, provides access to Indian aviation sector for AI. Executives from both AI and PGL will be part of management of TAPL, and it will have various function departments. Now, TrueJet Airways, one other company which had major routes originating from Mumbai, was undergoing insolvency. As it was undergoing insolvency, usually in aviation sector, what will happen? They will be owning the routes. So that particular routes will be owned by them. And TrueJet Airways is owning a lot of routes for traveling from Mumbai to other places. So now this TAPL wanted to acquire those routes from TrueJet because anyhow TrueJet Airways is not using those routes. So this is the question, multiple paragraphs what they have given, and we will move on to the first part of this question. So this is the paragraph. Literally whatever I gave is the summarized or abridged version of this many paragraphs which are there. And first
Sir,
question.
the summary is very good, sir. Thank you for your efforts. It's very nice, actually. Everything
Yes, sir.
is covered there.
And first one on April
First
30.
one, I'll read this.
Yes, sir. Please, sir.
On April 30th, 24, Power Group Limited, which is Power Group Limited, sells an aircraft to its own Thunderbolt Airline Private Limited. The aircraft is of older model, therefore its fair value is 45, while the carrying cost is latest book value is 50 crore. How PGL Limited will account for the loss? So 50 crore is the book value, fair value is 45, so fair value is less. That's called as impairment loss, and that should be recognized. And 5 crore, loss should be recognized. The only question here is who will bear the loss? Will the entire group bear the loss or only proportionate ones? So it depends on who is selling to whom. If it is sold from the investor to joint venture, it is called as downstream. If it is sold from joint venture to the investor, it is called as upstream. Since it is from investor to joint venture, it is called as downstream. And in that case, the entire loss will be recognized by the investor himself. In this case, like PGL is the investor, so they have to bear the entire 5 crore loss. Whereas if it was the reverse transaction, then the 5 crore will be multiplied by whatever is the proportionate shareholding, the ownership, that has to be multiplied, and only that percentage loss will be borne by between two companies. Whoever is having the loss has to be shared on the basis of the proportionate shareholding. In this problem, it is from the investor to joint venture, a downstream transaction. So entire loss is recognized by PGL itself. I think that comes to option A, I believe.
Option A, recognize a loss of 5 crores in its books, PGL.
Yes, correct. The entire loss will be 5. Yes.
Yes. And what type of product would the premium economy seats would be considered as? Because premium economy is basically midway between the economy class and the business class. So I think as per SCMP, we need to answer this.
Yeah. So basically it is like this.
It is?
In general, everybody wants to have common seating, but we want to be in front, like we want to be window seat, we want to be in front. Like, so in aeroplane, in airline, we have business class, we have economy class, but in economy, who sits front? So they are little below business class, but above economy class. They are called as the premium economy, and that's why it is called as evolutionary product, evolution from basic.
And
basic
one more thing I want to add, in some of the airlines, Chinmaya sir, actually premium economy will have slightly good leg space and some extra items in food. That's it.
Yeah, correct.
It has some benefits. That is what probably they are trying to tell. Yeah.
Yes, I also have seen in some situations, like whenever there's a delay, they'll offer complimentary premium economy so that the client's also satisfied. So it is not going to make any lot of difference. It is not like a out of the box thinking. It is little bit extensions. It's for next step. That's why it is called an evolutionary product. That is the term we will
and sir, slightly we will throw some light on others also. So evolutionary product is this, that is better than the basic. So what is a revolutionary product, sir?
Revolutionary means which is not in existence. For example, where somebody can offer...
Our IBS case study discussion, nobody in India has done, sir.
Our IBS case study is a revolutionary product. Okay.
Which was not there at all earlier.
It is. Yeah.
Me too means substitute.
No. And somebody else also came, right? Like to continue the same, sir, example. Correct. So we started, became revolutionary. Then somebody followed, me too. So it became like it's a similar product.
Okay.
And perishable product is...
it's short term, like it will not be in memory for some people. You consume, and after that, it will not be sustainable for a longer period of time.
Okay.
It is not repetitive in nature. That's how we
so here it is coming under evolutionary product. Then next one, which of the following will not be true regarding the accountability in performance measurement system for the human resource department at TAPL? Because there is one paragraph which is given that there is lot of attrition that is happening. So due to competitive environment, the aviation industry is prone to high attrition due to employee poaching. They aims to create value for its employees by offering attractive pay packages, and a high attrition rate could have a detrimental impact on business. So for that, they are doing some, HR policy. Yes, sir. So you can throw some light on this. Which of the following will not be true?
Yeah, correct. We will go through the options because they are basically trying to understand what is the role of a human resource department, HR department, which is actually not liked by most employees in the organization because they're always under constant, tuffle with the human resource. So first, maintaining staff attrition below the threshold level would be hard accountability for human resource management. Maintaining staff attrition, again, if you got the question, which of the following will not be true? Meaning, focus on the word not. Most of the options here are the responsibility of human resource, and which is not the responsibility is what we're trying to understand here. So staff attrition below, yes, they would like to do it definitely. They are the one who is appointing, and they are the one who is also taking interview if somebody is resigning. So they are in charge of human resource. Ensuring employee payout and benefits are in budget width and midst would be hard accountability for human resource department, yes, because that is to be taken by responsive departments. Addressing employee concern about working environment would be a soft accountability. Okay, I think the word here they're using is hard accountability and soft accountability. Hard accountability means it can be measured in numbers. Soft accountability means it cannot be measured. Like you can say salary, I can measure. If I talk about whether I'm happy or not, I cannot measure. Like it cannot be quantifiable. The qualitative aspects is what they're calling it as the soft measure here. Ensuring synergy
I think the
between
first one is actually measurable. Maintain
it is
staff
measurable, hard
attrition.
accountability.
Measurable. Second one is also measurable.
Correct.
Yes.
Then addressing employee concern would be about working environment would be soft accountability. Is also no, it is not measurable. It is soft accountability.
Soft accounting.
That's what they're telling it. The statement is correct.
Correct.
Ensuring synergy between the work culture and the other people by arranging team building exercises would be hard accountability. So they're using two words. One is work culture, other is hard accountability. Now, work culture I cannot measure.
Correct.
So that is not to be called as hard accountability, that is soft accountability, and therefore that statement is not correct. So that is the understanding.
Option D is the answer.
Yes.
So yes. So option D is given as the answer. And one point you have to remember, hard accountability means which is measurable, soft means which cannot be measured. Then fourth one, sir. TAPL has identified the following critical success factors: enhance customer experience by maintaining the best on-time performance within the industry. Which one of the following would be most suitable key performance indicator for this critical success factor?
Yeah. So we have two things now, like you take like a balance. One is critical success factor and critical performance indicator. So critical success factor is the objective they want to achieve, and key performance indicator is the measurable number. Like if I want to have customer satisfaction, customer success factor, the key performance indicator could be how many complaints I received. So one is the target, other is the route, by converting it to a numerical form, measurable form. That is called as the critical success factor here. So here they are asking for a suitable key performance indicator for the purpose of the on-time performance. On-time performance is the critical success factor, and what can be indicator for performance, on-time performance is what they're asking, the requirement of it. Reduction in number of complaints regarding the flight delays. I think here itself we got the answer. But anyway, we'll read it further. Reduce the average time taken to deal with the complaints regarding the flight delays. Now, we are taking for on-time performance. So we want to make sure that delay is not there. So second point is regarding the complaints. And the third time is regarding the log of performance. And the fourth option D is in the increasing the training for customer. So what can be a measure of our factor regarding the delay is the on-time, how much time we are taking, whether we are less than 25% in delay or not. So I think option A would be the answer. Lesser delays, more on time. As simple as that.
Yes.
Yeah.
So yes, answer A.
Yeah, 4A with the answer.
4A is the answer. And next one.
Sir, I'll read, sir. That is our IBC. I will read it, sir. No problem.
Yeah.
So Mr. Tan texted the CFO of the company about the recent efforts to acquire these slots and asked for his opinion on what the outcome might be. The CFO then sent you an email asking you to analyze what verdict the Apex court would deliver. So you actually have to step into the shoes of the court, and if this is a very good question based on the insolvency and bankruptcy code. So guys, in this particular question, they have told that TrueJet, they were not doing well, and they have prime slots available. That is morning slot. And the Kingfisher Airline, basically it's copied from Kingfisher. Kingfisher also had prime slots. Morning slots are considered the prime slots for traveling. So you have to buy it from the Department of Civil Aviation. So this TrueJet had it already. They had bought the license for the morning slots, but then they are not doing well anyway. So this guy, Mr. Tan, the CFO, wanted to buy those for that particular company. So was this like a breach, was the question. Was this a breach of a contract, or was it an institution of a suit? So basically, guys, TrueJet is the corporate debtor here, which is going through insolvency. And when during insolvency, can anybody else put a suit? Basically, in the gist of IBC, I'll quickly tell you in 1 minute. IBC is very simple. Rather than the company dying, what they are doing is they are going to have a process called moratorium. Moratorium is like a statue where nothing will happen. No suits can be instituted. No other suits can continue also. It will be there. where they are trying to revive the company, where a better company with better liquidity and better management will come and take over. So rather than let the assets to get squandered and the winding up to happen, IBC is more of a mechanism where I'll try to revive the company. So this is the objective of IBC. So in this particular case, this company already had, Pujet already had some licenses, that is to operate in the morning, but they are not operating only because it's not going on. So now, can the DGCA sell this to somebody else, or are they interfering in the going concern aspect of the business? Because you cannot touch the going concern aspect, is what they say. For example, electricity supply to the company cannot be stopped, water supply cannot be stopped. What about licenses? So basic rule of section 14 of IBC says that you cannot institute any suits, or you cannot continue any suits of the corporate debtor during the moratorium period, during that revival period, is what they say. However, in this question, DGCA has neither instituted the suit nor continuing any suit. What they have done is, actually license also you cannot take away. As section 14 explanation says, any license, permit, grant, nothing can be taken away, nothing can be suspended unless there is a default from the payment of current dues. If the license fee you have not paid, then obviously I will terminate. Why will the DGCA hold on to the license and give it to you if you have not made the payment only? Very, very simple. So I told you, electricity cannot be stopped, water cannot be stopped, provided you pay the current bill. The electricity bill you pay, water bill you pay, then I will continue. You cannot say I am going through moratorium, you pay, give me free electricity, free water, nothing will happen. So here also, license fee, the termination would not have been allowed if TrueJet had paid the dues. But in the question they have given, TrueJet has not paid the dues. Since they have not paid the dues, DGCA is well within their right, because of the default of current dues, they are well within their right to actually transfer that license to somebody else. So the option would be, sir, option number A.
Yeah.
As a regulator, the DGCA was well within its powers to transfer the right of use and did not breach the IBC, because in IBC you cannot institute suits. They have not breached the IBC due to default in payment. It's a breach of contract. TrueJet has not paid the dues, breach of contract, so I can definitely sell it off to somebody else. That is what it is.
Then question number 6. AI plans to enter into a joint venture with PGL from 1st April 2024. TAPL is new vehicle for this purpose. What role internal audit function can play in such a joint venture?
Basically, this internal audit of joint ventures, sir. Basically, you should understand the strategy of joint venture, check the capital planning, who is pumping in money, what are the investment structure, and what would be the potential risks. Because if you see, Tata Docomo had come, so that was a joint venture between Tata and Docomo, NTT Docomo of Japan. It didn't work out because the capital planning issues were there, repatriation problems were there, because Tatas always go by the book. Initially, when they started off, NTT Docomo, they were sending money, but then RBI regulation came putting a cap on that outflow. So Tata stopped paying. Then it went to the Supreme Court and all that. So you need to be aware of the capital planning, repatriation structure, who is investing what, and what is the division of governance. So in Reliance Vision Express, the Reliance is providing the spectacle company. The entire management is handled by the the Grand Vision company of Netherlands. CFO, CEO, everybody is from that company. Whereas the operations is handled by Reliance. So you should have that delegation of duty clearly, and of course you should have agreement between all the stakeholders, because in joint venture it is synergy of benefits, so to speak. Just like us, IBS is like synergy of I alone, you alone, anybody cannot do alone. It's always a synergy. So definitely you have to take the independent assurance here with respect to the operational activities, your underlying internal controls, whatever you have, and compliance with all the applicable laws and regulations. A generic answer can be written, sir. It's a very simple thing. The same thing is given there in the answer also. Same stuff you can write. Yes.
Then the last question is also a theory question. Assess each of the hard and soft elements based on the McKinsey's 7S framework.
Yeah. So McKinsey's 7S framework, they have 7S. So I mentioned initially also they have had like 3 hard elements and 4 soft elements.
Yes.
So initially I can see strategy, the structure, system, then 4 soft elements, the shared values, style, staff, and skills.
Yes.
I have my own theory also. I call it as 4 Ps for a company to be successful. You need to have people, you need to have products, Then you need to have a purpose and a process. So this is a collection is called as business. So hard elements means it can be usually replicated elsewhere easily. Soft elements is like hard skill and soft skill. Hard skill is like accounting, engineering, coding, which can be learned easily. Soft skill like communication, interaction, a value system, which is not so easy to change. It is embedded in most of our day-to-day life. So strategy they talk about, like in this example, they talk on premium economy for certain type of clients, and they can also do like business class, premium economy, dividing the market into various factors, meeting the the requirements of the consumer. That become the strategy part. The structure is where they go with the joint venture approach. And I think somewhere
Correct.
also we have read they wanted to take the route where somewhere the morning you're mentioning that premium,
Correct,
they want
correct.
to acquire that license.
They want to
Yeah.
take.
And because they were not in service and you wanted to make use of it. So those are the structural thing, and you are dividing the responsibilities, as sir was also mentioning. Then coming to the system, it comes to the actual operations, in the sense you have a software which should take care of the consumers on board. If there's a delay, how do you communicate, and interaction between various elements within the people and the processes. That's it's called about systems, basically about interactions. And style, and here we come to the soft skills. The style is basically about the culture. Ultimately, there's also a statement we used to do in our office that, culture eats, strategy for breakfast, which basically means more than the strategy of the organization, if the culture is clear, you will do well. It's like telling, as long as you know why, the how will automatically come. If you're traveling in a bus, the first question the bus conductor will ask you is where you want to go. So if you know the direction, you go in bus also, you go in auto also, the purpose is more important. So that's where individual culture, the objective, the interaction between the people, that's where the style would come. The corporate culture is the keyword you can make use of. Yeah, that's one more thing I can recommend. These 7S are the headings you give. Under that, you take one or two keywords and keep using it in the sentences.
Okay.
You don't have to give so much in detail, because 7 paragraph, you are not required to write. 7 into 2, maybe 13 to 14 sentence is sufficient enough. You don't have to go beyond it. And ultimately, then staff about the people, the recruitment, the training part, how do you encourage them with the bonus structure or penalty stream, people management, that is on the staff. Then skills, again, the training activities you take, or you take experienced persons, because experienced person which come with the cost. If you take the new people come with less cost, but you have to incur a cost of training them. You have to incur one of the cost. So what is your policy regarding it? And in an era of technology, you have to keep continuously learning as well. So you have to conduct the training activities, recreational activities, the skill development, those kind of stuff. Basically corporate training, you can say, continuous development. Shared values, it's on trust value system. As sir was mentioning, the Tatas will always go by book. So whenever you look at certain brands, we know that they stand for certain value systems, not just the profit. And that value system should be drilled down to every person in the organization. Because if the Tata has to maintain, they have to do it through the people who build their brand. So you have to tell the people, you have to appoint only those kind of people, and you have to have a method of system. We always say that if you want a fruit, you focus on the root. Just expecting the fruit is not coming will not solve the problem. So the value system should come within, and how do you make sure that every person in the value chain system will follow it? So shared values is a mechanism where everybody in the system follows that value strategy of trust and ethics. We can say that.
Super.
I think these are the 7S.
So with this, I think series 1
Super.
is over.
Awesome. Very
5
good.
case studies we have completed. So we'll take a break.
Yes.
Sir, at what time, sir, we can continue?
15-20 minutes
12.
is enough, I guess, sir. What do you think?
We can continue at 1, sir. Some lunch.
Lunch.
We can
Okay.
have.
Okay, cool. 40 minutes. Good enough.
Yes.
So guys, please come back. The stream will be on, sir.
Yeah, stream will be on. Just we are taking a break.
Yeah.
And 1 o'clock we will start. And quickly sometime like by 3 we can wind up the remaining 5
Yeah.
case studies
Yeah.
as fast as we can.
Yeah.
And so with that it will be over. Yes, guys. So just take a break for
Thank you
40
so much,
minutes.
guys.
And we'll
Thank you. And one more thing, I have a Google Drive link I'll be sharing on all our groups. Please click on that. You will get the access to MTP1, MTP2, answers of MTP1, answers of MTP2, and also this whatever
Index.
Excel sheet index. Everything is there. It will be there on all our channels. I will share it with the sirs also. They will put it on their respective channels. It will be
Yes.
easier. One click, you will get everything. Okay. Thank you so much.
Thank you.
Thank you, sir, and
Okay,
thank
sir.
you,
We'll
students,
meet
for
again.
coming. Please come back at 1 o'clock. Finish off the entire MTP. Your life will be easier. Thank you so much. See you at 1 o'clock sharp. Thank you. Bye.
Thank you.
Bye.
Sir, this we can quickly complete now.
Yeah, this is actually only for Punarvas, sir.
Oh,
First case studies,
no,
the two.
it's 5 case studies. Like last, how we did just question answer will read. No need to refer to paragraph.
Yeah, we can just go with the summary and then question.
Mic testing, mic testing. Can you hear me? Same also. One second.
Vinod. Transition. Yes, sir. We are good to go.
Yes, sir. I think it's live anyway. One second.
Yes. I think we are live. We can start with the
Yeah.
case study. Yeah.
Just a
Yeah.
sec.
Case study 1. Yes.
Yes,
So
sir.
then
So I
now we
will.
are going to see series 2. This is series 2 of MTP.
Yeah.
And in this also 5 case studies are there. And yes, Chinmaya sir, over to
Yeah,
you.
I will do the summary
This
reading.
is
You
all
can
me
come.
only. This full case study.
Yeah, yeah. At least we'll read the summary so that you have some
Only
rest
FCRA DT audit.
before. Yeah, it's yes. So the case study, this focuses on aspects related to FCRA, that too in particular NGO. So basics of NGOs, foreign funds inflows to NGOs. I think more relevant from current day context where a lot of NGOs in India are receiving funds outside India.
Right.
And there is a they're mentioning about a DSB trust which is working on preserving ecology, receiving foreign funds. And their registration is renewal for due for renewal on 31st December. So a couple of days or months left. Issues are relating to expense on writing of reports, foreign contribution to smaller NGO, meaning you receive one contribution and you contribute to another. Can we do it? Registration of charitable trust and income tax act. And if you want to sell the immobile property, what are the aspects to be considered? I think these are the broad areas relevant to on this issues. I think we can go to the questions and then we can take up one by one.
Yeah.
So 1 second, students are telling not audible.
Not audible. Mic testing. Check, check. 1, 2. Guys, are we audible? All of you? Can you please?
Others please check. Is it only for few people or
Can you
others
please
also?
put your thumbs up? Mic testing. Check. 1, 2, 3. All of you. Can you please put your thumbs up?
Yeah, I think it's audible.
But students are telling voice is not audible.
No. Here I'm able to get some answers here. On Punaravas channel, it is fine. It's audible.
Mic testing. Check, check, check. Perfectly audible. Sir, here it's audible, sir. Just check there, sir.
So I don't know why. No
Your
audio.
voice is coming.
Maybe the OBS in Tharun sir system, that might be off. You can just ask someone of them to check.
No problem. We'll wait 2 minutes.
Yeah.
Guys, hope you had your lunch.
Can you check now? Students, can you check now? Yes, sir.
Done, sir?
Yes.
Done. Okay. All audible.
Oh, great.
My mic little lower. Increase.
No,
this.
okay. No, for me, I'm able to hear. Not sure for others. But anyway, we can.
Anyway, okay. So, okay, let me see the questions. So basically, I'll just give you a gist of FCRA before we move ahead, because with that only we can easily answer all the questions. So FCRA is Foreign Contribution Regulation Act. It initially was, initiated in 1973 for some other reasons. I'll not go into that. But now it's very, very simple. Lot of money is being pumped into India for various reasons. Predominantly in the garb of charity. They do other activities like conversion and also terrorist activities, etc. So to curb that from happening, Government of India has come out with FCRA with further regulations, and a lot of amendments came 2 years ago. First amendment is, if money is coming outside India, earlier any account you could have taken, but now they made it very clear it should first hit the SBI account in New Delhi only. Based on that, question is also there, that's why I am telling based on the amendments. It should hit only SBI account New Delhi. Once it comes to SBI account New Delhi, from there you can give it to different things. Objective is government wants to see from where the money is coming from. Second, if you want to receive funds from outside India, you have to register yourself with FCRA. Registration is mandatory. There is a question on registration also. Apart from that, earlier, 3 years ago only, if I am a registered person, Tharun sir is not a registered person. Chinmaya sir is a registered person. So if my NGO receives, I can give it to Chinmaya sir because he is also registered. But can I give to Tharun sir? Yes, if he had taken specific permission. Only for that particular donation, if he takes specific permission, I can give it to Tharun sir's NGO also. This was the scenario. But again, there also a lot of golmaal activities are happening. That also they stopped. As of today, my dear friends, first rupee, whatever dollar should come into SBI New Delhi. Secondly, I am a registered person. Can I transfer to Chinmaya sir who is a registered person? No. Can I transfer to Tharun sir who can take specific permission? Specific permission will not be granted. So the money, if it comes to my NGO, I cannot transfer anywhere else. That is prohibited. That also there is one question. Apart from that, your entire thing will be, what do you say, certificate will be valid for 5 years. 6 months before expiry, you can go for renewal. So there is one question on renewal also. So there are various forms that you need to file. Everything is online with a requisite fee. So this is regarding all these things. But regarding foreign contribution. Foreign contribution should come from a foreign source. So foreign contribution can be a donation, can be delivery of currency, or it can be transfer also of anything for that matter. It can be an article or it can be a currency, anything for that matter. Article value should be more than 1 lakh rupees. So if I bring from India, from outside India, drone, for example, worth 1.5 lakhs, right? And then donate it to a NGO. Is that prohibited? That prohibition or not, we'll see. But is it a foreign contribution? Yes. Because up to 1 lakh, no problem. Beyond 1 lakh, if you are giving any article, that's an issue. So that is the gist of FCRA. With that in mind, let's see question number 1. Mr. X is worried that FCRA registration of trust is going to expire in the year 2023 itself. Sorry, sir. Okay. Which of the following statements is most appropriate regarding renewal? I told you in the year 2023 means December 2023 it will expire. So what did I tell you? You can do it within 6 months before the expiry. So what is 6 months before the expiry? That is June. So in June there is one form called FC3C. You have to file that FC3C and you can do the needful. And also you see foreign, that is September, first option September 23 is wrong. So it will either be B and C. It will either be B and C because it should be June, 6 months
Sir,
before.
but December 2023, 6 months is 2024 na, sir?
No, sir, before expiry.
Oh, okay,
So
okay.
renewal.
6 months before.
Renewal.
Okay.
So
Okay.
like it's like our we could have written 6 months before CA final exam, na, sir. Within 6 months of article.
Like that. Okay.
Yeah. So that is what it is. Then so either B or C is the correct answer. Now I told you. You see C, for example, foreign contribution can be received in an account designated as FCRA account in any designated branch. No, all that is gone. As per the amendment, it should only be in State Bank of India, New Delhi. So this is an amendment question. Good question. So option B is the answer, my dear friends. Because first of all, you should, file in June 23. You can ask for renewal. Secondly, it should be opened only in State Bank of India, New Delhi branch. That's about it. Easy question.
Then, second question.
Let's move.
Mrs. C has put forth her view on certain expenditures. However, she is unsure about legal footing of her view and related matters described in case study. Which of the following statements is correct?
Yes, sir.
So some expenditures.
Basically, sir, this is very simple. Expenses. Now, if I get donation from Tharun sir is abroad. He's giving me donation of, let's say, $1 lakh. At $1 lakh in my NGO, I have told I will give it to the poor people. I will, for the impoverished, I will give a lot of facilities. Like that, I would have told in my objects. But then to run my NGO, I should have some staff and all that. No. So out of that $1 lakh, how many dollars can I use towards administrative expenses was the question. So earlier law was 50% all that. This is also an amendment, dear friends. This is also an amendment which came 2 years ago. They have now told you can only spend 20%, which means $1 lakh if Tharun sir gives me from abroad, I can spend only $20,000 towards my admin expenses. Suppose admin expenses are more. Let's say I have to hire a lot of doctors, nurses, and so many staff I have to, because I'm opening a hospital for the poor, whatever. Think about it. Now, if admin expenses are more, what do? I need to spend, instead of $20,000, I'm spending $40,000. I can take permission from the government. So up to 20%, no problem. Beyond 20%, I have to take the approval of the central government. So in that regard, option number A, we'll see 50% was there before. So if you have read some old book and all, you write 50% and come. Then this 50% is also wrong. So it will be between C and D. C and D it is. Cannot defray, point number D says cannot defray amount in excess of 20.
Correct.
Received enough to meet. However, expense above stipulated will be defrayed with prior permission.
Correct, sir.
Expenditure of type
because
referred by Mrs.
telling it is not in the nature of administrative.
But this actually was in the nature of the admin expense only. If we see
so
the
option
expenses,
C is
let's
the
go
answer.
to the question. So between C and D only will be the problem, will be the issue.
So you want me to go to the paragraph?
Yes, sir, please.
Okay. Which part, sir?
1 second, sir. I'm just seeing. Mrs. C. We have to check for Mrs. C. That's sir. Last page in that it's there. Another office bearer. Little up, sir, little up.
Sir?
Yes, sir. There, sir. Another office bearer. Another office bearer, Mrs.
Okay.
C, who is herself an activist, pointed out the legislation has tightened the noose on NGOs. Then you see the 5th line. She is of the view that expenditure relating to writing and filing report is directly related to trust activity for preserving ecology of the. So writing and filing report is administrative expenditure. That expenditure is very much part of admin expenditure. Up to 20% you can give. So of C and D, the correct option is C, because it is definitely admin expenditure, and you can defray 20%, but beyond 20%, you will have to take the prior approval of the central government. So C and D are a little tricky. So you need to go and see what type of expenses it is. It is, writing expenditure, which is nothing, reporting, etc. That is nothing but admin expenses. Right?
Then
Done.
Third one
I'll read, sir.
Yes,
this
sir.
again I already explained. Which of the following statement is likely to be correct regarding discussion among the trust members? I told you earlier, section number 7 it was. Earlier I was able to transfer to Chinmaya sir, who is also registered, or I was able to transfer to Tharun sir, who was taking specific permission. After the amendment 2 years ago, nothing can be done. So received can be transferred for other things. You see option number C. Foreign contribution received cannot be transferred to any other person. It is immaterial whether that other person is registered or not. So as of 2 years ago, I cannot transfer to Chinmaya sir even if he is registered. I cannot transfer to Tharun sir even if he is not registered. I cannot transfer. Money coming from outside India should be used for the purposes that I have promised to use. That's it. So option number C. Pretty simple questions if you know the law. Problem is we don't know the law. That is the issue.
correct.
Yeah.
Then fourth one.
Yes. This also, Mr. Z, office bearer, has approached CA Madhusudan to seek his advice regarding modalities of renewal of registration. Same renewal of, this is under income tax law, mind you, income tax law. So this DT portion will come. Interestingly, in income tax also, you can do it within 6 months before, same thing. So if you register under section 12 AB, you have to take the permission of the principal commissioner of income tax, and at least 6 months prior only we should do. And one of the rules clearly state that if you have got registered under this 12 AB, you should also certify that you have registered under FCRA also, and you should file form number 10 AB. So that is the procedural requirement. This is based on procedural requirement at least. So at least 6 months prior, 10 AB. So here form number they are asking. So a little bit you
So
need to
this
keep in mind.
A and D is wrong because it is 10B, 10B.
Yes, sir. So it will B and C it is. So yes, copy of the registration under FCRA is mandatory. I told you it is earlier it was not at all like that. Now registration is mandatory. That registration you have to actually also give it in the income tax also. So FCRA has become very, very strict now. This happened in 2020 actually. During COVID only they increased all these things, which became very, very difficult even for others, genuine NGOs also to function. But anyway, rules are rules. This is what happened. So one is 10 AV you should file within 6 months before. Second one is FCRA registration is mandatory, that you have to file with the principal commissioner to show that you are on the same page. This is the registration under 12 AB of Income Tax Act. So that's it, sir. That is an easy question again. Again, if you knew that these two things, amendments have come, both in income tax as well as FCRA, you would have easily answered this. These are all amendment questions. Easy questions though. Yeah. Question number 5. Certification from chartered accountant is required by DBS trust in respect of certain matters under FCRA described in the case study. Which of the following
statements is true in this context?
So very simple. We have to file. Always we should file something called FC4. This is like a statement, like just like our GST return. This is also like a return that we have to file, FC4. This always should be done within 9 months from the end of the financial year. With respect to all the income and expenditure statement, receipt and payment account, and mind you, blindly I cannot just file like that. It should be certified by a chartered accountant. So CAs, you will have an additional work in the form of FCRA certification. FC4 you only need to file. By your certification you need to give saying that income and expenditure is correct, receipts and payments are correct, they are utilized for the purpose for which the particular NGO is. However, if you have not received any funds, you have not utilized anything during the year, nil return is mandatory. Nil return is mandatory. But when I am filing nil return, should there be any certification from the chartered accountant and audited financial statements and all do you need? No. If you are filing nil return, certification and audited financial statements etc. is not needed. So basically, if you have utilized something or received something, then you need it. Otherwise, not needed. So that's the concept. Let's see in that regard which would be the correct answer. Such certification forms sort of FC4 prescribed in annual return, uploaded, balance sheet. If there is no receipt and utilization, nil return. Yes, sir. So option A would be the correct answer. Option A is the correct answer.
Yes.
Yeah. Other things allow FC2 and all is given. So second one is wrong.
FC4, like B option is also wrong because they are telling that this is statement is not required to be uploaded.
Correct, sir. So B is also wrong, sir. Perfect.
Yes.
So that's about it. Simple questions, all amendments. This FC4 amendment also came. So predominantly the entire case study, the MCQ portion is based on amendments only. I appreciate the paper setter for this question because FCRA people will leave. They were leaving during the law time also as choice. Now there is no choice, unfortunately. Yes. So moving on.
Then sixth question
matters have been highlighted in case study which may have ramifications. Ramification means consequences. Little bit high level English they'll use, but it's easy. Ramification means consequences.
So should we carry dictionary also, sir?
Open book exam, dictionary. Right. For renewal of registration of trust under the FCRA at the time of applying for renewal, central government is empowered to make enquiry. Yes. Central government can make enquiry on wide range whenever they are making a renewal. They'll ask, first show me what all you have done. Why you are taking renewal? What all you have done? They have to tell. Sir, could you please show me the answer? I will explain there only one by one.
Yes.
Yes, sir. Thank you. So, guys, this you need to remember. Anyway, you can copy paste. Section 12 of FCRA Act clearly states that the person who is making an application should not be fictitious. He should be an actual person. He should not have been convicted in any of the activities that is conversion. I told you FCRA, one of the objectives itself is to stop conversion activities from one religion to the other, whichever religion it may be. So you need to see whether you are a person who has not done any of these things or convicted or prosecuted for communal tension or disharmony. So simply inciting rebellion, inciting that fire between one religion to other religion, all those things. So I mean, recently in Bangalore, somebody hit somebody. So the Hindu guys also came, Muslim guys also came, and actually they were actually arrested on this for creating communal disharmony. So that obviously they were detained, more than arrested, detained. So all these things you should not do. Misutilization of funds, if he has been guilty in the past, then you will not get renewal. And engaged or likely to engage in sedition. Sedition means obviously speaking against the government, speaking against the country is called sedition. So nowadays, even comedians, everybody will be put under sedition, unfortunately, but sedition rules are very strict in India. Then personal gains you should not be doing and all those things. And you should have taken a reasonable effort in pumping in the money and also utilizing the money for the purpose for which the entire donation was taken. And then if you go down, sir, next one, if you see that you should not have been convicted under any other law, even as a director, and whatever you do, the money that you are using now should not be against the sovereignty and integrity of our country. So basically, it should not touch the independence of the country. It should not create any create any specific scientific interest against the country's interest. Is what it says. Freedom and fairness of election also. It should not be used for election campaigning, EVM hacking, and all those things. And all these things should not affect prejudicially any of these things, and it should not affect public interest also. So a practical example, there was one guy, Zakir Naik. So he was always speaking against various other religions. So they actually under FCRA only they blocked all their donations, and that fellow ran away to Malaysia. True story. So all this will come under FCRA. Anyway, so this matters which are highlighted in the case study. In one of the points, they say that there was an environmental agitation which turned very, very violent. And there are also a lot of allegations against the members saying that they are misusing and all those things. So definitely, since these allegations are there, central government will not judge, but they will first make an inquiry. And if they feel it has merit, then they will cancel the renewal or they will go ahead with the renewal. That is the entire thing. That is regarding this particular question. Easy question again, but yeah. Then
seventh question.
Seven is
Sir, I think
is
in this everything is your part only.
Auditing, sir. What factors should be considered by Madhusudan while assessing the audit risk of DBS during the course of the audit, and suspecting that there is some non-compliance, how should he proceed? Again, it's a mere theoretical question, so we can quickly go to the answer and highlight the important points. So most importantly, what type of risk is this? Is it inherent risk or control risk? Inherent risk means by default itself is it risky. For example, if you are finding, I think we lost Chinmaya sir, let him come back. For example, if I find a 2000 rupee note on the table, when you just walk in and you find a bundle of 500 rupee note, now 2000 is not there, 500 rupee note if you find, then is it risky by default? Yes, it's inherently risky. Whether people are there or not there, if it's lying on the table, it is risky. So that is called inherent risk. So here, the moment I hear the word NGO, it is inherently risky because substantial foreign contributions are coming. People will be maybe involved in money laundering activities. Basically, activities FCRA is preventing you from undertaking risky activities and ensuring that activities are not illegal. That's what it is. So basically, you need to check why the foreign contribution came as an auditor, whether it's been utilized for the purposes. Is the donation cancelled because of any government regulation? Why have they not provided the certificate? Where has the donation come from which country? Where is it going? Are all the internal controls with respect to it effectively being operated? All that you need to check. So you have to, if you're doing it for the first time, you need to also check you should have your perceived risk as a higher thing. So if you see that last line, it may lead to higher detection risk due to inappropriate sampling procedure. One dialogue is there. What do you mean by that? Higher detection risk means the risk of you not detecting material misstatement. Why? Because you have not done sampling properly. You have taken some random samples. So basically, when you're doing your sampling techniques, you have to obviously increase the number of samples. Your materiality level should be kept at a lower rate. If you keep your materiality level at a higher rate, you will only see high value items. Since you're doing it for the first time, keep your materiality level at a lower level and then increase your sample size so that the risk of you not detecting will be less only. So the detection risk means the risk of an auditor not detecting material misstatement. So it will always be leading to a higher detection risk because of the sampling techniques. All this you need to fulfill. So similarly, during the course of the audit, if you come to know that there is suspected fraud, etc., First thing, see, the management only may be involved, but as per SA 250, it is called TCWG, those charged with governance. In listed companies, you can go to the audit committee, but if audit committee only happens to be fraudulent, then you'll have to go to the general government and public directly. Then it will become like the fraud audit under 143(12) of the Companies Act. Anyway, as per SA 250, if the auditor suspects that there is non-compliance, then the auditor shall first discuss with TCWG, those charged with governance, and then try to rectify them, ask them that these are the non-compliances, discuss with them whether it is material or immaterial to the financial statements, and then give your opinion accordingly. So if you can get sufficient appropriate audit evidence, that should always be the dialogue SAAE, sufficient appropriate audit evidence. If you can get it and you feel that still things are wrong, you will give a qualified opinion. On the other hand, if you are unable to get only, management is not ready to give you information only, you cannot give an opinion only. When you cannot give an opinion, it's because you do not have sufficient appropriate audit evidence. And if you don't have sufficient appropriate audit evidence, that will lead to a disclaimer of opinion. So, if you have evidence, if it is okay, qualified. If it is really bad, adverse. If you don't get evidence only, but other things are okay except this, then it's qualified. But if nothing is right and you don't even know what is right, what is wrong, you will give a disclaimer of opinion. So nowadays, because of NFRA, you are seeing many people who are supposed to give clean report are giving qualified opinion. They are scared of NFRA. So like that, qualified opinion has become the norm. It's the middle part. One extreme is disclaimer, one extreme is adverse. This is the basics of auditing, which I hope you already know this. So this was a question regarding auditing, sir. Simple question. It is actually a simple case study, but all amendments they have tested.
Yes.
Last,
Then
sir,
last
one
one,
more, sir.
income tax. Guys, see, really, I envy you, sir. See, you audit you are covering, law you are covering, income tax you are
also.
covering.
Yes, sir.
Hats off to you, really,
No,
amazing,
sir.
actually.
They're all put together. It's all our subjects only, no, sir. It's fun. In fact, during the course of this thing, I've learned so much about IDT. When we were doing it or something else, and FRSFM, things have only changed fully, especially FR. During the break also, I just spoke to Chinmaya sir regarding a doubt that I had with respect to self-generated asset. So the thing is, since none of us have that ego, sir, we can learn from each other genuinely. And I'm very happy that this IBS subject has come. Just to digress, it's a blessing in disguise for us because we can learn from each other. That is what I genuinely believe in, sir.
Correct, sir.
Yes, sir. Moving on,
The
friends. Last question. This also is DT. What should be the proper advice of CA Madhusudan to Mr. Z regarding implications of proposed sale of capital asset and acquisition of another capital asset as described in the case study? So this is regarding capital gain of trust taxation. Voice is okay, guys? Friends, is the voice fine? Please reply.
Some of you are telling only your voice is low. I'm
My
not
voice
sure
is low.
why.
I mean, it's showing here perfect only. I don't know. Guys, please reply, my dear friends. Is the voice fine? Am I audible? Mic testing, check. I mean, it looks fine here. I don't know. Not sure. Anyway, looks okay. Anyway, so here basically, if a capital asset is held only for the purposes of the trust, religious purposes or charitable activities, and then it is transferred, either partly or wholly transferred, and it's given here in 11, and it's utilized for acquiring another capital asset. Then that whatever capital gain that arises out of it, basically you need to apply it for the charitable purposes. So if I sell an asset, get some capital gain of let's say 20 lakh rupees, and I buy a new asset, is it deemed that that 20 lakh I'm utilizing for that charitable purpose only? Answer is yes. When the whole asset is disposed of, entire thing can be claimed. When a part of it is disposed of, proportionate can be claimed. In the given case, basically the entire net consideration has to be done. In this case, they have clearly given that they have proposed to sell one thing, and the entire net consideration they want to invest in one more asset. So obviously, is it deemed to have been applied for charitable purposes? Yes, it is deemed to have been applied for charitable purposes. Very, very straightforward question, easy question. This is regarding capital gain with respect to trust. So that's about it, sir. This was all our subjects only. Good.
Yeah, so
good question.
Yeah.
Yes.
Moving on.
Yes.
So case study
Yeah.
2.
2. Yeah, I'll do the summary part.
Yes.
Yes, sir.
So it's basically about a partnership firm where few people have come together, two active and one non-working. Non-working means that he's only into investment and advisory. He's not into active role. And there are also salary and interest on capital, which is payable to partner, which is given in the information. The survey showed people prefer healthy food taste with the firm wants to use in its strategy. Because they run a restaurant, and in the survey they got to find out that people are nowadays are preferring healthy food and with taste. I don't know how it sounds like healthy food with taste.
It's like telling happily married.
Yeah, it's like we call whatever like oxymoron or in English that things like happily married where opposite words are there. So healthy food with taste, which is what the preference, so they want to cater to that need. The issue is regarding they are providing only veg menu. They want to understand the market size. Now, if they want to go for the new menu, new infrastructure, investment in the infrastructure will come. And margin is under pressure, the company as well as the whole industry. These are the issues are there. And discussions happen among them. They have given one by one, like one person said like this, other person said like this, relating to the chef, the quality check, inspection, how do you engage the staff, how do you ensure delivery time is on within the acceptable standards, and supplier, where do you procure from, quality regarding it, what are the alternatives you have regarding procurement of various items. I think these are the whole structure of the items given in this case study, and then we can take up the questions one by one.
Okay.
Yes. So in this, the first question, which of the following is true regarding Keyman insurance policy?
Yeah.
Yes, sir.
So this
So
is a
Keyman
simple
insurance
question.
policy, they gave 3 statements.
Yes, sir.
Any sum received under Keyman insurance policy is taxable in the hands of Fresh Foods.
Yes, sir. So any sum or even any bonus that they receive will always be taxable in the hands of Fresh Foods, sir. So that is first one is
So
correct.
this is a true statement.
Second one.
Second, insurance paid under Keyman insurance policy pertains to life of partners of Fresh Foods is deductible expenditure.
Yes, sir. Since the sum received is taxable, any insurance that you pay is also deductible. So second
Premium
is
is
also correct.
deductible expenditure. Then bonus received under Keyman insurance policy is taxable in the hands of Fresh Foods.
Yes, sir. So this was a case law. Whether sum includes, sum is there in the first one. Whether sum includes bonus was the question. The answer is yes. The case law also told. After that, they amended the law. Any sum including bonus received under Keyman insurance is always taxable in the hands of Fresh Foods. So 1, 2, 3 all are correct, sir. So the option C is the answer.
Okay. So all these 3 are correct answers. Yes. Then question number 2. Fresh Foods has approached Indie Bank Limited for a term loan of 5 crores. For this, they need to submit prospective financial statements. Fresh Foods has approached CA Anil for examination of prospective financial statements that it has prepared. Which of the following statement is not true regarding examination of prospective financial statements by CA Anil? So in that first statement, CA Anil need not be the statutory auditor to accept the engagement to examine the prospective financial statements.
Yes, sir, that is correct. Anybody can do it, sir. Any chartered accountant practice can do it. Need not be the stat auditor. That is given in the regulations also. So that is true.
Okay. True. Then CA Anil can express an opinion on whether the results shown in the prospective financial statements can be achieved or not.
This can be used by common sense only. Nobody can
give an
predict the
opinion.
future. So it is false.
False.
But yeah,
We
but
only
even
don't
then
know
everybody.
our future, what we'll tell about other prospective financial.
No, but even then everybody comes on YouTube and say that I will tell you how to make money in stock market, and I will tell how to who will win IPL. So we are in that regime. So they've asked this question.
Nobody can tell this. Yes.
Yes.
Then CA Anil can vouch for the accuracy of projections while examining the prospective financial statements.
Again, projection itself, it is there, it's never accurate. So you cannot vouch for the accuracy.
Yeah, those two are, they cannot come together. Accuracy and execution is like naturally
So
cannot come together.
even if you don't know anything, using common sense, you can figure out the answer for this.
Correct.
So CANL should consider the sources of information that is preparing, their adequacy, reliability. Yes, of course. Obviously, when I'm doing a projection, I should check your the source document that you're giving me, what is the underlying data, how reliable is it, all that is normal. So 1 and 4 is correct, 2 and 3 is false. So option B, sir, 2 and 3.
B is the answer. Yes. Then
No, the
which-
option, no, second, 1 and 4 are correct, no? So,
no, they're asking which of the
option
following
D,
statement is not true.
not true. Okay, so 2 and 3, so it is option D. Okay,
2
sorry.
and 3. Yes. Which of the following statements would not be true as regards product pricing for individual food items?
This is a CMP, I guess.
A CMP question. Yes.
Yeah, which is not true. Okay, let's read one by one.
Yes.
Standard costing technique may be used to compute the cost of individual food items. The answer is yes, because standard costing means for producing a product, what is general cost taken? For any product, you need material, labor, and overheads. So what is regularly how much cost it takes? Like if I take an example of tea, normally we know that, okay, tea will contain milk and sugar, and cost per unit is so much. And this is the labor required. We can usually ascertain based on our past his experience. So standard costing can be used. So that is correct.
Yes.
Target costing may be used for managing profitability of a food, having popular close substitutes, even if they're not healthy, that are offered by competitors. So target costing means that usually we compute profit as a balancing figure, sales minus cost.
Cost.
Target costing means I have a sales, I want to maintain certain margin. So I'm in the process of reaching certain cost. I know what should be my cost of a product. I'm targeting it. I'm aiming for it. So that is why it is target costing. The answer is true. That is also fine. Product pricing used to determine expected revenue for a yearly budgetary planning, which can be determined on the basis on relevant costing technique. This seems to be not true, because relevant costing is for short-term decisions, like for making a project or making a customized requirement or customized a demand by a customer. So we are looking at for a decision, for a transaction, what are the costs which is relevant, and based on that we will say that how much price can be charged. So it is for actually a case-to-case basis. We apply short-term, not at a larger scale. So they're talking about budgetary planning, which is like annual we do or half yearly. So we have a long-term horizon. Therefore, the statement seems to be false. If the price quality perception or unique value perception of certain food is high, customer will be less price sensitive to those items. That is true in the sense, if the quality is not worried about, you only go wherever the price is less. In the sense that we can also say the statement is correct.
So option C is the answer.
Correct. Yes. So where the relevant costing is short term, whereas budgetary planning is long term. So they are not matching. So option C is the answer.
Yes. Then which of the following will not be value added activity? So inspection of food items on a regular weekly basis to ensure quality standards are met.
Yeah. So when we again SEM, value added activity, as the name suggests, in the process of the transaction, it should bring more satisfaction. It should add value. People should feel that they are getting more. Only that can be a value added activity. Inspection of food items on regular basis to ensure quality. Quality is met, but you are not getting more. So this will not be, this will not be, satisfying this
value
point.
added activity. Okay.
It is not a value add. We can say it is not a valued activity. It is not.
Not a value added activity.
But these 1, 2, 3, 4 are not our options. ABCD is coming there.
These are statements.
So, yes. So
using Kaizen costing methodologies to reduce the turnaround time in delivering the order to the customer. I think this is value added, na, sir?
Yes, correct. So Kaizen costing means we study the process or study value chain. And in that, wherever the wastages, redundancies, duplications, we remove it so that the time is optimal and the customer will be delighted. Customer experience is given a better thing than earlier ones. So Kaizen stages, remove the duplications. So it will add value. It will save time. So it will add value.
Kaizen is actually elimination of idle time.
Correct. Elimination of wastages. So that will be
enter, no, Chinmaya sir?
No, these terms were used.
CMP.
Yeah. And costing, these terms were used in minimal extent in Inter, but in final they have a separate discussion on that.
Then
on SEM.
redoing the food items as they did not match the customer specifications that were given while placing the order. I don't think so. It's a value added activity.
Yeah, it is not a value added because you are redoing. Like when you complain that the food are not up to the mark, again, it's not adding any value. So it's not a value added activity.
So whatever activities to maintain the quality will be not coming under value added activity.
Correct. It should give different delight, experience to the customer.
Yes.
Only when something you are getting more.
Yes. Wait time of batch
yeah.
of food item for baking process, as the ovens in the kitchen are occupied in baking other batches of foods.
Yeah. So wait time for the batch of food items. So it is again, you are in the process of optimizing your time with respect to the way the food is prepared, the food is cooked. And it is no way connected to the customer experience. So you're not getting to the customer head that they are not getting anything extra.
So it's
it is
not a
also
value
not a
added
value
activity.
added activity.
So 1, 3,
among
4.
the four, yeah, 1, 3, 4 are not value added. So 1, 3, 4 comes in option.
Not a value added activity, 1, 3, 4. Yes. Then question number 5. The partners have identified certain critical success factors for fresh foods, like tracking menu offerings that maximize customer satisfaction, customer service related parameters like complaints, customer response time, etc. Which of the following is true about critical success factors? So already you have explained about these critical success factors. So these factors contribute.
Yeah, so critical success factors aims to achieve certain things. They have an objective, they have a target. So considering these points like tracking, menu offering, maximize customer satisfaction. So they are not talking about option A, reducing cost, because they're talking about customer satisfaction, customer service parameters.
Yes.
And they're not talking about financial factors, because no way they're talking about profitability, return on investments, or source of financing. And they're not talking about short-term goals, because when you're talking about customer satisfaction, it's not one time. So it is about, these are the factors which are the foundation. So fundamental to the strategic success on the strategy part.
Yes.
So option B would be the answer for this.
Then next one, question number 6.
So this is these things are income tax, book profit, easy calculation. So first question is book profit they're asking. Second is salary to partners. This is 40 small b of the Income Tax Act. Generally in inter and all they'll ask this question. Very simple. Sir, if you can kindly go to the answer. We'll do it from there only. It is faster. So book profit is what, guys? That is as per 40B, as I told you. Net profit as per the P&L account has increased by the remuneration paid or the which has already been deducted from the net profit. So basically, you should take the net profit and then you should add back all those things. But in this question, they have given net profit before deduction of depreciation, interest, and salary. So that is why we need to subtract the depreciation portion. So first is 30 lakhs. That is whatever is given in the problem already. 30 lakhs they are given. To that we have to subtract the depreciation interest portions to arrive at the book profits, because only the remuneration portion is not deducted. It is added back if it's already deducted. So depreciation on plant and machinery as given in the question itself as per section 32 will be 5 lakh rupees. On the other hand, the interest, as you know, whatever interest you pay is secondary, but what is allowed as per Income Tax Act, only 12% per annum. So this is Ajay had given 10 lakh rupees, Biren had given 10 lakh rupees, Chan had given 50 lakh rupees, only 12% is allowed. So whatever is allowed has to be subtracted. So 12% into 10 lakh is 1 lakh 20, and 50 lakh into 12% is 6 lakh. So overall interest deductible would be 8 lakh 40,000. So then finally book profit will be 16 lakh 60. I need not reduce remuneration because I have to compute remuneration on this. This is the first part. Second part, obviously, I have to compute the remuneration on this entire thing. So what is allowed only to working partners, it is allowed. Remuneration to sleeping partner is not allowed. So non-working partner is Chand. Mr. Chand is a non-working partner. He is getting 10,000 per month. So 10,000 per month into 12, 1,20,000 is not allowed as a deduction. But for computing the remuneration overall threshold limit, how much will it be? So each Ajay and Biren are getting 50,000 each. So 50,000 into 12 is 6 lakh. 6 lakh into 2 people. So 12 lakh rupees. 12 lakh rupees, is full 12 lakh allowed or not is the question? No. As you know, we should take that formula is there. Up to 3 lakh rupees of the book profit, 1 lakh 50 or 90% of the book profit, whichever is more is allowed. And on the remaining portion, 60% of the balance book profit, this is the overall maximum remuneration limit paid to the working partners only. That is the rule. Very, very simple. So what is the maximum allowable remuneration? First 3 lakh, 90% will be 2 lakh 70,000. Balance will be what, guys? Book profit 16 lakh 60,000 minus 3 lakh. It is on the balance 13 lakh 60,000. If you add 60%, I will get 8 lakh 16,000. So total is how much? 10 lakh 86,000. How much salary I pay to the working partner? 6 lakh plus 6 lakhs, 12 lakh. But what is allowed as per income tax act? 10 lakh 86,000. The remaining 1 lakh 14,000 will not be allowed. Most simple question, actually CA inter-level question. This is very simple. They have given this here. Done, sir.
Yes.
Next.
Then 7th question. Fresh foods is in service industry where it is essential to link strategy to the management of human resources. The partners would like to have a framework based on building block model to assess the performance management. Using performance management system as proposed by the model, evaluate the following questions. What dimensions of performance should fresh food measure? Dimensions are the goals that the firm want to achieve based on its overall strategy, those goals that define its success. The next one is how to set the standards, that is benchmarks for the dimensions. Then what are the characteristics of reward system needed to motivate employees to achieve the standards?
Okay.
So
So
this
basically
is
that about the performance management.
Yeah.
Usually we focus on only financial parameters. So here they are trying to talk about how financial and non-financials can be set, and also how it can be measured. If you want to measure something, a standard has to be set. So the first point regarding the dimensions of two things, that is on financial as well as non-financial, and it includes certain targets. They are called as goals, and the goals include basically what you want to achieve. First one, of course, financial performance. So in this problem, they have a clear target of how much interest on capital they are paying, how much return on investment they are expecting. So that's what the results part. The first part, point A, they're talking about the financial performance. And yeah, you can come down. So first one, the results on financial performance, you can underline that 18% each year, the return on investment part they are trying to have. And profit margin is under pressure. We also discussed at the beginning, not only of the company, but also the industry. So that is on the financial performance of the company. Then coming to competitive performance is a difficult thing here because the industry is unstructured. So what they're trying to achieve is with the help of whether their seating capacity is occupied. Like in this problem, they said they have 50 seater in the food, the canteen or the hotel, they have restaurant, and they want to achieve by way of at least 90%. If the occupancy is there, that means they are able to achieve their target. So that is one. And how they're going to achieve that 90% by they have grouped the menu into A, B, C, D, so that which gives the volume wise, value wise, and profit wise. So that ABCT category will give an idea of what kind of food that they have to achieve it. So that will help them focus better, and that and those quality can be measured better. That is on the competitive performance. Yes, next. Then quality measurement on the what the inputs they use, what materials they use, and if any complaint comes relating to the quality, and how do you maintain those records, that is quality determinants. Then in innovation, again, what new thing they're trying to bring it to the table, they are anyway, they got the survey done, right? Survey on the, it has to be healthy, but it has to be tasty. So that's where the innovation comes into picture. Flexibility means if you want to grow at a higher scale, then you should have, you should not stick to certain things. You should always be flexible. You should be you should be in a position to change with respect to material, with respect to your strategies, with respect to the menu you choose. So you may have to use appropriate investment in infrastructure so that you can flexible. You're not fitting into one particular category of food or one particular category of meeting customers. Resource utilization. Resource, ultimately, we always say it's not about the resource you have, it's about the resource utilized. Resources may be people, the resources may be the tools you have. So that's where they're trying to focus on the resource utilization part. So first part was determinants. The second part, now we are having the standardization. Standardization basically means what measures you would like to have. So one, in terms of ownership, They are very well structured because they know one person is in charge of operation, other person in charge of quality, and one person is non-working. He is just a advisor or strategic partner. So ownership part is clear. Then achievability, only when the achievability in sense, you cannot set undesired factors. Like you, when you're sitting for examination, you can't say I'll score 95 plus. When you put yourself the pressure how high, obviously the results will fail. When you set a targets, it should be within your reach. That's what they mean by achievable. And equity, ultimately, when result comes, it should justify somebody else results. So that's what they're talking about, the equity part. So again, one person responsible for one category and one person is non-working. So non-working cannot expect a certain salary per month. He can only be awarded for his contribution. So that's what equity talks about. Then rewards, again, it is rewards are important for at a larger level and also at a medium level, because that only what motivates. Ultimately, money motivates. If you say everybody always get equal, there'll not be motivation for you to work more. So the motivation will include in terms of salary, the incentive structure, the bonus structure. You can say like this: if you get so much of profit, a profit share to the partners. Of course, partners will have a share, so they are motivated. Employees' point of view, you can say that from a delivery person point of view, from a quality inspection point of view, you can say how many less complaints you get, then you will be rewarded so much. From the kitchen staff point of view, how much time you have taken to prepare the foods, average time taken for every order, that can be a method. So those are the basis on which you can do the motivation at different levels of people. Of course, you have to communicate. It cannot be just like that. We will send a message, we'll send a mail, and people are expected to know their roles. It's not that. You have to communicate, meaning you may have to conduct programs. You have to tell them in person, defining their goals, defining the standards, that if you achieve, what are your goals, so that everybody in sync. The people who are working in the staff, the management level, their and the profitability part, their sales part, their target, and their culture, everything, if it is in sync, they'll be able to perform better. And controllability, again, which means that there has to be continuous monitoring system of financial as well as non-financial. It cannot be just that you set the targets and you leave it as it is. Continuously, you have to assess the performance and whether it is met or not, and have discussion among the relevant people over there. So this is basically the overview.
Or pointers we should
one you can mention one point and one or two sentences on that.
Okay.
So you should mention each word, like whatever point ABC we had, like controllability, motivation, those words you remember and write one sentence.
Okay.
You can mention that much. You don't have to think beyond that.
Yes.
Yeah, that is on
And
case
now
study
we
2.
move on to case study 3.
All of you are alive, guys. Thumbs up once again before
Yes.
sir can go ahead. But thumbs up, all of you, before we start. All of you, both the channels. Come on.
Maybe
Almost over, guys. Thank you for your patience. Almost over. 3 more
only
to go.
3 more case studies. We will complete
We'll
it.
complete it fast.
Yeah. So case study 3, I will do the summary discussion. So the company here on focus is RPL, who is a manufacturer and exporter of T-shirts of multiple brands. It is not talking about one brand, because different levels of people will be there, like basic, premium. They want to cater to the different segments of market. So they're having multiple brands. It's already established international brand. It is not a local one. Internationally, it is well accepted. It enters into a contract with JML to sell T-shirts at 600, and if units more than 2000, then the price will be 540, and price will be retrospective price, meaning it is not only applicable for the transaction, but applicable from the beginning. So retrospective means going back and applicable in effect from backwards. Expectation is less than 2000 and subsequently revised. So this point is regarding the Ind AS. When we read the question, I will discuss more. They're planning to acquire the above customer. Oh, they are in the thinking of acquiring a customer itself through a share swap for synergy benefits. So, there is a vertical integration, horizontal integration, where you are getting merged with the supplier or with the customer, that is backward or forward. That is called as vertical. If you acquire a customer in the similar line, they're called as horizontal merger. For synergy benefits, so calculation regarding swap ratio and EPS is there. I will do when a problem comes. There are refunds on GST on export sales. So whenever there is an export, the GST is a refund. So that point is also covered. And revenue recognition on bill of lading. Bill of lading. Oh, I don't know how do you pronounce. So particular there on how to calculate invoice value at different stages like CIF method or whether insurance to be included. I think those points are covered there. There was a suggestion to use forward cover for Japan export sales. So when export sales happens, there is a foreign currency fluctuation as a hedging mechanism. They're trying to cover, they're trying to recommend on forward cover. A question is there, we'll discuss there. Debentures are issued in lieu of interest due to public financial institution, which is disallowed by AO. I think it's related to section 43 of Income Tax Act, where interest has to be paid in cash. But if you, in place of interest, if you pay, instead of paying in cash, if you issue debenture, the fate of it, I think there must be a question relating to that. So these are the different areas. I think the first question again.
I just saw RPL. I remember our Vision Premier League, our first entry into online classes. All three of us. Examination heist was one something that all of us did during COVID.
Yes,
RPL had become famous. Revision Premier League. This also has become RPL only now. Anyway, yes.
Yeah, correct. From IPL to RPL. Yeah, first question is regarding
the. I'll read the question, you answer. With respect to information given in para 3, if the merger goes through by exchange of equity shares between RPL and JML, and the exchange ratio is set according to current market price, what is the post-merger earnings per share of RPL? So I think
so. We'll go to the question first quickly. I'll tell you the methods because answer they have given sentences. Then we'll go to the question. It's a very basic, typical question. You will find it in mergers. I'm sure students are very comfortable with this. I'll take it I'll take it in a very quick manner. The merger is on market price. The swap ratio is based on market price. So swap ratio is calculated as the target company parameter divided by acquire company parameter. So RPL is trying to acquire JML. So target company is JML, whose market price is 60 rupees. And the issuer company company acquirer is 75. So target by acquirer 60 by 75. So 60 by 75, you get whatever that number. I'll show you the answer. That you multiply with number of shares. JML company has 250,000 shares. So 250,000 shares multiplied by swap ratio. That will give you the number of shares to be issued. That number I'll add with the existing company share, which is 10 lakh. Existing 10 lakh plus the number of shares issued will give you the post-merger number of shares. I need post-merger earnings. I need post-merger number of shares. Post-merger earnings is RPL plus JML, 10 crore plus 3 crore, 13 crore. And plus any synergy benefits. In this problem, no information of numerical regarding synergy benefits. So it is just acquirer earnings plus target earnings, 10 plus 3, 13 crore becomes the post-merger earnings of the company divided by number of shares of the post-merger entity. So we can go to the answer, sir, and I'll explain the numbers over there. So 75 by 60 by 75. That number multiply with 250,000. That's what they have done. 250,000 into 60 by 75 will give you the number of shares to be issued, which happens to be 2 lakh. Existing 10 lakh shares plus 2 lakh shares. So total post-merger number of shares is 12 lakh. The without synergy benefit, no amount is given. So 10 crore plus 10 crore plus 3 crore, 13 crore divided by 12 lakh shares, you get 108.33. So post-merger earnings per share on 0.33. Just one more small point. If you have P ratio of the merged entity, this 108 multiplied by P ratio of the merged entity will also give you the estimated market price. That could be one more possible question. Anyway, for this answer is 108.33 post-merger EPS.
So I want to ask a question to both of you. Can we write the workings in the answer sheet or should it be done separately in a pencil?
Usually question paper, they don't allow anything to be right because they say that it amounts to
I think they will be giving the answer sheet.
They'll give some rough pages or maybe some not rough pages, but rough space. I think they'll give for you to good. Well, I think so. It is advisable to carry a pencil and eraser so that if the limited space is there, you can reuse it.
Yes. Then second one, with respect to information given in para 3, certain adjustments would be required to make to account for the change in the shareholding of JML in case of consolidation. These adjustments are known as?
Yeah, they're not specifically addressing anything on any Ind AS or something. So whenever there is a shareholding change happens, when you acquire a controlling interest, Ind AS 103 comes business combination. On the date of acquisition, you have to account for consolidation changes. They're permanent in nature. They're not temporarily, you're not doing any changes. The day in which you obtain the control, day in which the acquisition happens, the control is acquired, the consolidation applies. That is called as Ind AS 103 business combination. The date of obtaining the control. So it's a permanent consolidation adjustments. And afterwards, every year you prepare the consolidated balance sheet that becomes Ind AS 110. But on the date of acquisition, it is permanent consolidation, Ind AS 103. I think
Then
that's
with
what they're
respect
referring
to information given in para 4, guide CA Devanshi on the audit opinion considering the fact that the last year's misstatement pertaining to export revenues has been identified in the current year and unmodified opinion was issued in the last year.
Yes, sir. I'll take. So this is SA 710, sir. Basically corresponding figures. So basically, as you have seen in every financial statement, not only this year's figures, but previous year's figures also have to be given. So if previous year you have only done the audit, or if somebody else has done the audit, whatever it is, if there are certain prior period items this year, because the export revenue was not calculated properly, it should have been taken, but it was not taken. So the prior period financial statements, that time if it was unmodified, and if I come to know that there was a misstatement in the previous year, this year I should express a qualified opinion, or in case if I feel that everything is wrong, I should give an adverse opinion. But only with respect to those corresponding figures only. So that is what SA 710 tells. In this question also same thing is only there, that she has identified a misstatement that of the previous year pertaining to an export revenue, and it is still not corrected. So, and in the previous year, unmodified opinion was given. So, in this year, obviously, she should modify the current year audit report only with respect to corresponding figures. So, as regards that, let's see the options, sir.
So first one, she should give unmodified opinion, but include other matters paragraph in the audit report as last year's profit is being reflected in reserves and surplus.
No, sir, because emphasis of matter and other matter paragraph has given in SA 705, 706 is just to highlight important points. That is called emphasis of matter. Other matter which doesn't come in emphasis of matter. So that will not come here. It should not just be highlighted. It should actually be reported. So first one is wrong. Devanshi should
seek legal opinion.
She had not done CA properly, so seeking legal opinion ruled out. Fourth one is also wrong. Unmodified opinion directly gone. So C, sir, should express a qualified opinion or adverse opinion modified with respect to corresponding figures is exactly what SA 710 says. So as per SA 710, this is what we should do.
Yeah, I was always wondering, whenever they say you have to obtain legal opinion, I just wonder, is there any source where we can get illegal opinion also? Yes, sir, next question.
Legal opinion.
Fourth one, with respect to information given in para 6, comment upon the validity of action of assessing officer on rejecting the deduction of interest on loan claimed by RPL.
Yeah, so we had seen the similar question where the interest, if it's converted to a loan, it is allowed only in the, or any for that matter, even if the interest is only payable for loan taken from a public financial institution, etc., then it should be done in the year in which the interest is paid, actually paid by the SSC. So even the explanation also clearly says if it is converted into a loan, etc., then the interest so converted is not actually paid just because it is converted. So when you pay that particular EMI, only then it will be deemed to be done. So in this case, they had converted around 1 crore or whatever it is. And that it is not deemed to be actual payment, and hence the assessing officer had rightfully disallowed it. So the action of the assessing officer is correct in disallowing because it was just conversion. It was not actually payment.
Okay, so just one question. I don't know the answer. If it is converted to equity, what would happen? Because equity will never be paid. Like it will remain.
Then it is disallowed forever. Because it is
disallowed forever.
Unless there is some buyback and all that. Good question.
Yeah. Okay.
Yes. Yeah.
So option B.
Yes, sir. Option converted and not actually paid shall not be deemed. Sir, view of the assessing officer is correct. Would not be allowed, sir. In the second case,
I think option A, no?
Because here it says shall be deemed as actual payment. Option B says shall be deemed. It is not deemed. Option A is
not actually paid.
Option A is the correct answer.
Then. With respect to information given in para 6, calculate the equity value of RPL if the applicable EBITDA multiple is 4.
Yeah, we pronounce it as EBITDA. So we do.
EBITDA.
Yeah,
EBITDA.
basically
Yeah,
it's
EBITDA.
it's basically
Earnings
now.
before interest, tax, depreciation allowance, correct?
Yes, correct. Basically, gross profit or
Yes.
operating profit is what we understand. So
Mm.
it's a multiple, meaning we take the earnings and we multiply it by the ratio. So they have given earnings in the problem they have given. They must have given the earnings.
Yes.
Outstanding
So,
interest liability.
paragraph 6.
Company. You can see the last paragraph. Further, it has made a gross profit of 18 crores and incurred indirect expense of 4
of 4 crores.
So gross profit 18. So in the gross profit, we would have subtracted direct expenses. But indirect expenses like fixed cost, rent, salary, we would not have subtracted. So from the gross profit of 18 crore, you subtract indirect expense of 4 crore, what you get is EBITDA, earning before interest, before tax, and before depreciation.
Yes.
So this number, whatever you got now, we will multiply it by the
Multiply
ratio.
with 4.
That ratio, that will give you the value of equity or the value of the firm. And for the value of the firm, we always take out the debt and we will add back surplus funds. So this is value of firm. It's like value of house. From the value of house, if you want to know what is the owner's share, even though to outside we will not tell, in effect we know we would have taken loan. So from the value of the firm, you take out debt. So they have a debt liability, company has a debt of 3 crores.
3 crores.
So from whatever answer we get, we subtract 3 crores. That will give you the value of equity, and we add cash. In this problem, they have not given cash. They have used the word surplus funds.
Surplus 5 crores.
So that will be added. So basically, we will subtract loan and we add cash. It's basically like a net debt. So from the value of the firm, you take out the value of debt, add cash, because cash is usually not considered as part of value of the company.
So the answer is
subtracted debt
50.
and add cash. So
Yes,
if you show the
50.
calculation, so 18 minus 4, then multiplied by 4, we get capitalized value, subtract debt, you take out the debt. From the firm, take out debt, you get equity, and surplus funds is added. That will represent the equity value. If you have any number of shares, okay, they have also no equity value.
58.
If you divide by number of shares, you will get per share basis. I think that's the equity value they asked.
Yes.
Yeah, that is the number, 58 crores.
Then
Option.
next one, question number 6. With respect to information given in para 2, analyze and state how the revenue should be recognized in respect of sale of T-shirts by RPL to JML. So para 2, you want me to read, sir?
Yeah, we can keep the paragraph 2 in reference.
Yes.
So in Ind-AS 115, 5 steps are there to recognize revenue. With respect to recognition of revenue, it says triple E, entity expected to entitled to receive. Meaning, if you are selling a product at 100 rupees, if 2 rupees you may have to give it back, then you know that your 2 rupees is going to be given back. So today you recognize 98 rupees. Irrespective of what GST could say, because what entity is expected to receive, entitled to receive. So in this problem, if I read paragraph 2 again, on 23rd April, it enters into a contract to sell the T-shirts at 600. As per the terms, if JML purchases more than 2000 till March, the price per T-shirt will be retrospectively reduced to 540. So the price of the product is 600, but if you are selling more than 2000, it will be 540, not only when you cross 2000, even for the original product sold from the beginning. So the question comes, when you sell initially, will 600 comes or 540 comes? The answer is based on expectation, based on past experience. So you can see in the next sentence, they said, till September, they have sold 190 T-shirts, and RPL estimates that purchases will not exceed 2000. So they are expecting 600 rupees. So when you sell till September, the revenue to be recognized will be 190 multiplied by 600. That is the revenue recognized. In October, that is the second half of the year, and from October to December, they sell additional 1200. Due to these developments, now estimates that JML will exceed 2000 T-shirts sold for the period, which means now the expectation of 600 have changed to 540, but originally you have recognized 600. But now you have to revise to 540. So two things to be kept in mind. 1000 t-shirt, 1200 t-shirts sold now, you will recognize at 540, not 600. The balance 60 will take it as advance. The 600, you recognize only 540 as revenue. And on original 600 t-shirts sold, you have recognized 600 was supposed to be 540. That 60 rupees will be reversed. So the revenue recognized for the second half will be 1200 t-shirts multiplied by 540 minus 600 t-shirts into 60. That will be the revenue recognized in the second part. So you can see the answer, and that will be the calculations.
Interesting. Too many changes now in Index and all that.
Full paragraph only, sir.
Yeah, there are too many
Last
changes,
line
but
they have given.
yeah,
Last
this
line
is
they
the
give.
calculations. Yeah, 1200 shares into 540 is the actual happening in the second half, but you would have received 600 actually, because you still are not cost 2000. That 60 rupee would be treated as advance. And then on original 190 t-shirts, the 60 rupee need to be reversed now. Therefore, you do 190 into 60, that will be subtracted. Net amount will be recognized for the December. Effectively, if you consider the first quarter and the first part and second part, you would have recognized the revenue at 540 rupees. Ultimately, that's what you would have achieved by doing all these calculations.
Then 7th question.
Yeah.
It got stuck.
No problem.
Yes.
Yeah.
7th question, with reference to information given in para 4, discuss from what sources CA Devanshi can obtain reliable audit evidence in respect of export revenues, particularly for the 4 export invoices of current year. How can she challenge management's assertion regarding the completeness of export revenue for the financial year 23-24?
Yes. So basically,
it's
sir,
like
no need to go
audit
to
related.
para 4. I'll just make it simple. So very
Yeah,
simple. So
GST
what had
related
happened was
connections.
there they had done based on the bill of lading, whereas it should obviously be always revenue should be booked when the goods go out of the premises. So
Leave the country.
yes, sir.
Leave the
Correct. So
country.
125 lakhs amounting to that. So ideally it moved out some other time. Bill of lading was given some other time. So they recognized on bill of lading, and this auditor now wants to collect evidence as to no, it should have been that time only. So very simple. How can she? First of all, the audit evidence should be sufficient and appropriate. As simple as that. So I should check the relevance and reliability. So nothing can be as reliable as going into the GST portal and checking what you have filed. The first thing is you can go to the GST returns. I think Tharun sir also can add more points if
Yes.
this thing, and then
So actually there are 2 options: export on payment of IGST, without payment of IGST.
Yes, sir.
So here they are making export sales on payment of IGST.
And getting
So
refund.
this refund, usually in this case, the refund will be automatically credited once the goods are shipped. The goods leave the country. So bill of lading is whenever we handed over the goods to the shipping company. So we get the bill of lading. But that does not mean the goods are really exported.
Correct.
So it has to be loaded in the ship, and the customs officer should get the export manifest from the vehicle, like from the vessel, that the goods are loaded and the goods left the country. Only then the customs officer will process the refund.
Correct.
So which means the revenue is recognized by the authority only when the goods are actually exported. So therefore, based on that only, we need to recognize the revenue.
Correct. That's what, sir. So perfect. So that you need to check in the with eBay bills, GST returns, GST portal. You check.
Yes.
So bill of lading is just a document that okay, we have shipper of goods that has given that is.
So as and when the factory gate itself, usually we get the bill of lading.
Yes, sir.
The moment we hand over the goods to our logistics operator, so they will give the bill of lading immediately. This is just like, so when you give the post articles to the postmaster, you get the tracking number.
Correct.
The sticker we will get. But does it mean really they started sending the package? No. So we got the tracking number. So only when the package has actually been transported, then it will be called as sale.
Correct. So Chinmaya sir, can you throw some light with respect to revenue recognition index with respect to this? What does it say?
No, they only say that when the control is transferred. That's one common point everywhere, be it consolidation, business combination, or revenue. So when the control is transferred, which can be represented by a title transfer or a physical transfer, so all of them collectively should represent. So the standard does not specify anything. Whenever we can say that it is under the control of the person who is purchased. After that, revenue can be recognized.
Technically happens in the portal itself when actually, as sir mentioned, it is exported, right? Otherwise,
Yeah,
bill of
yeah,
lading is
exactly.
just a document showing that, okay, I am the, like a receipt sort of a thing.
No, we
So-
don't go by that. We don't go by that. We go by the history of transactions.
Okay.
So typically when you sell, we have a history of not returning anything back. Out of 100, only 1 or 2 might come. The moment you invoice, you recognize the invoice.
Sir,
So
but
because
only
we are,
when it is loaded in the vessel, it is said to be taking export, na sir.
Correct.
no,
Until that point
exactly.
of time, there is
No,
no
that again, that is
guarantee
legal.
Ah.
That is legal. But what we have to
Recording
do is
stopped.
what would represent the best method. So if you are likely to sell, and you're like, even if I can sell on return basis, like Amazon and all, they sell and return can happen within 30 days. So unless 30 days completed, your sales are not taken place. That is a legal status.
Right.
Because 30 days return can come. But we recognize revenue based on the expectation, we provide for the provision for returns.
Correct.
Because most likely it will not come back. So if you wait for the last moment, that becomes legal position. We go with the substance. So even then we look at the historical status and we take
So
that.
even if you take the historical status from the India's point of view, whatever they're doing is wrong. So their management assertion is wrong, violative of the whatever historical thing that you have taken. So yes, I can counter this by my digital evidence, etc., and challenge the management assertion that generic answer is what you need to write. I think the same thing is also given there. That's about it,
Yes.
sir. Next, 8th question.
Then 8th question, with respect to information given in para 5, calculate the expected loss if the hedging is not done, how the position will change if the firm takes a forward cover, and they gave the spot rates on March 31st. So INR per dollar 66.25, Japanese yen per dollar 110.85. Is the decision to take forward cover justified? And you can round off the cross rate from rupee to yen to 4 decimal points.
Yes. So the transaction is between
purely
rupee and
AFM.
yeah, the
Yeah.
transaction is happening between rupee and yen. In between US dollar is the common point.
Yes.
So yeah, you can go to the question 1 so that we'll address from that. Then we'll look at the answer. So, so yeah, we
This
have the
cross
paragraph.
rate and all of this is
Cross rates. Fortunately, they have do one thing well. They have not given 2 rates.
Two
They
rates.
just given
two
1
rate
rate.
quote.
So otherwise, you will have confusion of lower rate, higher rate, and all. So here we keep it very simple. When there is cross rate, if you want to move from A to C, we move from A to B and B to C. So we need here INR divided by JPY. So I will do INR by USD, then USD by JPY. So we have INR by USD available, but we don't have USD by JPY. We have JPY by USD. So basically, I should take a reciprocal of this.
Correct.
In the sense, it will become 1 by 102.34. Or if I do reverse, it is 102 by 62. If you are explained the other way. But anyway, we will do 62 divided by 102. This will give you the spot rate. So have this process, and every time don't follow this. That will unnecessarily waste your time. So you did once, which means 162 divided by 100. Same thing you do on next step also. Wherever you these 2 rates, for a spot rate or for forward rate or spot rate on expiry date, follow this process. You take that 60 plus divided by 100 plus. So every time don't do A by B, B by C. That will take extra time in examination. So spot rate is this number. And they said yen will depreciate to 124 level and Indian rupee will depreciate to 65. Okay, that is what their expectation is. So what will be the expected rate? 65 divided by 124. That will be the expected rate. So you can come to the forward rate. Again, follow the same process. 66.5 and 110.35. So you do 66.5 divided by 110.35 will become the forward rate. So what is the amount you go for if the forward rate is entered? If the forward rate is not entered, that difference is your expected loss. And if you have not taken forward cover, if you have taken forward cover, okay, just imagine this. Today, there is one spot rate. And then if you go for forward cover, then forward cover is relevant. So spot rate, forward rate, difference between those two is your profit or loss if the forward cover is taken. If the forward cover is not taken, in that case, you take the spot rate and you don't go with the forward rate, you go with the rate expected on spot rate. They have given just the paragraph before this. So spot rate compare with expected spot rate. That is the last part of the paragraph. That difference will give you the second part of the question. So now we can look at the answer. So first you should calculate the spot rate, which they have done 62 by 102. You got 0.6080. Then next you have to calculate expected spot rate, that is 65 by 124, and forward rate, the forward cover 66.5 by 110. So difference between the spot rate 0.6080 and 0.5242, that is where if you don't do hedging, the first two number 0.6080, 0.4242 into 10 yen will give you the answer. But I don't know why Institute is giving 3-line answer. You can write in one line.
Yes.
0.6080 minus 0.5242 into 10 lakh. You get the answer in one line.
No.
You can present like this.
Actually, not everyone will be mathematics expert like you. So that's why.
No, I've seen, in some places they give like that. It's wherever they feel that I cannot give detailed answer, answer is small, they make it look like the detailed one by showing the calculation like this. Yeah. So if you go with forward cover, only change will be you don't go with forward cover 0.5242. Instead, you go for the expected rate. I mean, you go with expected rate of. If you go with forward rate, forward cover of 0.6026 is relevant. So 0.6080 spot rate and compare with 0.6026 forward cover. That will be the loss if you go with forward cover.
That is 5,400.
Yeah, that would be the loss for the second situation. And third one, again similar. Second part of the question is if you know the actual rate. That is what they've given in the question. Actual rate happened to be 66 and 110. So take that rate and cover that. So basically, you're fixing the spot rate. From the spot, 3 things are going out. From the spot to the expected spot rate, from the spot to the forward rate, from the spot to the actual actual spot rate. So comparing the spot rate with these 3 things will give you the possible losses under different situations.
Yes.
And the loss is the lowest in the forward cover. That's one they asked us to justify. So it is 10,300 now, 5,400 in forward cover, and you go back to original one, it's some 80,000 something was there. So the lowest loss is in forward cover. So we can say that the forward cover is justified.
Yes. So let's move on to the case study 4.
Two more case studies, buddies. Just 2 more to go.
Yes, 2 more case studies.
All of you alive?
So case study 4, guys, 2 more only, will complete it. So they started asking, sir, when it will be over.
Over.
Yes. So in that, MTL, West Bengal is a tea and coffee manufacturer. They have established a leading brand and want to expand the distribution network, because of which they will be partnering with many distributors and so various logistics operators across the country. And they imported a consignment. And when they imported consignment, they have different rates of customs duty on different dates. So at the time of presentation of bill of entry and at the time of clearance, different dates are there, different rates at different dates. And even insurance, actually not ascertainable. So what should be taken as the cost of insurance? If it is not ascertainable, that is the issue in that. Then another part is about appointment of small shareholder director. And in that itself, they have given presentation of financial results without notes. Is it correct or not? Then they are required to present the financials through XBRL. So what is that XBRL taxonomy? Then how to recognize the incentive from government in the audited financial statements for the same financial year. Already financial statements got audited and they got an incentive pertaining to that financial year at a later point of time. So what is the treatment or how to recognize that? And then whether interest expenditure on debentures can be written off over 5 years. So these are the issues that we have in this, or this is the snapshot of the case study. Yes, sir. So
first one I'll read, sir, because I think it's your question.
Yeah, I'll read, sir. I'll read, sir.
Okay.
So the first question is related to customs. With reference to the information given in para B, in case of MTL, amount of cost of insurance would be, see, we don't have to read para B, simple, cost of insurance is not ascertainable. When cost of insurance is not ascertainable while doing the valuation under customs. So as you know, in customs, we need to take CIF price as the assessable value. What is CIF price? Cost, insurance, and freight.
Right.
So here, freight is given, cost is given, insurance is not ascertainable. We need to take 1.125% of FOB. What is FOB? This cost is nothing but called as FOB. So therefore, 1.125% of FOB will be taken as the insurance. Suppose we don't have the FOB price directly, but we have FOB price plus freight. We don't have FOB directly, but FOB plus freight. Then should we do any working like nothing like that? So this FOB plus freight itself we need to take, and on that we need to multiply 1.125%. So 1.125% of FOB value, where FOB value not ascertainable, but sum of FOB plus cost of transport is ascertainable, then it is 1.125% of such sum. So therefore 20% is in case of freight. So this will not be coming. And fourth one also will not come. 20% will not come. 20% is in case of freight. And therefore option like this 2 and 3 both are correct. So 2 or 3, option C is the answer for this.
Sir, when will it be not ascertainable, sir? Why
It
is
so
that?
happens that the same container, there will be goods belonging to multiple importers.
Oh, okay, got it.
And I will not pay the insurance, but the container operator, like logistics operators like Hapag Lloyd, so Gati, then Blue Dot, like that, lot of people are there.
Okay.
So they will pay the insurance and they will apportion it.
Got it.
So when they apportion, there are different methods of apportionment. Sometimes they apportion based on volume. Sometimes they apportion based on the cost of the goods. So whichever method they follow for apportionment, they will give me the insurance receipt at a later point of time after the goods got imported. But when I file the bill of entry before import, I don't know what is the insurance. But I know what is the FOB price. That is the price at which I purchase the goods. So on that, I will be taking 1.125%.
Got it, sir. Super. Fine.
Yes. Then second question with reference to information given in
I'll read, sir. It's fine. I'll quickly finish it off. This is relating to company law. With reference to information given in para C, to hold such position of director, what is the nominal value? So this small shareholder director is a very, very favorite question in IBS as well as form, self-paced online module. So please concentrate on this. So who is a small shareholder director? It is predominantly for listed companies just to protect the interests of minority shareholders. Now, who is minority shareholder? Person who has nominal value less than 20,000 rupees is called as a minority shareholder. So to protect their interests, listed company suo moto, that is voluntarily can appoint, or if 1/10 of the small shareholders or 1,000 small shareholders, whichever is less, they go and ask, give a notice saying that I want to appoint a representative. Then a representative has to be appointed as a small shareholder. Now the biggest question is, should a small shareholder director first of all be a shareholder? Second, if he is a shareholder, should he be a small shareholder or should he be a large shareholder? Which means a person who owns 10 lakh nominal value shares, can he be appointed as a small shareholder? So the law is very, very clear on it. It says if the small shareholder holds any shares, that folio number etc. has to be written. Otherwise, it can be kept blank. This itself implies that he need not be a shareholder only. When he need not be a shareholder only, it is immaterial whether he is a small shareholder or a large shareholder. So that is the question here actually. Should he have any shares in the company? Not necessarily. So if you see, point number A is wrong because they are telling is required to own shares. No. 2 is also wrong. 3 is also wrong. So fourth is the correct answer. He is not required to own shares of any nominal value in the company prior to his appointment as small shareholder director. Very, very simple question. Regularly asked in IBS and SPOM also. I don't know what is the affinity towards small shareholder director. Yes. Question 3. Yes. I think it's.
So for question 2, the option is
D, sir. D. Option D, sir.
D.
Fourth one, sir. Fourth one.
Then question number 3 is related to Ind AS.
Yeah. I'll read. With reference to information para C, can management present the third statement of P&L as an additional comparative in general purpose financial statements? Again, we don't have to go to para C. It's basically a general question only. Usually we provide current year, then previous year as comparative. When there is retrospective changes happening, you also provide one more for that is mandatory. But out of their own interest, voluntarily, can company provide 3 columnar financial statements? Again, this is pure theoretical answer. I'm not aware of any company who would like to give more disclosure than what is required by the standards. As per Ind AS 1, you can present multiple columns, and in that case, only point to be considered is they also have to be in compliance with Ind AS. You can't say that 2 year is Ind AS and last column is not. All comparisons should be as per Ind AS, and corresponding notes should be given. You need not give a detailed attachments like detailed financial statements, giving the expression notes to accounts, assumptions need not be given for those things. But if you're providing additional columnar comparative, it should be as per Ind AS and corresponding notes should be given. So question number 3 as well as question number 4 is a similar thing, I think. Okay, let's read the question number 4 later. So the answer is actually yes. They can present, but they should also present the notes. So I think it's option A will be there because yes, and however the entity shall present the note. I think yeah, note should be presented. That would be the case. With reference to information C, can manage, okay, question number 4 I'm reading. With information to C, can management of MTL present such third statement of profit and loss for general purpose financial statements without furnishing other components like balance sheet, statement of cash flows and statement of change management? Again, answer is yes, they can provide. But again, the same answer, they have to provide the notes. So answer would be such comparative information may consist of one or more statements as specified, but need not comprise of complete. I think option B is the answer. But in the institute solution, they are slightly messed up. So you can go to the answer part.
Isn't it like copy paste?
No, one is on the balance sheet, that's on the P&L. That would be the difference. But here, see, the answer is telling yes, but option A is what they mentioned. I think that option while writing, I think they're messed up.
Copy paste job.
Yeah, they are copy pasted the above statement, I think, as it is. They copy paste the option also. This option should be B, I think, right? That B it is allowed, and they need not. Yeah, B. They need not comprise of a complete set of statements, but they have to give a notes to accounts. That would be the answer.
Then 5th one is also yours, sir.
5th one is mine, sir. This is the XBRL. I will read it.
XBRL, yeah.
So they are asking about XBRL taxonomy. So basically, guys, XBRL stands for the Extensible Business Reporting Language. So in 2015, they wanted to standardize everything, that any company beyond a threshold, they should upload in a format which is understandable across the world. So that's why in 2015, in consonance with what is followed across the world, they created this XBRL taxonomy. So here it is E-form AOC 4 XBRL, which is what you need to file. This is for all listed companies, first of all, and any company which has a paid up capital of 5 crore or above, and companies having turnover of 100 crore or above, basically. So this is what you should do. If you follow these conditions, then yes. So in this particular MTL, as we saw, it's a listed company and it is Ind AS compliant anyway. Plus the paid up capital in the question is given around 50 crore. Turnover is given 500 crore. So all the conditions are anyway met. Hence, XBRL taxonomy will definitely come for this particular company. So if you see, yeah, its paid up capital and turnover exceeds the prescribed limit, and it's listed also and Ind AS compliant also. Hence, XBRL, which stands for Extensible Business Reporting Language. Extension, extensible business. So extension is wrong. B is wrong. E is wrong. And paid up capital, not just paid up capital, even the turnover exceeds. So basically option number A. So you should know the which all companies should go for it. So listed companies and paid up capital and turnover all should exceed the threshold limit. Only then XBRL taxonomy is applicable. So option number 5A. 5 it is A. A is the answer.
Yeah. Then 6th one I'll read, sir. With reference to information given in para B, explain the rate of duty applicable for clearance for home consumption. So actually, there are two different rates. If they are clearing directly for home consumption, or they are depositing in the warehouse and thereafter clearing it for home consumption. If you see in this case, what they are doing is that they are presenting a bill of entry for warehousing, and thereafter they are presenting a bill of entry for home consumption. So the relevant date at the time when we deposit, imported goods are deposited in warehouse, without payment of customs duty. So we don't have to take that date as relevant date for rate of duty. So therefore, this 50% ad valorem will not be taken. And thereafter, at the time of actual clearance, we need to file a ex-bond bill of entry. At the time when we file ex-bond bill of entry for home consumption, so this is called as debonding. So we will first execute a bond to deposit, and thereafter we will release the bond. So at that time, we will file a bill of entry, and whatever is the rate prevailing at that time, that should be taken. So that is 30% should be taken. But department is asking 50%, which is not correct. So in this case, the relevant rate of duty is 30% only. So that is the answer for the second. What is the rate of exchange? Whether the rate of exchange on 1st September could be adopted for purpose of conversion. For the purpose of exchange rate, at the time of deposit in the warehouse, we need to take, not at the time of clearance from warehouse. So what is the date of deposit here? The date of deposit is 5th July. So that date, whatever is the exchange rate should be taken, not the exchange rate prevailing at the time of 1st September, because the logic is simple. At the time when we deposit the goods in the warehouse, we need to execute a bond, and the bond needs to be executed in Indian rupees. So we need to know the exchange rate at the time of deposit in the warehouse itself. So therefore, 5th July should be taken as relevant date for exchange rate. Then next one, explain briefly the chief reasons on the basis of which proper officer can raise doubts on the truth and accuracy of the declared value, as happened in case of MTL. So it so happens that in customs, so customs is not always self-assessment. So even though you determine the CIF price, but that CIF price declared by the importer may be rejected by the customs officer. So because of various reasons based on comparable imports. So these are the various reasons, like there are similar or identical comparable imports which are made. So because of which, for example, we are importing at $20 per unit, but the similar or identical comparable goods are imported at $30 per unit. So they may reject our $20, and the sales invoices have an abnormal discount or abnormal reduction. And there is some special discounts limited to certain people, or if there is any misdeclaration with respect to the quantity, quality, or non-declaration of certain parameters like brand, grade, etc., or fraudulent or manipulated documents. So in these cases, basically what happens, assessing officer will reject the value and he will determine the value as per customs valuation rules. So that is what rules 12 of customs valuation rules says. So that is about question 6.
Super, sir.
And we can move on to question 7.
Yeah. 7 is regarding auditing, sir. I'll take this. So
Yes.
with regard to para number D, let me not read the para. I'll give you a gist of the para, what happened. So basically, the finalization of accounts had happened on 31st March. Obviously, the year ended 31st March happened. And the audit report was already signed on some 5th May or something. On 6th May, the company came to know that some incentive from the government, around 20 crore, is coming in May 24. This is after finalization of the financial statements and after signing the audit report. So the question is, this is an event occurring after the balance sheet date. More than an event, it's a fact that 20 crore is coming. So should the accounts be amended again? Should an auditing be done for that particular item? And should I issue a fresh audit report after I've actually given the audit report is the question. So this entire thing is SA 560, whether amendment of the financial statement is needed, or just I should put it in a emphasis of matter paragraph under 705, 706. Should I do that, or should I actually amend the accounts and issue a fresh audit report? So the standard SA 560 says that if you come to know about a fact that which comes to the auditor's knowledge after signing the audit report, but had he known that before only, he would have changed his opinion, or maybe he would have done some additional procedures, then you have to amend the auditor's report, is what SA 560 says. So for that, of course, you have to discuss with the management. You should discuss with that TCWG, as I was telling you, under SA 250, and you should clearly see whether the financial statements need amendment or not. And also you need to inquire the management as to how they are going to finalize this and all these things. And regarding that, you have to extend your audit procedures and do the needful. In this case, 20 crore was received after finalization and after audit. And definitely the company requested the auditor to amend the, issue a fresh audit report, because they are amending the financial statements anyway. After applying this, definitely the the CA firm can issue a new audit report subject to the date of the audit report, ensuring that it should not be earlier than the approval of the amended financial statements. Basically, how it works is, now everything is done, a new fact has come to the knowledge, management and auditor will decide. Now the management will amend the financial statements, approve the financial statements, authenticate the amended financial statements. After that only, a new audit report has to be issued. So the same process which happens for normal auditing will happen for amendments also. And my report will be modified with that new part only with the addition of the new thing. Some 3-4 items and all I cannot add. Whatever I came to know later, only that part I have to add. That is the interesting part under SA 560. That is question number 7. Regarding question number 8, that is with respect to the assessing officer, whether he is correct or not. Again, gist of the story I'll tell you very simple. Debentures were issued with maturity at the end of 5 years. So debenture holders are given an option. Option is what? This year only I'll pay full 5 years interest at a slightly lesser rate, or every year you can take. Two options I'll give. One, you take interest I'll pay this year only upfront for the full 5 years, or I will space it out in 5 installments and give you. Both the things are there. Now, for accounting purposes, I will use whatever I want. So whoever has opted for option 1, I will give everything. Whoever has opted for option 2, I will give normally. So accordingly also, the company for tax purposes also, if they paid interest for all the 5 years put together in the first year only, they have taken the full deduction. And for those piecemeal payment of every year installment, they have taken only first installment for as a deduction in their books. Assessing officer, what is telling, in accounts you are showing two things, but in tax, for tax purposes, I will not allow one shot payment, because that one shot payment of, let's say 100 crore you paid, that represents 5 years interest. So that will not happen. This issue was raised in a very famous case law, Taparia Tools Limited. I have written in the summary anyway. Taparia Tools Limited, a very famous case law in 2015, Supreme Court judgment. The same issue, the facts are similar to the same case. So they said that under 36, section 36, the full amount, the interest paid in respect of the capital borrowed, whatever you interest that you have paid in respect of the debentures that you have issued, is fully allowed as a deduction, because the liability, the moment you paid that 5-year interest one shot, the liability has arisen that year only, and you have already paid that liability also. Just because a different treatment is given in the books of accounts cannot say that here also you should do differently. You can claim the entire thing as a deduction. So the company is eligible to claim the entire interest amount upfront only as a deduction under 36(1). It's basically analysis of a Supreme Court judgment, Taparia Tools Limited. So that we have to explain that case, and that's the end of question number 8. So with that, we finish this case study also.
Yes.
Yes, sir. Last
So-
to go, guys. One more to go. Over.
Yes.
So last case study, let me read the summary of it. So Shubham Limited is a manufacturer in Gujarat, and reporting of property lease agreements in the financial statements, either in balance sheet or in P&L as lease rentals. So that is one part. Then there is an investmentation based on estimated cash flows. And to take these investmentations, 5 out of 6 board of directors attended the board meeting. And then availability of deductions under Income Tax Act with respect to various expenses and remuneration. And then new regime of tax. So there is one 115 BAC reference that is there in this question, and deciding whether to file income tax return based on gross total income. So in this purely it is SFM and income tax related provisions.
Yes, sir.
So first we will see question number 1. So question number 1, Punarvas sir, you have to.
Yes, sir. I'll go it, sir. I'll do. 1 second.
With respect to information given in issue 3, the
Let's-
resolution relating to investment shall be taken as passed by the board in
Yes,
which
sir.
of the following cases?
So let's basically issue information 3 is nothing but, what do you say?
Out of 5 directors, some 3 directors
Yes.
are
So
there like that.
this entire thing is section 186, intercorporate loans and advances. Under section 186 of Companies Act, if one company is giving a loan to another company, if one company is giving a guarantee or providing a security because that second company has taken a loan, or if one company is investing in the securities of the other company, whatever the case may be, intercorporate loans, advances and investments, I have to take, that is my company, because the outflow is happening from my end. Very, very strict regulation is there. You have to, there is special resolution also for beyond the threshold limit, but whatever it is, whatever board meeting resolution is mandatory, but what majority is the question. So 186 makes it absolutely clear that it must be unanimous resolution. Now, unanimous resolution doesn't mean if there are 6 people, only 5 attend the meeting, 5 out of 5 if they agree, is that the thing, or all the directors of the company should agree? So ultimately, unanimous means whoever is present in the meeting, all of them should agree. So if there are 6 people in the company and 6 people come for the meeting, 5 of them say yes, 1 person says no, then unanimous resolution is not passed. 5 of them says yes, 1 person is silent, still unanimous is not done. Because unanimous means all who are present at the meeting should say yes. If there are 6 people in the company, 1 person doesn't come only, 5 people come, 5 out of 5 say yes, then it's unanimous. In this question, they told out of 6 people, 6 also came, 5 people said yes, 1 person said no, or 1 person abstained, doesn't matter. Unanimous resolution is not passed. So basically, it should be with the consent of all the directors
total
present in
strength
the
of
meeting.
6 directors.
Yes, sir. So when all the 5 directors attending the meeting and they have given the consent, only that. So here 4 only gave, 3 only gave, doesn't matter. 5 out of 5. Whoever has come for the meeting, everybody should say yes. Even if you abstain, it is deemed to be no. That's the beauty of 186. So, sir, option 1 would be the answer, sir.
Option A.
No, because
yes,
total
because
strength
only
is 6.
5. Correct.
Total strength is 6, but it's no problem. Even if 3 come, 3 out of 3 should agree.
Okay.
So option A is the answer.
Then second, with respect to information given in issue 3, approximately the net present value of the project proposed for making investment based on risk-free rate. So NPV
So
calculation.
question number 2 and 3 are actually very similar. Question number 2 is using risk-free rate. Question number 3 is using risk-adjusted rate. So we have cash flows. We multiplied by the discounting factor. So 7% is a risk-free return.
Yes.
1 divided by 1.07, keep pressing equals, you get the discounting factor. So cash flow multiplied by discounting factor, you get the discounted cash flow, do the total minus the investments. Investments also given at
10 crores.
10 crores is there. And again, the growth is in lakhs. So ensure that is taken care. So cash flows multiplied by discounting factor will give discount cash flow. Do the total, subtract investments, you get NPV. Discounting factor is 7%. We will look at the answer. Well, let me look at the next one also. Because they have given, the next one also we'll just look at. Let's go back to the question. Let's look at the next one also. Yeah, no, the same part, same paragraph. Because next question is just on adjusted discounting rate, that's all.
Okay.
7% we have, this is risk-free. Risk premium, they said 7%. So basically a premium that you can expect for risk. So when risk is high, you expect higher return. So 7% is risk-free, 7% risk premium. So risk adjusted will be 14%, 7 plus 7. So discounting factor, now you make it as 14%, 1 divided by 1.14, you get the discounting factor, same process you follow it. Now we can look at the answers, calculations. This is the simplest one we should get. So first one, discounting factor 7%, cash flows and discounting factor, you got present value, did the total, minus investment, so 1443. Next part of the question is the discounting factor is 14%, 7% risk-free and 7% premium. So discounting factor 14, same answer. And as you can expect, when discounting rate increases, NPV is reduced.
Correct.
That is the relationship between discounting factor and present value, inverse relationship. So you can see NPV reduced 998. So that will be the answer.
Then next one, next question, remuneration related.
Yes, sir, I'll take it, sir. So, yeah, with respect to information given in issue 4 as regards recovery of excess remuneration. So basically, always you will pay remuneration based on the projected profit. So if we are in 23-24, at the end of 24, how much money I'll make, based on that 11% is what section 197 allows you. Beyond that also you can take anyway, but up to 11% of the net profit of the projected net profit is what you can take. At the end of the year, when you figure out that 11% of something happened to be less, let's say you have taken 1 crore, but you are supposed to take 80 lakhs. What will happen to that extra 20 lakhs is the question. That 20 lakhs, you should hold it in trust, as if you are holding the company's money, you should hold. And that will not be waived off, that will not be given to you. However, there is an option under 197 whereby you will waive it off only with a special resolution. And that too, it should be done within 2 years from the date the sum becomes refundable. When will the sum become refundable? When you do the calculation. When you do the calculation, I figured out I should have only given you 80, but I have given you 1 crore. That is the day the sum becomes refundable. For that, 2 years you take. Within 2 years, you have to refund or you hold it in trust. But within that 2 years, I can, waive it off by passing a special resolution, which means minimum 3/4 of value of shareholders. They should agree that, okay, boss, you keep that, you have done good work, keep that extra 20 lakhs. That's what it is. So based on that, if you see option number A is wrong because it talks about 1 year. Option number C is wrong because central government permission, it is no longer there. Option number D speaks about special resolution within 3 years, which is also wrong. Option B is the answer, sir.
Yes.
Option B shall not waive the recovery unless approved by special resolution within 2 years. So
Yes.
question number 5 is also relating to income tax. With respect to information given in issue number 5, Mr. Saurabh requires to file his return of income. Why? Generally, you need not file any return of income if you can produce a certificate that's not needed, or if your amount is, the income is below the basic exemption limit. However, even if it is not so, if you have, let's say, even if your income is less 1 lakh rupees you are showing, but if you have incurred an expenditure of 2 lakh or more during the year, you anyway have to file. Or if you have deposited in any of the bank account, all aggregate put together in the current accounts, 1 crore rupees, then you have to file the return. Or if you have incurred around 1 lakh rupees per annum towards electricity bill is more than 1 lakh per annum, then you have to do so. Now in this given question, I think this guy, around 10,000 rupees per month is what they have given in the question. He has incurred 10,000 rupees per month as electricity. So obviously it will go beyond 1 lakh, right? So hence, definitely he has to file his return of income. Option number C, sir. Option number C.
Yes. Then
Okay.
next. Question 6, with respect to information given in issue 1, discuss the potential ethical conflicts which may arise in respect of lease arrangement and ethical principles which would guide how the finance manager CA Manoj should respond to the situation.
Yeah.
It's
So
audit,
basically,
I think, sir.
no,
Audit.
Audit
no,
and
it is
AFM
not
mix, sir.
audit. It is actually, no, it's actually FR.
FR.
Oh.
Super. Now only
No,
he only don't
basically-
know which subject you have to say.
No, they have introduced one chapter in FR,
ethics.
ethical.
Ethics in
ethics.
every subject. Correct.
That's
It's
where
no
it's
longer
coming
audit
from.
now. Auditing domain.
Yes.
It's audit spread across everywhere.
Okay.
So basically, as per Ind AS 116, lease is categorically different from AS 19. It is, though it is expenses, it is a payment made, it is to be accounted as if it is an asset acquired.
Mhm.
So the amount of lease payment, monthly payment you make is not taken to P&L. They are treated like a loan repayment. If that much amount of loan had to be taken at the beginning, basically the present value of lease payment is recognized at the beginning as an asset as well as liability. Asset will be depreciated, liability will be amortized by adding interest and subtracting the payment as liability, EMI. So this process is what Ind AS 116 says. But in this, the company is trying to say that no, it is monthly payment, we'll take it as expense, which is not correct as per Ind AS 116. So when the treatment of companies not correct as per the accounting standards or as per Ind AS, it is the duty of a CA to make sure that the rules of accounting standards are followed. That is where the question is trying to ask the dilemma or ethical consideration. Ethical consideration, we talk about fundamental aspects. One is integrity and objectivity. Those are the two keywords you have to use, integrity and objectivity. So in the examination, when this question is asked, first you talk about as per Ind AS 116, it has to be capitalized. The treatment given by the companies or the management is not correct. And therefore, if you follow what as per management says, then you will be guilty of professional misconduct as per ICAI Act, whatever the schedule number you'll mention. And you have to mention that the integrity, objectivity are the fundamental aspects of the ethical issue, fundamental principles. And you can
But
also
the
talk about
same thing is
professional.
there even in GST, sir.
I think they have
Professional
added.
competence,
Say professional competence.
objectivity,
That means you should know it.
behavior.
Yeah.
All those
And
things. Yes.
so it is your, whether you in practice or not, it is a duty of a CA to make sure that all ethical considerations are met with. That
Yes.
would be the gist of this question.
Then next one. Question 7, with respect to information given in issue 4, compute the deduction available to Ms. Disha under appropriate provisions of Income Tax Act.
Yes, sir. Let's go to
So you
issue
want-
4, sir. Yes, sir. Please, sir.
Yes, issue 4. Yes, sir. Lot of information is
Yeah,
there.
they have given many things. Let's see.
Life
Basically, you are
insurance
filing
scheme.
in IT returns, I think.
IT returns
Yeah, yes.
filing. Yeah. Financial and taxation knowledge of CA Manoj. Ms. Disha asked a favor from him. That's the problem, sir. With CAs, everyone will ask favor only. Nobody will pay. To
Yeah.
calculate deduction available to her under appropriate provisions of the Income Tax Act. One by one, we'll go. Life insurance premium paid 20,000. Actual capital sum of the policy is 2,60,000. Insurance policy was taken on 31/3/2012. Now, the date is important because for all the insurance policies issued before 1/4/2012, mind you, 1/4/2012, premium paid up to 20% of the sum assured is allowed as a deduction. So sum
Okay.
assured is how much in this question?
2,60,000.
2,16,000 to 20% is 52,000. So up to
52,000.
52,000
It's less
it will
than
be
that.
allowed. So this is less than 52,000. How much?
So
20,000.
20,000.
No, no tension. So you will
And if it is afterwards, no limit, is it?
Yes, correct. So that
Okay,
is
okay.
that is how it is. During the year, it allowable as a reduction under ATC. So after that, there are many other provisions because ULIPs are also added now. So there is some full table that we have to do. If it is before only, it's easier. This is before 1/4/2012. Then next question. So basically here 20,000 is allowed, no tension. Contribution to public provident fund. Basically all these provisions are linked to ATC, reduction under ATC. Contribution to public provident fund, 30,000 rupees in the name of the father. Very, very interesting. Individual can contribute to PPF, public provident fund, in the name of himself or in the name of the spouse or name of the children. Father is not counted. So as contribution was made in the name of the father, this deduction is not allowable. So this is an interesting point. So please see in whose name they have done. So even though he has spent 30,000 rupees, no deduction will be granted under ATC. Third one, tuition fee, 8,000 each for 2 sons pursuing full-time graduation course in Surat. Tuition fee for daughter pursuing PhD in Stanford University. Stanford University. Okay. The tuition fee is eligible for under ATC for a maximum of 2 children. And it's only should be educational institution in India. So 16,000, whatever, 8,000 into 2 will be allowed. And for the daughter, it is not allowed because it's an educational institution situated outside India. For that, there is no deduction under ATC. This question is relevant and important because of the new regime 115 BAC. ATC has lost its relevance. You will not be getting any deduction under ATC. That's why students will leave ATC and go assuming 115 BAC will come. In inter this time and in final also 115 BSc question only didn't come. Only they are asking old stuff. Institute has that sadistic mindset. They know you will study new things, they'll ask old only. Here also same thing. All these in practical life it's almost redundant because everyone has moved to 115 BSc, but they'll still test you in these areas. Housing loan principal repayment 23,000 to Axis Bank. The property is under construction as on 31/3/2024. So very simple, principal repayment is allowed only if the construction is completed. As on 31/3/24, construction is still going on. So basically, if the construction should be completed and there should be some income from house property, only then you will get the principal repayment deduction. Hence, principal repayment deduction is not allowed here. But interest repayment is under 24B, as you know. Next, 5-year time deposit in account under the post office time deposit.
One more point is principal
sorry,
repayment of
Yeah,
housing
sorry, I
loan
missed
from
that.
a relative.
Principal repayment of housing loan from a relative, 80,000 rupees. It is self-occupied at Surat. Again, you can take the money from whoever you want. Interest will be allowed, but principal repayment will be allowed only and only if the loan is taken from central government, state government, bank, or some specified employer or a NBFC sort of a thing. It will not be allowed if you take from relative. I repeat, interest is allowed under 24B that you can claim. Whether you take loan from relative or you take loan from anybody, it's okay. But principal repayment, very clear instructions under ATC. You should have taken the loan only from government, bank, etc. So here it will not be covered. Next. 5-year time deposit in an account under post office time deposit scheme. Of course, post office time deposit scheme, national savings certificate, all these things are allowed under ATC. So that amount definitely can be taken, not to worry. Investment in national savings security, both the things can definitely be taken. So of course, in this entire thing, PPF is not allowed, housing loan principal payment not allowed. So if you add all these things, sir,
but it is restricted to 1,15,000.
Yes, sir, yes, sir, yes, sir. So that's what I was coming to. If you go to that answer, sir, or you already made, sir. So the total is coming up to 1,56,000, sir.
Yeah, 1,56,000.
But it's only restricted to 1,50,000.
Okay.
1,50,000. So that is regarding question number 7. Let's go on to last question. It is
Question
also
number
direct
8.
tax only.
Yes.
With respect to
information given in issue 4,
four.
examine the obligation of Shubham Limited to deduct tax at source while paying or crediting salary to Miss Disha.
Yeah.
Yeah, they have to deduct TDS. Okay, what is that?
Yeah, so here they have deduction of TDS under 192 is always at the time of payment. So if they have just merely credited to the employee's books, then not. That's the beauty of this question. Tricky question. If you see the question number 4, they have just said credited the salary.
The issue 4, I think. No?
Issue 4. They have just told credited the salary there. So here it's not that you should pay it. 192 is on payment basis. All other things is on credit or payment, whichever is earlier. Here it is payment basis only. So
what's the difference, sir? Credit, payment?
Credit means your account is credited. Means in your books of accounts, if you have made the credit, that's good. You may not have paid, still lying in payable. But if you made it in a payable entry, that's it. You need to do it. So that payable entry even can be a suspense account. It need not be credit of that particular person. It can also be a suspense account. The moment it hits a suspense account or a payable account, that's it. TDS has to be deducted, whether you pay the amount or not. But in salary alone, it's interesting. 192 is on payment basis.
Okay.
So here you are not required to deduct tax only because you have not just paid it, you have just credited it. So not required to deduct. And one more sub question I have asked, what all information should you seek, whether they are opting for the new regime or old regime? So basically now the new regime has become the default regime. So if you, whether whatever you are opting for it, I need to ask, boss, are you opting for the old one or can I go ahead with the new one? So regarding that, I should take all the details about the intended tax regime and I'll intimate the deductor also. But anyway, if nothing, no information is given, it is assumed that 115 BAC will be the default regime, sir. So no need, if nothing is given, then 115 BAC will be the default regime. But if you want to opt for the old regime, you should collect all the necessary documentation.
Yes.
There ends.
Yes, guys. So with this, we
finished,
completed all the case studies.
Okay. Done. Finished.
So yes. So we completed this 10 case studies, and now what is the objective? The objective is simple. We wanted to just let you know as to how the question paper will be and how you need to approach and arrive at the answers. And you need to be, and you also know what are all the areas which have been tested. So as I already said, you are proficient already in direct tax, indirect tax, FR and AFM. But the balance time, whatever is left today, please spend the time on revision of an audit also. You are good. So revision of FR, like this law part, mainly
and
law
SCMP.
part.
Law, sir, correct.
Because SCMP also, the portion or the probability is just 10%, like 1 out of 10 cases only we can see SCMP. But law, definitely, law means not just the Companies Act, even the FCRA, insolvency and bankruptcy, FEMA, everything. So therefore, my advice is to just quickly go through the revision. Even SCMP also, if time permits, tomorrow morning, you do the revision and go. And beyond that, nothing is required because anyhow, you are taking the book to the exam hall. And don't spend too much time on referring the book. If you know the answer, please try to arrive at the answer from the options. Even if you know the answer, don't search for the book and waste the time. And if you really don't know the answer, you search for it. So that's my advice. Yes, sir. You can speak and you can wind up the session.
So very simple, guys. Those of you who have bought our classes, quickly take the summary book And also others, please take whatever revision material you want. And you already done these 10 case studies, and if you are already thorough with other areas, you can just browse through the other 20 case studies that we have done in the Google Drive classes and revise them from them. Those of them who have not taken the classes, please open the case study material and solve a few questions. If you are not at all okay with law, whatever Tharun sir told is very, very important. More than for 30-40% law comes. I'm not even kidding. You see all the case studies, so many law questions are coming. So please solve that. In my channel, you can see that FMR revision and some marathon revision for law also I have put. Whichever concepts you are not clear, you go there, no problem. Or whichever faculty you are comfortable with, you can go ahead. So these would be my tips, and Chinmaya sir to do the closing honors, and we'll wind up so that students can study now. And so Chinmaya sir also now it's already 3 o'clock. Just tell them the plan, what they should do remaining with what break and how they should finish it off, and let's wind it up.
Yeah, sure. I think among all the faculties I know, only the person who can pass IBS is Punarvas sir, I think. No, we can only pass, even pass percentage also is very minimal. With confidence only can be him. Which means to say that if you are, comfortable with his subject, you definitely have much higher chance of doing well in IBS paper. Only one thing I will sincerely request each and every one of you, along with the books, calculator, pen, hall ticket, carry a trust among yourself.
Correct.
The effort you have put in by doing articleship, by doing all other papers with us or with anybody else, you have gained enough knowledge. If you lose the confidence and you're under pressure in exam, even the answer, there is a chance that you may not be able to do it. So my sincere request to all of you in the examination hall, carry trust and confidence on yourself. You are the best and you are going to answer it. You have that confidence, you will be able to do better. So as far as examination time is concerned, as we told, initial 15 minutes, use it for prioritization to understand which question you know first, solve that, and next best and so on. While solving the remaining questions, read the requirement and then go to facts of the question. As far as the preparation for whatever remaining time is concerned, if you're watching now, don't try to put too much of pressure in the last moment. If you have something, you can just glance it, but don't try to cover too much in the end. You will not be able to cover it. Again, you will be putting under yourself more pressure. I would say, try to spend enough time on sleeping and eat well, drink water, know that your examination center is in correct place, have the hall ticket place. Try to make sure that other aspects are taken care. Among the subjects revision, if you want to have, whatever the summary notes, you just try to glance it. Don't read any new things. So just to summarize, we are at 3:05 now. Now you can take maybe half an hour break or 20-minute break. Then start reading the subjects which you have known the best. Focus on those subjects. Maybe TFR, maybe law, maybe audit, maybe tax. Read till evening 7 o'clock, 9 o'clock, 10 o'clock, and make sure you have sufficient sleep. Don't compromise. That play a very important role. If you're shortage on sleep, your examination efficiency comes down. Sleep well. You get up in the morning. Whatever remaining subject you want to cover it. Go to examination hall. Only point is, do not worry about the results. Do not think, what if new case study comes? Only focus on one thing. I have done these case studies. If this case study comes, I will be able to face it. Confidence is not knowing all the answers. It is being prepared to face any questions. So let any question comes, focus only on what you know and don't worry about the results. So I think with that we can close.
And special thanks to Tharun sir for initiating this because it was his idea, wonderful idea. We never thought about it. So thank you, sir. And Chinmaya sir for his efforts in summarizing. That's the power of a rank holder, they know how to summarize. So he said, let's do this sort of an Excel sheet, which will really help.
Thank you, sir.
So
thanks
thank
for
you,
that.
Chinmaya sir. And
actually, it's a synergy effect.
Definitely,
synergy
sir. Definitely. No, but then I'm talking about that idea, which was really important. And of course, it's a synergy effect. And
no, sir. What I'm telling, the entire thing, I initiated, Chinmay sir
Definitely.
have added, and
Definitely.
Punarvas sir has executed.
Definitely. So it's
So,
all
like,
good, sir. It's all good. Very good. So
Yeah, no, it's all taken from our side. Now it is a job of our
you
students.
guys,
Correct.
yes,
It
yes.
is,
All
yeah.
the
Yes.
very best, guys. We love you all. Take care. Don't take tension. And I'm sure you guys are gonna rock it. So thank you,
Yes.
sirs, for your time, and thank you, everybody. Bye. Take care.
Bye,
Take some
take
rest
care.
now, and start studying. Start revising.
Yes.
Take care,
Yes.
guys. Bye. Bye.
Take
I'm
care.
stopping the
Bye-bye.
stream
Bye-bye.
right now. Thank you.